I am now the controversial Joe Lonzio for calling this out, but we all need to call it out because it's broken.
Well, let me ask you a separate question.
What is it? Is it?
It's social justice fundamentalism. It's maybe wokeness. There's all sorts of words for it. It's a Marxist adjacent new religion. It's seeing the world through oppressor-oppressed frameworks. But it's this new way of approaching the world that is frankly broken and frankly comes from like a bad set of philosophies that have been imposed on us.
Let me ask you a separate question. So many of the protests that we're seeing around the country have to do with the approach that Israel has taken, if you will, in Gaza. And the question is, if you believe that there is a way there's a way to think about this with is there any distinction, maybe is the better way to say it, between having a protest about the approach that Israel is taking, meaning from a policy perspective, versus the question of whether there is ultimately anti-Semitism underneath that feeling?
For sure. So I think good people can argue and disagree about Israeli policy, and that's a very fair thing. The problem with these protests is a few things. First of all, you get a lot of anti-U.S. sentiment, you get a lot of pro-violent sentiment, and second of all, it goes back to the core of this broken religion, is you're not allowed to discuss and debate things. There's no such thing as getting together with humility and having a conversation and saying, I agree with this, I disagree with this, we're having a reasonable come together. No, you are on the oppressor side, you are evil, and there's no questions asked. And that's the framework.
Let me ask you a separate question, because you've invested in a lot of defense companies. And we showed some tape from an interview I did with General Milley last week. One of the things that he talked about, and also Eric Schmidt talked about, was the idea that the future of war is actually going to be a lot more lethal than it has been in the past, in large part because it's going to happen in very dense cities. And Gaza may be a dress rehearsal for what that looks like, and that both morality of that, but more importantly, the politics of that are going to become more and more complicated, especially since everyone has an iPhone and is going to be able to take video of this. And so the ability to, quote unquote, either defend yourself or, some people think that the only good defense is offense. Well, but the politics of offense may become more complicated.
That's totally true, Andrew. You saw the UN revise down by half their guesses about how many civilians died. It's still too many civilians. I think it's less civilians than almost any other armed conflict in an urban area. So I think they are doing a great job. But guess what? It's still too many civilians, and it's still horrible. And it is a very, very tough thing. War is a terrible thing. And it's
Do you think that technology, and this, by the way, we debated this last week, we were in Washington, do you think technology is actually going to be able to change that part of it? Because I will say, the group was very mixed on that. It wasn't clear that somehow AI was going to change that.
I'd love it if just robots could fight each other and determine the outcome. We are working on some amazing defense technologies. You've seen Epirus's new videos where they could turn off the swarms of drones from far away with electronic shields, right? There's things like this right now we're doing that hopefully can protect people. But the best defense still is offense, and war is still going to be terrible. In the social media age, war is going to be even tougher. That's true.
You just got back from India, and there are a lot of tech folks that have been making, if I dare I say, a pilgrimage to India, I would say, in the past year or two, that seem to be very, very bullish on India. Folks have been bullish before. These pilgrimages have happened before over the last decade, and for whatever reason, it has not moved the needle the way I think the expectations were. Is this time different?
So, India has been an important player in tech for a long time, right? There's millions of programmers there from these top IT services companies that are a big part of what we're doing. What's changed for me in the last kind of 5 or 6 years, that we used to send our very well-defined, easier problems to India. Now we're sending our hard problems to India. So I have teams of hundreds of people, multiple companies, who are some of our most talented people. And what you're seeing, Andrew, if you have people solving our hardest problems here in the U.S., they're also going to be able to solve hard problems in their own companies. We're starting to write checks there. It's a very dynamic ecosystem. I'm very bullish on India.
So, Joe, the rot you talk about, do you point fingers at the left for this? Do you see Trump's rally? Do you think that politically that this is going to cause a shift in? Do we turned it one other time when Reagan. It was very similar. You were around, but after yeah, you're a kid. But I never thought things would turn around, and they did.
I'm on the Ronald Reagan Presidential Library. I admire some of what he did there. It's funny because I was talking about this in India last week because they're asking what's going on in the U.S. You guys are crazy, and actually some of them saw it as a form of neocolonialism, where like Microsoft, for example, tries to force you to use your pronouns, and then if someone criticizes it, they ban them from LinkedIn. And they're like, this is colonial values. You're trying to force this craziness on us. What are you guys doing? And no, I mean, I don't think it's that hard to stop. I think it requires the courage for a small number of us to speak up. You go to these colleges, you go to Columbia, which is a problem. It's maybe 10% of the people there are the fundamentalists.
Right.
So everyone else is afraid to speak up against them.
You need to stand up to the far ends of both sides.
Far ends
is
of
that-
both sides, but the far left is obviously where the nonsense is
That's
coming
what I
from the
mean.
most right
So,
now.
I mean, does that
But
mean you
don't-
go right, or does it
No,
mean you
it
just
doesn't- it
reject the
doesn't.
left?
This is the biggest problem that happens in society is when you have a crazy far left, then you get a crazy far right to oppose it. And this is what's happened in Nazi Germany. You had the crazy communists, and people had to vote for the far right to oppose them. You don't want a far right. You want a coherent, moderate response where you stand up and say why it's wrong. And that's what we need
I'm
from our
not
leaders.
seeing it from. I mean, at this point, it seems like the administration is held hostage by the left.
I'm on chains, on WhatsApp of hundreds of CEOs and founders, and they agree this is wrong. They've woken up. They agree it's bad. Our institutions are still captured.
You're watching a change, though, in business, where Google said,
Yeah.
okay, you can't protest here.
A lot of people reached out to me in business and said, thank you, Joe. You've been speaking about this for years. I didn't realize how bad it was. I totally agree with you now. What can I do? And they're still a little afraid.
But there are a lot of. But I was going to say that's the thing. Most CEOs, you run your own firm. It's a whole different operation. Alex Karp lives in his own universe, and I'm saying, there are people who are elevated to a special place, or that they are either the founders of their own company, or they're considered. I mean, Jamie Dimon can say what he wants to say, but most CEOs in America do not feel super comfortable saying what they want to say.
Most of them got there by being risk averse and not speaking up and not being controversial and climbing the ranks. That's right. So founders is very different than CEOs, but I think they are waking up to this. The problem is our big institutions are still totally captured by this. Our schools, our NGOs are totally captured by this. So we still have a lot of work ahead of us.
So if they're waking up to this, are they woke?
It's a better form of it.
Joe Lonsdale, nice to see you. Thank you for coming in.
Good to see you.
Good to see you.
All right, when we come back, Mercedes-Benz workers in Alabama will vote on UAW membership. We've got the details next. And then the CEOs of Warby Parker will join us to talk about the eyewear business and their hopes of opening more stores. Dave Gilboa and Neil Blumenthal will join us to talk all about this. Squawk Box will be right back.
Thousands of workers at 2 Mercedes plants in Alabama will begin to vote on whether to join the UAW. Phil LeBeau joins us on the Squawk Newsline with more. Phil, I'm going to take your word for it that it's really you.
It is me. It is not AI. It is not a robot. This is an important vote, Joe, because just a couple of weeks ago, you had the VW workers in Chattanooga, Tennessee, vote to join the UAW. That was the first plant south of the Mason-Dixon land for a foreign automaker where the workers said, we want to join the UAW. Here's what's going to happen in Alabama. You've got approximately 5,100 workers at 2 plants near Tuscaloosa who will be voting between today and Thursday. The significance of this is this the next domino, if you will, in the foreign automaker plants in the South that's going to fall? About 2/3 of the vehicles that are built at this plant for Mercedes are exported, but it's a big plant. Annual production of 295,000 vehicles. And if the UAW were able to organize this plant, this would be another significant step towards reversing the decline in membership. We've talked about this. We talked about it when they were going through the big 3 negotiations last year. Look at this chart. There's a steady decline, or has been a steady decline, in UAW membership going back a couple of decades now. And the question is, can they reverse this through these plants in the South? If they are successful at the Mercedes-Benz plants in Alabama, then take a look at Hyundai and Toyota, 2 plants where the UAW has said, look, we believe we can organize those plants. Those would be the next targets that we would see picked out by the UAW. So again, the vote starts today, goes through Thursday. We'll have the results on Friday.
Is the South, for example, Alabama, is it less likely they're pro-union, Phil, or what can you?
In the past, they have been, Joe, but if you are a line worker at the Mercedes plant in Alabama, even after getting a raise, which most of the foreign automakers did once the UAW contracts were approved, they saw the writing on the wall, so they gave their workers a raise. But still, if you're a worker and you're looking at the difference between what you're making and what they're making at a big 3 plant, you are saying, wait a second, why shouldn't I be paid what they're being paid? That has made a huge difference in the appeal of potentially joining the UAW.
Great. All right, Phil. Very good. Thank you. I think it was you. I recognize that voice anywhere. Thanks.
Okay, coming up, the CEOs of Warby Parker on the state of the consumer and the eyewear market, and later, former Boston Fed President Eric Rosengren is going to join us for a preview of this week's inflation data and where rates may be headed. Get your glasses on, folks. Warby Parker right after the break. Welcome back to Squawk Box. Warby Parker made its mark disrupting the eyewear industry with its online direct-to-consumer model. Now the company expanding its brick-and-mortar strategy, adding 41 new stores over the last year with more to come, and it is working, folks. Take a look at the stock. Joining us right now in an exclusive interview is Warby Parker co-founders and co-CEOs Neil Blumenthal and Dave Galboa. Good morning to both of you.
Good morning.
So here's the thing that's crazy to me. When we first met, now many moons ago, the whole idea was to do this online. It was supposed to be like the most capital light business ever. That was the whole concept. And now it appears that what's actually making this whole thing work, really work, is actually brick and mortar, like very old school. How do you, I mean, I think it's been directionally this way for a long time, but it clearly seems to have sort of accelerated recently.
Yeah, old-fashioned is the new fashion, so to speak. But when we launched in 2010, it was also a period before any of the social media networks had monetized. So it was very inexpensive to acquire customers online. Also, we would have expected online penetration of the category to actually expand faster than it has. And as you grow, right, you end up to take on more and more of the characteristics of the existing industry. So we found that the vast majority of folks in America want to go into a store, want to try on glasses, and buy them in person, and that's why we're opening so many stores. We're on a path to open over 900 stores. There's over 45,000 optical shops in the U.S., believe it or not.
What percentage of the business is now coming from brick and mortar versus online?
Yes, it's about 2/3 of our sales come from physical stores. We have around 250 stores in the U.S. and Canada. So 1/3 of our business is still online. It's still massively over-penetrated relative to the rest of the category. But we are seeing the majority of our growth coming from stores.
When do you think you realized this, and do you remember saying to yourself, did we make a mistake? The reason I ask is because the whole idea was this was going to be on the, everyone thought all sorts of products would be more available online. That's how people would do it. You've done things with that are cool with the app where you can see what the glasses look like. You can do your own eye test with the computer and everything else. Was there a moment where you're like, maybe it's actually a brick and mortar business and this whole idea of being online is not really how it's going to be?
We think one of the most powerful aspects of our model is the omni-channel ability for all of our customers to choose whether they get a new prescription, whether they shop for glasses, whether they buy contacts. They can choose any part of that journey to take place online and any part to take place in stores. And we're really the only retailer brand in our category that offers that choice for consumers.
How are you different than lens crafters then, if you're finding most of your customer acquisition is coming through the stores?
We find that people prefer experiencing sort of both digital and physical. So
Once they're a customer, then they tend to use more online?
Yeah, or they'll even start the journey online first and try on some glasses using our virtual try-on before coming into the store, so being prepared for that visit, having a really seamless journey, whether it's sort of booking your eye exam, and then us knowing a lot about you so we can tailor that in-store experience to you. Which we find, right, is radically different than what you see at some of our larger scale sort of competitors. We also found that this was incredibly helpful whenever there's sort of a disruption. So, right, during COVID, when all of the categories started to shut down, right, we were still able to serve customers.
I hope that doesn't happen again anytime soon.
I would love to.
Would you try to talk me out of contacts? I mean, do you just not like me?
No, they sell contacts.
I know you do, but you'll be fine with me if I come in and get a prescription and order contact.
We'll
you won't say
still
you're
love
not
you.
fashionable. I can't look like you guys. You won't try to talk me out of it, honestly.
We won't. We want to do what's best for you, and we see that in our sales retention rates. So we've had very consistent sales retention rates. Our customers spend over 100% with us within 4 years, and that's because we want to do what's best for our customers and patients. So you come in, you
what are
want
you seeing
contacts,
about the
great.
strength of the consumer in terms of which products are selling? Are they stepping down in terms of going from most of your lenses are still $95?
Yeah,
But once you put the lenses in, and you can, the prices go up and up and up. But have you seen sort of a shift in terms of what consumers are doing right now?
There's no question that many consumers are feeling stretched. We feel fortunate to sell products that people need to see, regardless of economic cycles. And the median household income of our customer base is over $100,000. And so we've seen, I think, more strength than some other retailers and brands. And we're seeing actually a very strong uptake around some of our highest price point products. So we recently introduced a lens called Precision Progressives, which is this really innovative lens that offers a wider field of view and better vision, and it's the highest price point product that we've ever introduced, but we're seeing a very strong uptake because we're still offering much better value relative to our competitors.
This is going to be may seem like a curveball. What do you make of the Meta Ray-Bans that have effectively cameras in them, tech in them? There was a period of time where, I don't think it was either rumored or you were doing it, you guys were focused on trying to figure out, whether you could become the next Google Glass.
Yeah, we think that wearables are interesting. That some of the existing products probably don't offer enough functionality that most people want to wear them all day, but that is going to change, and we think we have an important role to play there.
Well, how would you do that? Would you have to partner with somebody else? Are you guys working on anything like that? Do you think that we're still many, many, many years away from making this even work, so it's not even worth your time and money? What's the thought?
Yeah, it's going to be a while before, we have wearables that we're going to be wearing, 24/7. For sunglasses, you're taking those on and off for certain moments, but prescription glasses you're wearing all day. What is required from a weight perspective is vastly different, but we stay in close touch with, some of the folks spending a lot of money in investing in technologies here. We have, a very robust technology team, which differentiates us from others in our category. So you'll see us continue to sort of make decisions on what do customers actually want, what are they going to wear.
Okay, final question. Are you now too big for Luxottica to actually try to buy you? That was always, remember, that was always the question in the beginning, whether they would just try to take you, just take you, because why not? But now I wonder whether regulators would even allow that given your size and scale.
And so we're building our business in a way that we don't need to be acquired. We're really excited about the path ahead. We want Warby Parker to be one of the most impactful brands in the world 100 years from now, and we think we're well positioned on that journey.
And always glasses, because there was also a period of time where you guys were thinking of other stuff.
Yeah, we think sort of those brands that are most focused tend to win. So we want to help people see. Our mission is vision for all, and that's what we're focused on.
See, focus, glasses.
Lots of fun.
For all.
Neil and Dave, thank you.
Like it.
Appreciate it.
Thank you.
Thank you.
It's 8 a.m. Actually, it's past 8 a.m., but we know a lot more about all this stuff, and it's worth it, I think. We're on the East Coast. You're watching Squawk Box on CNBC. I'm Joe Kerner, along with Becky Quick and Andrew Ross Sorkin. And among today's top stories, OpenAI planning to announce updates to its flagship ChatGPT product. Today, CEO Sam Altman tweeted the new features feel like magic to him, but he also tempered expectations, saying OpenAI was not about to release ChatGPT 5 or an AI-powered search engine. Website building firm Squarespace announcing it will go private in a deal with private equity firm Permira. Stockholders would receive $44 a share in cash, and that makes it a $6.6 billion transaction just on an equity basis. And the Biden administration awarding $120 million to Polar Semiconductor to help build out a factory in Minnesota. This grant designed to help increase so-called power and sensor chips, which are used in things like cars, household appliances, and weapons systems.
All right, let's take a look at the futures this morning. Can't see them from here, but I think they're in the green.
Put some glasses on.
There we go. Dow futures up by about 75. NASDAQ futures up by 61. S&P futures up by 12. And the treasuries, if you take a look at that, you will see 10 years yielding 448 to 2 years at 484. Right now, for more on the markets, let's get over to our senior markets commentator, Mike Santoli. Hey, Mike.
Hey, Ben. Yeah, S&P 500 not far away from completing a round trip. Let's go back to where we were 6 weeks ago. Here's a one-year chart. 6 weeks ago, riding 5 straight up months, up 28% from the October lows, looking very stretched to the upside based on some technical and sentiment things. We cooled off, did what it had to do, 5% pullback. Earnings came through fine. We have a patient Fed. We'll see how the inflation data come out this week. But you see right here, we are about 0.5% from getting to that old high. Now, one thing I would keep in mind, and I think it's a little bit of a nagging thought that traders have, is what happened back here last summer. We did have a very similar rally to what we had before this pullback. You got the 5% down. We came back above the 50-day average, as we have right here, and then rolled over again. Why did we? Because we got some hot inflation numbers and bond yields went higher. So that, to me, is a swing factor when it comes to the inflation data. A little bit of a kind of a hodgepodge of leadership. Take a look at industrials versus consumer discretionary. You see they moved together for most of the last couple of years with occasional outperformance by industrials. What you have right now is industrials really racing ahead. Consumer discretionary not doing a whole lot. This isn't just Tesla. If you look at the equal-weighted version of consumer, it's also the case. So there is some kind of nagging doubt that the consumer can stay resilient embedded in the market. Maybe that sets us up for some relief along the way if, in fact, inflation, the yields can be more tame. But it's worth keeping an eye on how it's a little bit of a more defensive posture. Take a look at the volatility index, though. Not a lot of concern being registered here. Last week, one of the lowest volume, lowest volatility weeks we've had. It shows you in a bull market, no news is often good news because stocks were up. But we're back down around 13 or so. That's been around a floor, although we can bump around that floor for a while. What it does say, though, to hedge funds and systematic traders is low volatility means you can take more equity risk. That's why you've had a little bit of a bid in the market, Becky.
Okay, Mike, thanks a lot. Beginning of the week, you've got the CPI on Wednesday. What's the expectation for volatility around that?
We got PPI also before that, and that's the one that feeds into the Fed's inflation gauge. I think the expectation is it could be a clearing event. I'm starting to see a lot more chatter from the sell side saying, hey, maybe, in fact, we can resume disinflation or at least get a clue from that. We'll see if that has people leaning lower, and maybe you can get a rally in bonds. That was some of the arguments being thrown out there. If you want to treat that as a contrary indicator, that's up to everybody else.
Okay, Mike, we'll see you later. When we come back, Evercore's Roger Altman joins us for a wide-ranging market and economic conversation. Don't go anywhere. Squawk Box will be right back. Our next guest says that the markets seem to be enjoying a Goldilocks macro environment and that a soft landing for the economy is at hand. For more on the markets, the economy, and much more, we want to bring in Roger Altman. He's the founder and senior chairman of Evercore. And Roger, we're very near all-time highs. Do you think the market deserves these valuations?
I do, because we're seeing evidence of the economy starting to slow. You see the first quarter growth was down a bit. Job growth was down a bit. Quits, vacancies a little weaker. Average hourly earnings growth a little weaker. And that should pave the way for downticks on inflation and then allow the Fed a little later to finally turn to ease. I personally think there'll be a rate cut in September. I don't know if there'll be more than that this year, but I think the markets are responding to the positive, to the positivity of this slowing, the prospects for lower inflation, the prospects for monetary ease, and that's why both equities and the fixed income markets have rallied strongly.
I think the big question is how long that process takes for inflation to come down. Right. We're going to get other hints this week or other readings with PPI and CPI both out. If those numbers turn out to be hotter than expected, would you take your idea of a rate cut in September off the table?
Probably, because the Fed has to see proof that inflation is improving. And, you know, we have a CPI number this week. Market expects, I think, 3.6% annualized rate, a little better than the last print. But if that were to go the other way, I think markets would react quite negatively because they would see that the prospects for a rate cut are now more distant.
Let's talk a little bit about tariffs, because this is the news this morning. The idea that Biden's looking at raising tariffs, which we knew was coming, for things like EVs and solar panels. I didn't realize that medical items would be on that list too. And I didn't realize the number that's now being floated out there. Tariffs for EVs, something like 102%, which is significant. That's a fourfold increase from where we stand right now at 25%. That has to be symbolic to some extent, because even at 25%, you're not getting a lot of these cars into the market.
Well, I think what Biden is doing here, assuming that this rolls out as we expect, is trying to protect U.S. manufacturing, which he's obviously focused on reviving, and trying to protect the supply chain, especially as it relates to clean energy products. And also, China is falling back on an old, I would say, tired strategy, which is to heavily subsidize manufacturing, expand manufacturing production way beyond possible Chinese domestic consumption, and flood the United States and flood Europe with heavily subsidized exports. And when it comes to clean energy, where we need our own production, for example, solar panels, I think that's what Biden's trying to push back on.
And the reaction, you think, will be what? From the American manufacturers, from the markets?
Well, there's an ideological debate about tariffs. For example, Donald Trump wants to impose a 10% tariff on all imported goods. That's one of his cardinal approaches. And Trump was a tariff guy during his first term.
Yeah, he was.
So there's a big debate about, you know, how helpful are tariffs really? Because at the margin, they're inflationary. But we're in an era where we're trying to rebuild American manufacturing, and we're trying, for example, with semiconductors, to avoid the obvious Taiwan risk of being totally dependent on TSMC for advanced semiconductors. And you have to have steps like this if you really want to do that.
Roger, the first hot inflation number that we got in January or February, that was like an outlier, seasonal inventories, blah, blah, blah. Then we got another, Were you surprised by what we saw? Or have you had this sort of, I guess, dovish view on inflation all along? And has your view been shaken? I'm just wondering, I'd like to believe you that we're going to see, you know, cooler numbers for inflation, but that means that we've had like a series of outliers. And when does that become, when do you say, I was wrong, maybe inflation is headed back to 4%?
Well, first of all, I'm not certain, Joe. I mean, I could certainly be
Right,
wrong.
you said if we get a hot number on
I could certainly be
this week,
wrong.
yeah.
But let's step back a minute. This inflation was caused, at least in my view, entirely by the pandemic. I think there's a lot of evidence on that. And so it's taking
That's
a long...
that's open to discussion.
It
too.
is.
Yeah.
And we could debate that, but that's
Yeah.
my own view.
Right.
And it's taking a long time to work its way out of the system. Now we're down to mid threes or mid to high threes on CPI, a little below 3 on core PCE.
Yep.
And so we're heading in the right direction. I don't think there's much doubt that if the economy really does slow, like we just discussed,
That's also
inflation-
enough too.
Roger, you spent some
Atlanta
time,
Fed.
you spent some time in the White House last Wednesday, I
Yes.
believe, with the president,
Right,
along with a whole bunch of other CEOs.
right.
What was he telling you about what he thinks the economy is going to look like over the next year, and what were you guys telling him?
Well, the purpose of that meeting was really for Biden to hear from a series of CEOs as to what they're seeing.
Okay.
It was interesting that a couple of, and I'm not going to mention names, but a couple of really leading CEOs talked about their inability to get enough workers. And in big numbers, I mean, really big numbers. And I think that's really significant at a lot of levels. But
It doesn't suggest a slowing job market, though, or a slowing economy
inflation,
that would come with that.
well, I mean, the job market is hopefully is not going to slow dramatically, but we all saw the last month's number was lower, and I think it's probably going to get a little lower because it does correlate to growth. But look, in a lot of quadrants of the economy we have, or sectors, we have a labor shortage, and that's a real problem. Listen, Biden obviously is not doing as well in terms of voter attitudes toward the economy as he would like. There are a little less than 6 months to go. In my own view, whether he starts to do better on that measure will depend a lot on inflation, because I think what he's carrying around as a burden is the legacy of this inflation, which Americans really don't like.
What was the second piece of that? It sounded like you were starting to say they talked about jobs and something.
Well, most of the CEOs in that meeting are very positive on the economy. How could they not be? I mean, we have, as I said at the beginning, rather a Goldilocks scenario: growth steady, maybe slowing a bit, equities and fixed incomes markets at a very strong level, their own share prices right around all-time highs. How could they not be positive on the economy?
That's actually a good question. How could they not be positive on the economy? And yet, I think if you had a lot of them come around this table, they would somehow find a way to say that they're not happy with what's going on.
Well,
This came from a grocery store,
look, CEOs always want perfection. They should. During my two tours of duty in the Treasury, business leaders always wanted something different. They always wanted an improvement here or a change there. That's natural. But they can see, and are some of them unhappy about antitrust policy? Yes. Are some of them unhappy about, say, the climate reduction legislation and carbon reduction regulations? Yes. But they can see the condition of the economy, as we just discussed, and they can see their own share prices, and they know conditions are pretty good. But is business ever going to say, wow, things are awesome, thank you very much?
Did the
Of course, it's
president
not
do any
been
finger pointing?
Sorry?
You're
No.
greedy. That's just for public.
Well, I'm just answering your question.
No, I know, but he does that a lot. In fact, the inflation is greedy corporations and shrinkflation. This is your fault, and a lot of corporate. You see it constantly corporate, and he doesn't do that when he's got the CEOs right in front of him.
I'm not there every day, Joe. I don't know,
But he didn't. He didn't in your meeting.
No, he didn't.
Figures.
Roger, well, next time you're on, we'll have a longer discussion about other things that could be leading to inflation, like government spending. We talk every day about the CHIPS Act and what we're putting into that, and that could keep inflation higher for longer, too.
It could, and listen, U.S. fiscal policy is not on the right track. And in my view, it's a matter of time before there is a reckoning. Could be a long time, because as you guys know, markets often ignore something almost forever until they suddenly don't.
Right.
But it's not on the right track. Now, and there's going to have to be at some point, pact where spending is restrained and taxes are increased. At the moment, you would say that looks like 1,000 years from now. But then markets change,
So the
crises
market
happen,
demands it, right.
and changes finally result.
Right.
But is fiscal policy on the right track? No, it isn't.
Thank you for coming in today, Roger.
Pleasure. Thanks for having me.
Coming up, top Apple analyst Tony Sacconaghi is going to be joining us to talk about a number of the big headlines surrounding the tech giant, from AI integration to unionization efforts in Apple's retail division to OpenAI. You're watching Squawk Box, and this is CNBC.
U.S. Secretary of State Antony Blinken delivering some tough public criticism of Israel as that country tries to eliminate Hamas from Gaza following its October 7th terror attack. Blinken appeared on NBC's Meet the Press.
Is it fair to say that President Biden and Prime Minister Netanyahu are not seeing eye to eye right now?
There are two things. One is that, as the president said, and as we said in many conversations over the last couple of months, there has to be a credible plan for the civilians.
Have you seen a
We
credible
have to
plan?
make sure. We have not. Second, there's something else that's important. We also haven't seen a plan for what happens the day after this war in Gaza ends. Because right now, the trajectory that Israel is on is, even if it goes in and takes heavy action in Rafah, there will still be thousands of armed Hamas left.
And join us now to talk about the Israel-Hamas war, also its implications for the U.S. Corey Shaki, Director of Foreign and Defense Policy Studies at the American Enterprise Institute. It's good to see you. Corey, we talked about this last week, and we mentioned that in the near term, President Biden's decision on arms to Israel won't have an immediate effect, and it might never really have an effect. It may be part of a political calculus at this point, or do you think it actually is going to sort of curtail Israel's ability to do what it needs to do?
No, I think you're right that it's performative. The restrictions aren't significant operationally, but they are sufficient to enrage or make Israelis feel betrayed, given the breadth of President Biden's prior statements about support to Israel at this time. I also think it's significant enough to make American allies and security partners really nervous that there is no commitment from the United States that once political pressure begins to mount, a president won't walk back from. We saw that with assistance to Saudi Arabia and the UAE in their war against the Houthi, which we are now reaping the difficulties of internationally. We saw it in Afghanistan, and now we're seeing it in Israel. And we also saw it in Ukraine with the restrictions on range usage of US weapons. So I think it's not significant for Israel's campaign in Gaza, but it is significant both for the US-Israeli relationship and for concerns that American friends and allies are going to have about our staying power.
What is the difference? How do you parse what Israel is doing right now in Rafah? For example, the journal says Israel pushes farther into Rafah, but this is not a full-fledged. Israel has still not done what the Biden administration warned it not to do. They're pushing into Rafah, but not to the extent that it's an all-out end of, trying to actually end Hamas completely. That hasn't happened yet.
Well, I think, what the Israelis are trying to do is extraordinarily difficult, and nobody's good at urban warfare. It seems to me possible they're trying to be responsive to Biden administration concerns, but it's also possible that they're trying to figure out a very difficult military equation, and we're not being particularly helpful. For example, Secretary Blinken's comments about Israel has no plan for the post-war period. We're also not providing that vision for them, and that's what friends do.
Is this going to, and I don't like to use the term whack-a-mole, I don't know what else to say though. So they in northern Gaza, you're seeing militants coming back, reestablishing themselves. So what does did we really, is ISIS completely gone? Did we destroy ISIS completely? Can you destroy Hamas completely if it just reemerges, even if they go into Rafah full force?
I do think having set that as the objective of the operations is a very high standard, and you're right to question whether it's ever achievable. Israel's strategy has been described as mowing the grass, right? You see a problem, whack-a-mole is another way to say it, but it's very difficult unless you change the attitudes of the public that is providing support and protection, or even out of fear are not assisting in identifying Hamas operatives and Hamas soldiers in their midst.
And that is the key question, because the PR war very early on started being, and then you have the college, the universities and everything else. So I don't know how it goes. I don't know how it's not going to turn to the point where Israel loses support at this point. You can sort of see the writing on the wall, can't you?
Well, yes, because the administration isn't making the affirmative case for how difficult what Israel is trying to do is, how difficult it would be for any military to do what Israel is trying to do. They're not providing the protection to Israel to buy them time and international support. Right. And they're caving to domestic concern in the United States.
Corey Shockey, thank you. Defense Policy Studies at AEI. Thanks.
Coming up, a window into the health of the consumer. Steve Leisman will join us with some new data. Then we'll speak with former Boston Fed President Eric Rosengren as economists and investors gear up for this week's consumer and producer price numbers. Stay tuned, you're watching Squawk Box, and this is CNBC.
Com.
Welcome back, everybody. We've been watching credit delinquencies for months to try and pick up early signs of stress among consumers. Our senior economics reporter, Steve Leisman, joins us right now. He's got some new data on this front. Steve, what'd you learn?
Well, we have the April read from Equifax. We just got that data. It shows credit delinquencies on consumer credit, Becky, ticking up to their highest level since May 2020. Sounds like you should be worried. Hold on, but they remain below the pre-pandemic average, and they're well below 2009. The combination of low delinquencies on consumer real estate, also in student loans, it offsets higher auto and bank card delinquencies. All areas are up compared to a year ago. You can see that on the left side, but it's autos and bank cards that are above the pre-pandemic levels. Not much, but a bit. Mark Zandy says lower income households are under financial stress, but the worst is at hand. Delinquency is peaking as inflation has abated and real wages are rising and credit standards have tightened. That is, we don't have as many loose loans as we had in prior years. In fact, the data show that delinquency rates are highest from lending in 2022. But the 2023 class is experiencing fewer delinquency issues. Wells Fargo, they track delinquencies reported by the banks, and they are running about 20% above 2019 levels. With Amex best in class, you can see that, the -7 over there. Discovery delinquencies faring worse, but the rate of increase looks to have slowed. Donald Fandetti, I talked to him over the last week. He covers the consumer credit companies for Wells. He tells me the second derivative is turning. Delinquency pressures are easing. It's jobs that keep everything together, and we're just not seeing a lot of corporate layoffs. Therefore, not widespread delinquencies. Fandetti points to the declining year-over-year rate of delinquencies at Capital One and Citi. You can see those trending down there. That's evidence to him the cycle is peaking, and believes that there's maybe value in some of the names he covers because they're trading in anticipation of worse delinquent outcomes there. So as Fandetti suggests, all bets are off if unemployment rises sharply and unexpectedly. The cycle could have further to go. Fed rate decisions are going to matter a lot, especially to low-income debtors, raising the question if the Fed will initiate rate cuts before there really is a widespread credit problem. Becky, I guess the Fed can have a credit problem if it wants one, or it can make a change and maybe avoid one.
I mean, that's really weird. You would think that they would wait until they see it in the data before they actually act on such things, not anticipating problems like that could come. Steve, it matches some data that we looked at earlier this morning that just showed houses, mortgages that are underwater, rising, but still well below the pandemic levels, and the same story there. The real estate expert we spoke with said it's okay unless you deal with an unemployment situation that rises. Then you've got a much bigger problem.
Exactly.
If people are out of jobs and can't pay for these things. I mean, it doesn't seem like it would be at panic levels yet when it's still well below what it was in 2019.
Well, there's two metrics, and I hope viewers walk away, smarter from this segment, because you'll have reporters breathlessly coming on and saying, you know what, delinquencies are rising. Yes, they're rising, but they're not rising above yet overall the 2019 levels, with some problem areas in auto, some problem areas in bank cards. So it's not a 2009 cycle. We are still well below that. So there's two things, relative to the pre-pandemic, but also relative to what the banks are expecting. The banks are getting better results than they had previously expected. So therefore, there's not going to be a problem inside the financial system when it comes to here. Plus, they tightened up credit in 2023, so they're not going to have the bad results they had in 2022. And the question becomes whether or not the consumers are the ones who feel it through higher credit cards, or do they get some relief from the Fed?
Okay, thanks, Steve.
Pleasure.
Okay, for more on the Fed's inflation fight and rate path and ahead for the new inflation data we're going to get this week, I want to bring in former Boston Fed President Eric Rosengren. I don't know if you had an opportunity to hear all the things that Steve was talking about, but I don't know if you want to comment on that first.
So I agree with what Steve was saying, that by and large, as long as the unemployment rate doesn't rise, you don't have a really significant problem. But I would highlight for lower income individuals, many of whom have bought newer used cars at relatively high rates, there is stress on those individuals. And so credit card delinquencies and auto delinquencies are two of the larger bills that a lot of low income households have to pay. So frequently it takes an unemployment increase to have significant problems. But nonetheless, it is a sign that even at 3.9% unemployment, we're starting to see delinquencies for lower income quartiles.
When you think about changing the path, well, let's start with this. What is your expectation for the rest of the year at this point in the ballgame?
For inflation?
Yeah. Inflation, also, Fed cuts or Fed hikes even.
Starting with inflation, so I think the general trend is down. What's a little bit uncertain is how quickly that trend will be reestablished. So one of the concerns that we've had over the last 3 months has been that both the CPI and the PCE core levels have been leveling off. So in order to get the Fed to actually ease this year, we need to see that trend going down. So the Fed tends to focus on core PCE. That's at 2.8%. I do expect by the end of the year that it's likely to be closer to 2.5%. But when that trend starts reestablishing itself and starting to go down, and when we're talking about tenths of a percent, small changes in various components can mean that it's delayed before that trend is reestablished. So I am expecting that trend to reestablish a slow decline in inflation, first towards 2.5% this year and towards 2% next year. That would be consistent with 1 to 2 25 basis point easings, depending on when there's enough data that the trend towards lower inflation shows up.
Do you think, we talked to Roger Altman, who was just here earlier, and he talked about potentially easing in September. We always say that it gets complicated near an election. Do you think it gets complicated near an election, knowing what you know?
I think that there's uncertainty around any election, and that's true about this election. It looks like it's going to be a close election, and they're going to be following presumably pretty different economic policies. So uncertainty is not particularly good for the economy. People delay decisions until they have more certainty about what the election outcome is going to be. So it wouldn't surprise me if we see some slowing in the second half of the year. To the extent that we have slowing and the inflation trends down, I think the Fed at that point would think it was appropriate to lower interest rates.
So that's interesting, though. If we sort of take at face value that right ahead of an election things slow down generally, is that considered when the Fed thinks about this, saying to themselves, well, actually, maybe things are going to pick up in a couple of months, 2 or 3 months, and so there's actually nothing we need to do artificially?
So if the election's not close, there's not much of an impact of an election on economic data. If the election's close and and the two candidates, or three candidates in this case potentially, are following very different policies, that uncertainty actually could slow down the economy a bit as we get into the second half of the year, as people wait to see what the outcome of the election's going to be. So it doesn't occur around all elections, it occurs around close elections where the policies are likely to be quite different.
Are you surprised at just the strength of the job market thus far? We were also talking to Roger Altman. He was saying he was at the White House last week, and one of the things that came up in the conversation with President Biden by so many of the CEOs was this idea that they can't find enough people.
Yeah, the U.S. economy has been very resilient. I think that actually the fiscal policy actions of this administration are part of the reason. So normally at this point in the cycle, we would have expected, for example, construction jobs to slow down. And that's because both interest rates are high and commercial real estate is troubled. The reason we haven't actually seen that is because for many of these construction jobs, they've been helped by the fiscal policies. So the CHIP Acts mean that there's been a lot of manufacturing construction as we're building new chip factories around the country, in part to bring some of those activities from abroad into the United States. There have been actions for green energy. That has meant that there's been more spending on those kinds of projects, and highway projects have been way up, in part because of the infrastructure bill. So some of the fiscal policies are direct government transfers, but many of the government policies work through the private sector, and that's what we're seeing in some of the construction data. So I think one reason we haven't seen it in construction is that the fiscal policies have been promoting a fair amount of construction, and that's likely to continue through this year.
Eric, I want to thank you for joining us this morning. It's great to see you.
Good to see you as well. Thank you.
When we come back, we're going to ask this question. Is Apple ready to beef up its artificial intelligence game? We're going to find out right after the break. Top analyst Tony Sacconaghi is going to join us. But first, a reminder as we head to that break tomorrow at 8 a.m. Eastern Time, we've got a rare and exclusive interview coming up with Boaz Weinstein, the founder and chief investment officer of Saba Capital Management. He's got a big campaign against this name, BlackRock. It's going to be a fascinating discussion. Don't go anywhere. Squawk Box returns after this.
couldn't give up.
News on tech giant Apple. Bloomberg reporting the company is nearing a deal to put ChatGPT features from OpenAI on its next mobile operating system. Apple expected to showcase new AI capabilities at an event next month. Separately, two labor-related stories. The first, workers at a Maryland Apple store voting to authorize a strike. Second, Bloomberg says that employees at the Short Hills Mall, which is a New Jersey area, at that Apple store voted against unionizing. Joining us now on all these headlines, Tony Sacconaghi, Bernstein senior research analyst. You positive on the stock right now, Tony?
Good morning, Joe. Yes, we are positive on the stock. We upgraded our rating a couple of weeks ago, and we think risk reward on the name is attractive at current levels.
Are there labor issues? Are these de minimis to what we're talking about, and the other stuff we're going to now touch on is much more important, or is this something to watch?
I think labor is relatively de minimis. If this is something happening at the retail level, retail stores for Apple account for less than 10% of its sales on a global basis, and certainly less than that in the U.S. So clearly there could be some incremental costs associated if there was organized union activity over time, but it's not material in the grand scheme of things for Apple.
Tell me about Apple and AI. It almost reminds me of musical chairs. Who are the frenemies? How's it all going to play out? What do you think the strategy eventually will be, or can anyone know at this point?
Well, I think the important thing to recognize about Apple is it doesn't have to do this itself. There's been sort of this criticism by investors that Apple is not spending enough on AI or it's behind in AI. And I think it's really important to know that there may be some elements of AI that Apple will undertake itself, and there will be some elements of AI that Apple will look to partner with. And I think we can see that today with Apple in the sense that it derives a significant portion of its profits, probably 25% or more of its profits, from providing access to search for Google, and Google being the default search engine, and from its App Store. In both cases, other companies, Google is doing the search and creating the search engine. In the App Store, it's the millions of app developers who are putting their blood, sweat, and tears in. And Apple collects effectively a toll for access to its customer base. It's incredibly lucrative. And the same thing could happen in AI.
Tony, so that's the question. Do you imagine that when we hear about a deal, if there is one struck between OpenAI and Apple, that OpenAI is paying Apple as opposed to Apple paying them?
Yeah, Andrew, it's a great question. I think it could be dynamic over time because AI models today are just starting to figure out how to monetize, much like search initially was looking for ways to monetize itself. And over time, certainly, if Apple is providing access to 1.2 billion iPhone users as a default or as a partner with someone, and they are making significant money, they will be paying Apple some kind of revenue share. Initially, that may not be the case.
Do you imagine that OpenAI, which currently runs on Azure, that effectively this deal, if there is a deal to be done, that OpenAI's technology will run literally physically on device? I don't think it really can run on device. If it doesn't run on device, is it going to run on an Apple server somewhere? Is it going to run on a Microsoft server somewhere, in which case Microsoft is going to be collecting revenue somehow?
So we don't know the specifics. I think we do know in all likelihood if there's a partnership, a lot of that search will be running off device. And so we'll have to go through data centers, whether that's through a Microsoft data center. It's certainly plausible that could be the case going forward. So yes, that is a possibility.
And then how do you, I think one of the things we're all trying to figure out is if there's a deal with OpenAI, does that mean that there's not a deal with Google and Google's Gemini or somebody else as well? Or do you think there's going to be this mix and match?
I don't think that's necessarily the case. I think, certainly what we believe Apple has been working on in part is improving the front end to Siri. So Siri is the access point to OpenAI engines. Apple is intensifying its efforts to make Siri more intelligent. So Siri could say, hey, this kind of query is going to go to OpenAI. This kind of query will go to a voice to image or voice to video generative AI LLM going forward. And so certainly there could be a front end in place that decides where a user query should go to, which AI engine or LLM going forward. So it's certainly plausible that Apple could have deals with more than one partner.
But the weak hands, you think it's back in a good position? I'm not calling Warren Buffett weak, but there has been a change in, I guess, the type of shareholder, long-term, near-term. You think that anything that needed to be done to wring out some of the complacency is done and it's onward and upward here with Apple?
Look, Apple stock has underperformed year to date, and I think part of it has been there's been a weak cycle. So part of this is part of the attractiveness of Apple is that it's trading below its 3 and 5 year averages, and so that provides a more attractive entry point. Our belief is Apple is a really powerful consumer franchise, and now you have a more attractive price to buy it at. I think AI could certainly be a catalyst for the name over the next 3 or 4 months in the introduction of the iPhone 16. But a lot of this is we have a really good company. It's underperformed year to date, and so investors have an opportunity to buy it at a lower price.
Yeah, you might. I don't know. If you see 165 again, that might be a good place, or maybe even here. Who knows? Anyway, Tony, thank you.
Thanks for having me, Jeff.
Okay, you're welcome.
Okay, coming up, the risky move among retail investors. We're going to tell you about the trade some are making as seasonal bearishness moves into the rearview mirror. Stay tuned. You're watching Squawk, and this is CNBC.
Will.com.
Individual investors appear to be ramping up risk in their portfolios. Kate Rooney is here. She's got more on that front. Hi, Kate.
Hi, Becky. Good morning. So that risk and risk appetite is showing up in a couple places. The big one is the options market, especially if you look at the most volatile corner of that, ultra short maturities, once really reserved for professional traders. 0 days to expire options have climbed in popularity among average everyday investors. These are one-day bets on the direction of the market, which of course can offer outsized returns, but also outsized risk. Last week, retail activity in 0 DTE options, as they're also known, saw the biggest weekly sales since the beginning of the year. That's according to JP Morgan. They're making up a larger slice of overall options trades, and according to Spot Gamma, 0 DTE, those are now around 50% of total S&P options. Single stock short-dated options are about a third of all total volume. Meanwhile, there has been a lot less buying of some of the safer proxies for cash out there. Vanda Research points out slowing inflows into money market funds, which had seen a surge of inflows as rates started to rise. And Vanda says all of this new risk appetite is a function of chasing some of the rising risk asset prices and then tax season ending. They say tax-related peak retail bearishness is in the rearview mirror, and note that retail has been, quote, rotating more aggressively into single stocks. JP Morgan also points out that retail was the most bearish on some of the Mag 7 names last week, and then within that group, they were selling Nvidia and buying Apple. They were also overwhelmingly selling semis and then media and entertainment stocks. So think of Netflix, Paramount, for example, partially offset though by some dip buying in Tesla plus energy and food stocks, guys.
So riskier types of bets, some people might actually call it gambling. And then while we're on it, we've been watching this morning shares of GameStop, which I think are up more than 40% this morning. They were up 20% when we started talking about this, 27%, now 40%, simply because Keith Gill, who's better known as Roaring Kitty, the trader who was so involved with driving those meme stocks up earlier, posted on Twitter for the first time in 3 years, and it was something that some people are saying, oh, he's sitting up and paying attention more closely. They thought maybe the GameStop shares. What's going on?
It is sort of like the Ryan Cohen dynamic, where he tweeted out, a picture, this sort of vague picture of an ice cream cone. People went and tried to trade on it. So you do see, we haven't heard from, as you said, in 3 years. So it is sort of this momentum. One of the dynamics in GameStop after that whole episode in 2021 is there's almost no short interest. People do not want to get caught shorting GameStop. You saw what happened to Melvin Capital. So you have sort of this long-only dynamic, very thinly traded. And if you look at it, it's around 17 bucks, but the height was 120 bucks per share. So 40% rally is massive on a daily basis, but nowhere near the height of 2021, guys.
Yeah, it just makes me feel like there are definitely people who are still looking at this as kind of Las Vegas with some of the trades, Kate.
Yeah.
Anyway, Kate, thank you very much. It's good to see you this morning. Folks, that does it for us today. We will be right back with you tomorrow, so make sure you join us then. Right now, it's time for Squawk on the Street.
Good Monday morning. Welcome to Squawk on the Street. I'm Carl Quintanilla with Jim Cramer, David Faber at Post 9 of the New York Stock Exchange. Pre-market steady as we brace for a week that has something for everyone. Inflation data, CPI Wednesday, retail earnings, Google I/O conference. S&P is less than 1% from a record high. That's where our roadmap begins. Stocks look to build on this rally. Dow's coming off the best week of the year. And as we said, S&P awfully close to some fresh records.
Plus, the AI arms race continues as a new report reveals British chipmaker ARM Holdings is planning on launching AI chips next year. And remember this name? GameStop. Its shares are surging in the pre-market after famed meme stock trader Roaring Kitty posted online for the first time in roughly 3 years. Busy day, I guess, huh?
That's
not fair.
Let's begin with the market setup. As we said, Dow's riding an 8-day win streak. Jim, story in the Journal today. Investors crowd into soft landing trade ahead of crucial inflation data.
Well, okay, that makes it sound like if the data's bad, they'll crowd out. I've been watching the stocks that have been going up. Dave Costa with a very good piece today about it's not the ones that are unprofitable that are going up, they're actually going down. What's going up are the profitable companies, and I think that we keep seeing that. But David, I do think that if GameStop is the leader today, that would signify perhaps a speculative peak. And I didn't know that we were in a speculative hike.
Yeah, I'm not sure that we should draw too many conclusions from what may happen at GameStop. Though it's kind of interesting and fun to look back at an old name that we talked a great deal about a number of years back.
Well, I went to the pin. When you go to Twitter, you get the pin piece, and it had the old piece there about 100% short. And so when I'm listening, I'm saying, "Wow, this sounds like a great situation." Then I realized it was what got it going the first time.
It's amazing that he can come roaring back like that.
Well, David, if you post a picture of, let's say, a couple of Lazy Boy recliners,
I know,
and Paramount, that thing goes to 22.
Oh boy, Paramount, yeah, that's its own saga,
isn't it?
Yeah, it is. It is.
There it is. Look at that.
Diamond hands.
Is that buy to strong buy?
I don't know.
I think that's what takes it higher.
US one list.
Then I'm looking at all this research, and they all probably say we're spending millions on this. All we have to do is put a chair up.
Meantime, Jim, there is a bit of a nice game over the weekend looking at CPI coming our way midweek. Stiefel, next 500 points are down.
You know, I have that note in front of me, and mid-quarter correction, too many. They talk about sustained PCE inflation, the Fed seeks, they call it a pipe dream. A pipe dream. And meantime, I go over, David, sections of the economy after sections of the economy, and everything's down a little bit.
Mm-hmm.
And that does not say to me pipe dream.
Right.
It just says to me, steady as she goes. Pipe dream implies that it's never going to happen.
Yeah, that it's unlikely, highly unlikely.
I think that's a pipe dream. That's a pipe dream, that piece. I'm pipe dreaming that pipe dream piece.
We have been talking for weeks now about brown shoots, about signs in the economy of a weakening consumer in particular, mid to lower end, but even some signs above that.
Right.
Not as much in experiences, we've talked about it so often, but reflected in any number of earnings that we saw, although again, not all across the board, Jim.
Right.
And so I don't know what we get this week that sort of can help confirm or deny.
I was doing a piece for the investment club, and one of the things I saw that was daunting. I was looking at AutoNation and CarMax, then of course reading about the home builders. There's not enough used cars out there, and there are not enough used homes out there. It's kind of interesting, isn't it, that we all lack used. And this again is just so COVID that we lack used. I mean, there's always had a lot of used cars around. There always was a used home component, and they're just gone.
A used home being an existing home.
Well,
same thing. I know you're using the word.
Just trying to be
just making sure people know.
Trying to be a little more cinematic.
I like that. No, I like that. Yeah, nobody's selling their used homes right now. They're just living in them.
Exactly.
They're using them.
Someone approached me on my second time on my 2006 Lexus wagon and made an offer for me. Second time. I mean, I'm not a car dealer.
I mean,
I
this
actually
is just out of the blue?
Yeah, I kind
You're
of
just driving the car and somebody says, "I'd like to buy that from you."
Yeah.
Oh, that's fascinating.
This is a big part of Ed Yardeni's note this morning, where he's looking
my
at
car.
He's looking at boomers having been done paying college tuition,
right?
Being almost in many cases done paying their mortgage loans, with 40% of homes now mortgage free, and he says they're going to spend the rest on themselves. And he points out many are buying large ticket items like light trucks in cash.
Really?
Yeah.
Well, that should reflect on Ford's stock, which happens to be, you ever go to a hardware store?
A hardware store. Yes, I
have.
You ever buy
epoxy?
Epoxy, yes. I don't
Ford
believe
stock's
so.
epoxied to 12, and I keep trying to.
It just
can't
stuck.
move it.
It's stuck.
Yeah, well, it's epoxied. I mean, it's not Elmer.
Right, somebody just stuck it there.
Yeah, it's got epoxy. Maybe it's built for, maybe it's chairman.
So it doesn't matter of how many baby boomers buy light trucks?
How many baby boomers does it take to get an epoxy Ford off of 12?
I don't know. You already own one of those trucks. You're a boomer. What do you own?
I have a Maverick.
Yeah.
And I enjoy it greatly. And you're not going to be able to get that from me.
No? If I made you an offer?
I have like 7,000 miles on it.
Oh, really? That's it? So nobody's coming up to you and asking you to buy that one?
How about McDonald's Wire Piece Friday on a $5 meal? That gets your interest going in terms of disinflation?
This is where I was going, but we don't know, although the company does kind of indicate that somebody got ahead of the story, but this is what I'm waiting for. I'm waiting for the people and companies that raise prices too much to own it by rolling back. And that would be the beginning of the major rollbacks, because McDonald's burgers have gone up hugely in price since 2019. So this would show that McDonald's is absolutely in sympathy and is what I'm now calling an inflation fighter. I'm looking for those who are inflation fighters and inflation lovers. Are you a lover or are you a fighter? McDonald's is a fighter.
I would be curious to who the lovers are. You got me in mind?
Oh, yeah. Why don't you just wait a second, partner?
Oh, you're not going to do it again, are you?
I don't know what he's talking about. I love Dutch Bros.
Dutch Brothers.
The Dutch Bro.
Yes.
Dutch Brothers is just, I had them on. I got to, they had 10% comps. I mean, 10% for a coffee company? That's extraordinary. And a lot of it was their new Annihilator with protein added.
Do we know ticket versus traffic?
Yeah, what is their average?
It was about, it was a little bit more weighted toward ticket, but they had a lot of traffic, and they're expanding nationwide. They think there's room for 4,000. They've got about, I don't know, 500.
How
a little
could
more
there be
than that.
room for more coffee outlets?
Well, that's you know, David, that's a great question, and I think the answer is that the ones that are existing happen to have a lot of lines.
Because of too much mobile ordering?
Absolutely.
A lot of lines, yeah, I know.
Well,
so nobody goes there anymore. It's too crowded.
Well,
I mean, what?
okay, Yogi.
Yogi?
He's really yogiing me.
I yogied
guess
you.
Yeah, I don't know if you caught that Nick's pastry. Oh, then you got the walk off. You got the walk off. Okay, so let's just go over this. Dutch Bros has been cutting. They have a low price offering, and that's what matters. They come in under some of the big guys.
They do.
They come in under. But there's a block that's for sale here that's crushing me. 13 million share block. I don't know what that is. I don't believe that. 13 million shares. That's not possible. Since that's like the whole stock float. Anyway, Carl, that's where I am on this.
Let's talk some chips this morning as well. A new report out of Nikkei says that SoftBank Group's ARM Holdings looking to launch AI chips in 2025. Of course, we talked to Renee Haas last week about the company's latest results and artificial intelligence.
I believe that AI is absolutely not a hype cycle. I think AI is going to be able to unleash capabilities and innovations that we've never seen before. One of the areas I'm most excited about, frankly, is around health research, biomedical. When you think about what it takes to simulate a drug or a protein, how difficult that is today, advanced solutions going forward will enable that. ARM will be right at the heart of it.
Meantime, Jim, we are going to get Google's I.O. A lot of discussion about Apple's reported deal with ChatGPT on the phone.
Jeez. I know, and I read Dan Ives' comments from Web, she's calling it a golden goose. While Apple has been in discussions with Google AI partners for Gemini, the golden goose for Cook and Cupertino would be exclusive OpenAI and ChatGPT. So if he's calling it golden goose, I can't get in the way of a man who wears a pink jacket. You know?
I do. You do. I do. Are we done talking about ARM and their plans for a new AI chip? Did we just move on past that?
So let's be careful, because I know there's been reports that the AI chip is up against NVIDIA, and I don't believe that...
It'd be different, right?
Well, they're partners with NVIDIA.
Yeah, I know. It'd be...
Well, I mean, but then again, Cisco reports this week, they're partners with NVIDIA. David, I look around, you're the only person that's not partnered with NVIDIA. How do you deal with that? What are you doing that you're not partners?
I do go home every night and I'm like, what are we doing wrong here that we haven't got that partnership with NVIDIA yet?
Would be a great headline, though.
Family, what are we thinking?
Faber is partnered with NVIDIA.
Yes.
Sources say.
Yeah, I think we do
I like
it. And just, what exactly are you What are you?
Well, we're going to design something.
Don't get more specific.
Yeah,
that would just lead, that would
just
end the
design
speculation.
something. It's designing something. And we're going to send it off to a contract manufacturer once we've designed it, whatever it is.
Well, here's what you want to do. You want to say that you are partnered with Recursion Pharmaceuticals, because if you listen to what we just heard, from Renee,
yes,
he talked about healthcare. Now, the company that's most linked with healthcare, other than you, is a $50 million stake that NVIDIA put with a company called Recursion Pharmaceutical. That's RXRX, because that's a Jensen name. I mean, in other words, Jensen really apparently had a great meeting with them, put money with them, and you can see that they've put together, got a deal with NVIDIA. So, David, you want to crash that.
Okay. I got a lot of things on my to-do list suddenly, Carl.
Meantime, guys, Jeffrey's Gym resumes NVIDIA. They were at 780. They go to 1200. HSBC goes from 1050 to 1350.
Right. I thought Melius's piece, Ben Richards, was the best, because because he's talking about May 22nd, which is when they report.
Yes.
Will be good.
Big
a lot
day.
of that is the H200 and the kind of defenestrated Chinese thing that they send over there, doing well. But look, we're worried. He's worried about August. Worried about November. But he says stay in touch with Dell. Now, Michael Dell has been this single member. Michael Dell was in the front row at the GTC conference. David, the front row. It was kind of like Ed Sullivan. You stand
Dell
up.
is-
Remember how I used to put people in the front row?
Yeah, he's key.
It was a really big show.
He's
that
key
Dell
to
put
this
on.
market, Michael Dell.
Yes.
Yeah.
And to his partnership.
Defenestrate means throwing somebody out a window.
I love that. I just wanted to use the word.
When we come back, the Biden administration planning to increase the pressure on Chinese EV makers, a story that got leaked last week. We'll talk more about that. Got some calls today on names like Walmart on our way Thursday, Penn, the airlines, with futures taking another crack at all-time highs. Don't go anywhere.
What?
Welcome back to Squawk on the Street. The Biden administration preparing to raise tariffs on Chinese EVs, set to roughly quadruple within the next coming days. We'll look for that official announcement, Jim. Meantime, stories about Ford cutting orders from battery suppliers. Right. There's a piece of the information about Tesla and whether the Model 2 was really ready to go into pilot.
Yeah, that's scrapped according to the information. Ford losing more than $100,000 per car. That's obviously not that's a good way to epoxy your stock to 12. I thought it was interesting when Zeekr comes public, okay, on Friday.
Yeah.
And this was in the wind that this would happen. And all that happens is that the stock goes even higher. So I'm really trying to figure it out. What is the American game plan, American investor game plan toward these? What is it? I mean, why is the stock up even more if there's going to be? I mean, is that because they make it so cheap that 8,000, and if they put 100% tariff on it, 16?
Well, Zeekr's not coming here. Nothing's coming here. Come on. No, there are no Chinese EVs that realistically are going to be entering this market, especially given the race potential for even more in tariffs.
Right.
Zeekr, since we had the CFO join us last week, I mean, they are higher end, and they're obviously around the world to the point that you've made. It's not just the Chinese domestic market, it's other markets outside, obviously, of China that don't have their own automakers.
Right.
He talked about significant margins. I don't know, 15%, I think is what he said, if I recall, right, Carl? 15% potential operating margins, which is not terrible.
No, I thought it was fascinating. I loved the interview. And I do think that their cars and trucks were fantastic. It doesn't have to be, David Soto, it doesn't have to have this market in order to be successful. It can be any market. So the idea, you might want to invest in it even though it doesn't have U.S. And there's a lot of places that have U.S.
And it's a reflection of trade policy overall and how it's changed. Remember when we embraced free trade many years ago under both Democratic and Republican administrations through the 90s and early aughts, it was about lowering the cost of things for consumers here in the United States.
Right.
And therefore that flood of Chinese exports, which then hollowed out our own manufacturing abilities here in the United States, that's different now.
Right.
But we're not going to pay less for our automobiles.
No, we're not. When I chatted with the CFO after that excellent interview, I came down, and I said to him, look, this is how we get cooperation. I mentioned that my father worked for the Chinese, and how great it was, and that if we would have, if she would see this, I think he could say, you know what, the U.S. markets are open. I've got to be a little more, let's say, less antagonistic. Because he's antagonistic, and why doesn't he see what we've done here? And it wasn't, look, now the CFO, I'm going to say, obviously was inclined to agree that things could be better, but I just felt very badly that this doesn't matter to Xi, that we open our markets. It just doesn't matter.
David mentions the de-globalization part. The other part's unionization, which is why Phil's all over this Mercedes vote this week.
Oh, my, I know. But my Short Hills Mall Apple voted against the union this
I saw that.
That was pretty interesting because it's a great store. Not that I'm pro anti-union. I mean, been to a bunch of unions, been in unions, but look, the store's fantastic. I'm glad people feel like that they don't need a union. Yeah. But if they have a union, maybe that's because they're overworked. I know the Maryland thing. I mean, it's entirely possible. We've seen whole chains where people feel that they're overworked.
Yes, we have.
Yes, we have.
I'm just trying to go through some of the union efforts. Obviously, Starbucks, Amazon's unionization efforts have largely failed, correct?
Yeah, I think so.
Yeah.
But, look, unions, it's a tough issue. Obviously, I mean, when I was a member of my union, I helped call a wildcat strike, and everyone got fired. We made our point.
I mean, you didn't have jobs.
Well, but we made our point.
There you go. Well done.
That's what they call a Pyrrhic victory.
Yeah,
Yes.
and then we went against J.P. Stevens, and we showed them. We got them. They shut down after we went after them. All right, so maybe it was suboptimal solutions.
We'll get Kramer's Mad Dash countdown to the opening bell. We'll see if we can put together some record highs at the open and completely get even on this drawdown the last few weeks. Stay with us.
Good morning, retail traders. Yabba dabba do. Oh boy.
FA.
Let's get to a mad dash as we begin the week here at the New York Stock Exchange, and we start trading about 7 minutes from now. Want to talk a little Micron?
Yes. Now, there are many multiple pieces about why the semis are good today, but this is the most salient. This is a Barclays piece, which talks about this time it's not going to be the same peak trough, because of the high bandwidth memory chips that they're doing, which are, of course, AI. And what it says, David, and I really like this, is that this cycle truly is different. And now, that's historically been a dangerous thing to say, but I know Sanjay Mehrotra, and I know the company well, and I think there's just a lot of truth to it. They're ahead of everybody else, which is terrific. They, by the way, made in America, which is really great. They may end up with money from commerce, but this is a very powerful piece, which tells me the stock is going to go much higher. The price target is 145. It's up 100%. This is the stock that I think the portfolio managers want to.
Really?
Yeah, this is it. Not too expensive.
Even though it feels as though with Micron there is, I mean, the volatility that's behind
They're
us.
saying that's going away. Because they're just saying, look, it's been like this, right?
Yeah.
But this time it's going to be like this, and if that's the truth, then the stock's going to converge.
And it's all because of AI.
Yeah, well, it's just that they have the high bandwidth memory. You need high bandwidth memory chips in order to really do great with everything that's coming. Memory's more important for semis in the new world. I really kind of like it. Look, David, they say that Moore's Law is dead in this piece. Now, that's something that Jensen...
Yeah, 5 more minutes.
Now, it's not what Intel says. Intel just got a big... Intel's doing this Apollo thing, rumored to be in Ireland for $11 billion.
Yeah, that's a financing for their chip manufacturing.
Well, I went to the one that opened in Dublin years and years ago. My God, I went to the Abbey Tavern, and my wife is a river dancer, so look out.
Oh.
She can river dance.
No kidding. Things you learn. And I thought I knew them well.
Nope.
All right, we got an opening bell a little less than 5 minutes from now. And by the way, don't forget, you can catch us anytime and anywhere by listening to and following the Squawk on the Street Opening Bell podcast. Who wouldn't want to do that?
Right.
We're back after this.
Schwab investing fee.
GMA's got 15 million in volume, and we just broke the resistance. I mean, this thing's really on fire. I got 37 resistance. There's a lot of rooms talking about it. Big Fat Cat on Twitter with 500,000 followers tweeted it out this weekend, and CNBC mentioned that site. And it was also on the news down here. So the extension, oh shit. $33, I got 28.68. I can see it. Okay, let's go to races. AMC, and I got shares of it, and I sold some. I've been pumping this AMC. Take profit if you're in it. Called 392 support all last week. Apple had a nice pop. Google on watch. Google. Spies in past the resistance channel. So we got to set an alert off the 200 SMA. I'm going to bring this one up above the pivot point. We got AMD. We got support on AMD right now. Brace the 200 will go higher. We definitely nailed the support this morning on AMD to the penny. 3 black crows, dadgummit. 3 white soldiers and 3 black crows. We'll probably get another soldier up here. 13. Oh, it's a spy. I haven't had my shoes off yet. My nose itches. SPX broke out. Oh, shit. AMD double bottom here. SPY at the 200. We got 3 black crows. Here I need to look at a different chart. Where's it? One minute. Got a hammer. We've got 3 black crows. Support's going to be the tweezer bottom. It's going to be a little bit higher. We got a double top on the IWM. SPY's at the 200 on the 2 minute with a big hammer. Okay, here we go. $14th. The 523. Ten strike, 10 call options. Okay, now the 2 minute. Where's the damn 2 minute at? What did I do with it? Got 113. It can drop more. I got some food on my keypad. About to get stopped out here. Let's hold on to it for a little bit longer. Well, they're bringing her down. This could be a head and shoulders. to be straight across. Oh boy. GME 28.60 something. 2 more bucks. The SPX, we're getting close to the 200. Right now we're on the 63. We got Meta, Google, SMCI down, Spot, been in trouble, TSM, GME up 11%, AMC 355, and Reddit is up, and the Donald. And I'm going to add here $0.95. I got 113.95 on AMC. Not AMC, but SPY. SPX looks real sexy here off this 63, but I don't know yet. I think we. Good morning, YouTubers. GME halted. Oh boy. 37 bucks. I'm looking for 37 on GME. That's Fibonacci extensions. Whoops. SMCI. I gotta watch this. Oh, here we go. Fibbies on GME. I got 33.95. $33.95 next. Now, if this thing gets a bunch of halts, it'll start psychologically affecting traders mentally. They'll want to go ahead and take profit. Some will. Zoom just hit resistance. SMCI. I think we're down here by my support level. Yep. I had 744. So, and 200 is at 506, and that's where it should be. They were pumping this thing up, and I said, nuts. Baba breaking out. Next resistance on Baba is 87 bucks. 88, 88, 88. That's $4 more up to the upside. 88. Even. Go, baby, go. Did it hold again? Yep. I think this is going to get ridiculous. Lily's down $7. Watch Lily for a double bottom snake to the downside. Home Depot earnings this week. GME, come on, baby. 34, give it to me. I got 44. I mean, if we can get 44 out of this, that'll be a triple top on the yearly candlestick. Everybody in their world's watching this stock right now, GME. It got halted right before we got to the Fibby at 34. Now, we got 3 white soldiers. These are 3 white soldiers. That's an extension, so this thing can consolidate now and come back to the 21, which is right around 29 bucks. And I'm also in this here SPY. SPY needs to do something. We get the 9 cross over the SPY. Double top on IWM. We're going to have a lot of volatility in the market this week. And this is the strongest bullish market I've ever seen, ever. During an election year. They're always good, but this is beyond good because we had such a big crash where nobody made any money. The Feds, the hedge fund managers, only 15% came out green in 2022. They made more money in the past year and a half than they have their whole entire life. And I don't think they want to stop it. Just by watching the way the AI bubble went. Here we go, baby. Break it. We got to break the VWAP. Needs to break VWAP. Randy? Woo, Jimmy, man. This thing going 47. Or what did I say? 40. Oh, heck, we're almost already there. Okay, we got a triple top. Now I want to make this triple top on the... I'm going to take profit. We got two tweezers on. Oh, I ain't going that high with that. Did anybody trade GME? This is the godfather of pumps right now. I'm gonna put this on social media just in case people get stuck. What happened here? What did I just do? Did anybody go back and watch my GME video? Damn it, Jimmy. Go away, little girl. Okay. Time to do it. Boom, baby. See how that dropped $3 just like that? This is the first year I've ever used the yearly candles. And I wish I'd have known about this a lot sooner. Somebody somebody got the idea. Look at all them dumps. Mine's in there somewhere. Look at all them dumps. Somebody made a ton of money right here. I guarantee it. Hey, Eminem, I'll give you 20 grand, man, if you put a stop on this thing. Let me get out at 34.87. Psst, Brandon. Psst. We did hit the 30. We hit the. You see that new triple top that I called there, mannequin? We did hit it, 37.45. Pretty sure we did. Yep. Bam, baby. Now you could set a fibby to this. You know, I think it's like I said, you're gonna come back down and hit the 21. I'm gonna put on my jacket here. I think about my lunch here pretty soon. Okay. We called out AMD this morning. We got an ascending triangle. AMD. Called out AMD. Ascending triangle breakout. 1, 2, 3, 4. If you can count to 3, you can trade with me. But if you can count to 4, You just might make a little bit more. What'd I say? AMD. Wubbis, Tubis, and a freebie. And this is an ascending triangle with this real steep upgrade to it. You know, when I'm looking at a chart, I want to see things that are different, things that, what do you call it? It's a worker that goes a little bit overboard. I can't think of the word right now. But when I hire people, I like to look for the person that can show a little bit of incentive. But that's not the word I'm looking for. Definitely got to get something in my stomach. That's kind of like a rising wedge. It could come back down and hit the 200 again and create a right shoulder. Little support level right here off this here resistance. We got a right shoulder coming back down on the SPY. Always clean, this Jim, may I help you? This is always clean, may I help you? Is this business orientated? Hey Dave. Is Dave here? Hey Dave. Hey man. Dave's not here. Dave, open the door. Man, Dave's not here, man. Open the door, Dave. That was a Cheech and Chong episode. Okay, what'd Jimmy say? 29 bucks. Am I right? VWAP. Now I'm probably maybe the only few that knew where resistance was on GME. So make that a learning lesson on them yearly candlesticks. If you can't find a resistance on the yearly time frame, go back 3 years. If you can't find it on 3 years, go to a monthly. If you can't find it on a monthly candlestick, go to a yearly. But you got to look for that resistance level. And it was a no-brainer to call this 37.45 on these yearly candlesticks. I mean, it's just a no-brainer. It's as clear as could be. And that's why I did that video, because I wanted to show people what a hard resistance is. I mean, these bodies, that's called a tweezer top. So you're coming up from the bottom and you run into a tweezer top resistance, which makes it a triple top. So eventually this body will snug up against and it'll creep up higher, higher, higher if the stock wants to stay bullish. Now this is a pump and dump. This is a pump. This is a big pump. Everybody's on it. All the rooms are on it. All the big traders are on it. So it's one of them trades where you just don't want to turn down when you get that kind of volume and that kind of volume on people watching the same stock. And we went through this before, and this sucker ran all the way up to $120. I think it ran a lot more than that. AMC ran to 300, and that's a shit show. AMC. See, we got tweezer tops on this one too, but I mean, this is after splits. I think it had it's had splits. But it ran up to 300. And I was here to witness that, and I was just beginning, to understand what a Mimi was. I didn't know what Mimi meant. Dog is a Mimi stock. Reddit is a Mimi stock. Double topped on the 20-day on that one. On Reddit. SPY. VWAP's definitely a hard resistance right now to break. I said this thing would, well, I don't know if I said that then or not. I think I'm talking about something else. Maybe. You got your three black crows. That's would be a resistance if we broke the VWAP. Then you got the day break right here. Would be your last resistance if we broke the VWAP. Now we're up here on a 1, 2, 3. We kind of got a head and shoulders on that. There's a 2-minute candle. Break the VWAP. Do it. Break the blanket. Boom. Oh, an expansion pattern. Jimmy don't like. Jimmy don't like. Boom, 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 boom. Where's my... We're at 104. Come on and do it. It's true. Blondie. Oh man, I nailed that support level to almost the penny from the top. He said $29.95. Wait. AMD trying. AMD trying. Oh, COSK. Mike's been all over the COSK. Mara had that big knife Friday off earnings, and we got a double bottom after hours. What'd you trade? NVIDIA at support. Take initiative. That's the word I'm looking for. One of the words. I've never lost a job because I took that extra step. And the employers know it. You've been on hold with E-Trade for 20 minutes. Still can't log in. Oh my gosh, Jen. Beat him up. CHTR at the top of the channel. Well, they picked a hell of a day to screw up. Spy broke VWAP. Okay, look at the expansion. Out of the snake. 112, baby, go. Randy. Randy. Now what is I thought we just broke the VWAP. What the heck am I looking at? Oh, we did break the VWAP. This is on a... Huh. Well, that ain't right, though. I thought I had a body above the VWAP. Must not have. I sure in the hell did. Okay, I'd say the beach trade is going to be about over soon. Then we'll go make me a hangers and come back and really get into it. One, two, three. Squeeze for me. I'm gonna make sure I put the right chart. Well, that damn SPY went up. Oh, that's not the VWAP. That's the... Damn, that's the 51. No wonder I got that mixed up. Now I know what I did wrong. See that purple line? That's the 51 EMA. Okay, we got a double bottom. Randy? SPX is going to go to the 200. I can see it doing it. Take that trend line right there and run it to that. That's right to the 200. So have another crow maybe. Set an alert. You dumbass. What happened there? There's the double bottom right there. I'll tell you what, I'm going to be waiting for this baby. Randy, I'm waiting for the SPX to hit the 200 SMA. These contracts went for the bucks. SPX the same day, the 2240, get 5. Yeah, I think I'm gonna go for it. Randy? The 2245s here. $210. $52.40s at $2.10. This can easily hit the 200 too. CHTR at the 63. GME double bottom alert set at 29.72. I'm not saying it's going to hold there, but I'm going to definitely set the alert at the double bottom. I think we can touch the 63 and 50. Things are bundled up there together. As we're below the 21, it's not bullish anymore. We got a lot of numbers coming out this week, so we got to be very careful in what we're trading. I think Monday's just a relief rally. And I'm in the SPY at 210. I'm in the SPX. It's retesting support again. I found a new guy singing Elvis. I want to get lucky here. We have a 1, 2, 3, 4. I want to make a little bit more. We have a double bottom. We have a double bottom at the support channel that I called here. Tweezers are there and a double bottom off the wick. So we have a higher low, snake breakout, pullback, boom. Snake breakout, pullback, boom. And I know what I'm missing, calls. Calls, baby. Shally wally, oompa, ging gang googly wash, ging gangoo. Shally wally, oompa. Break it. Someone knocking at the door, someone ringing a bell. Break it. Damn. That's called putting your foot down. We've got a new low on Amazon. I don't think it's going to work. Ooh. Come on, you cowards. Okay, GME hit the 63, halted at the 63 EMA on the 1 minute. That didn't look right. See, once the halt started coming in, it's more or less perfect falling wedge. I've got the 200 here. I'm going to show you a trick on the 1 minute. Body to that, 26 bucks. This is called an expansion pattern. We had a 1, 2, 3. We had a big gap down. So this is an expansion pattern. We're back to business here. $34 strike for the 17th. I'm not in it. I'm waiting. Patiently waiting to see if that thing will knife down here. Now, this is my idea. Entry down here. And that'll be a confirmation with an expansion pattern off the 200 SMA. 10-4, say it. I understand, Jim. Calm down. What makes a good trader is if you can predict the next move. Treacherous waters out there today. I got you, MA. Uh-oh. Expansion pattern. We're back at support. I'm going to be watching the GME off the 200 SMA here too. I'm going to type in the order that I'm going to take. My confidence level right now, if this thing pulls back and hits that 200, and I see a lot of traders out there, they don't see this, but I do. and I might move it up. These things got, the spread's not that bad. But there's 32,000 at the $34 strike, though. I like that number. Implied volatility, 559%. I don't think I've ever took a trade like that before. Come on, SPX. I want number 4. I want number 4. 1 bits, 2 bits, freebie, 4. I'm here to make a lot more. Damn, Jim. You're a genius. Here we go, right here. At 26.53 for GME. CHTR at a double top mic. CHTR at a double top mic. You can tell I'm a prime communicator because I repeat. Tupperware popcorn maker, the ultimate silicone bags win International Red Dot Award. That was last month. That must be a big thing. You got NASDAQ futures bumping against the 18,000 resistance. Wednesday at 11, I go get my eyes checked. Get new glasses. I'm still in my calls. Volumes really got down here. AMC back to 350. I'll be right back. I'm gonna go get lunch. I'm still in this trade. I'm safely assuming that we'll hold this here because the 200's pushing up. As long as we hold the 200, I'll stay in the trade. That'll be under. That would be my get out. Right now I'm down $200. We got a TTM squeeze going on.
If you beat earnings expectations, but you're not pricing in higher revenue guidance going forward, you're not getting that bump above the S&P 500 at this point.
That's right. It seems like, speaking of valuations, when you win, we're taking profits. When you lose, we punish you. But they're finding their way back. Some of these stocks that get choppy on earnings is ultimately we've got, like last week, high in Amazon and stuff. So. All right, thanks, team. Caroline Woods, Joe Mazzola, good stuff. Great thoughts to close us out here on Morning Trade Live. Trading 360 with Nicole Petalides is coming up next. I will see you this afternoon for Market on Close at 2 p.m. Happy Monday. Enjoy your trading session.
Get each and every angle, the whole picture. Everything comes full circle on Trading 360. Catch us right here at the New York Stock Exchange on Trading 360, only on Schwab Network.
Accelerate your market knowledge and shift your perspective into full gear. Real-time example trades, a full hour of trading insight. I'm Tom White. I'm Kevin Hayes. Catch me on Fast Market, weekdays at noon on the Schwab Network.
Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
I'm Nicole Petalides, live from the New York Stock Exchange. Catch me on Schwab Network, available anytime, anywhere, any device, for free. Schwab Network.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Kickstart your morning with a full dose of commodities, technical analysis, economic data.
We're at the 200
and
now.
action in global markets.
available anytime, anywhere, on any device for free. And available on all your favorite streaming services. Futures with Ben Lichtenstein every weekday, 8 a.m. Eastern on the Schwab Network.
Lichtenstein. Added.
A fresh take on the hottest trends in the market, from every click to every tick.
There's no fear of missing out on Next Gen Investing. 1 p.m. Eastern, only.
Let's break it. GME. Man, damn it. I had one reserve here, but oh wow, I did put that there. Should have probably stuck with that support. I'm not going to throw any more money in this. About 1,600 in it right now, 1,700. So just leave it like it is. I could double that and get them at 105, 110, and that'd really bring that down. I like this pivot point area, but I like that a lot better. I wanted that to hold. So Nicole Cecchellini, I guess that's Italian. So we're bearish now that we're under the 200. And if we break it, then we become very bullish. But now we're bearish.
Economy on balance remains strong. Corporate earnings remain very strong. At the end of the day, the stock market basically reacts to corporate earnings. That's really what drives the markets. And the economy is good, and the Fed is sort of on hold. This week is a big week for economic numbers. If we get some weak numbers, probably going to be good for the stock market because it'll reinforce perhaps interest rates going lower.
Yeah, look, I mean, you were watching for inflation, and sometimes when you're saying bad news is good news and good news, it starts to get so confusing. I mean, you don't want inflation, right? You don't want it to be sticky. Again, it was 3 months in a row that we saw sticky inflation, and that's hurting consumers. I mean, they're using their credit cards. We're seeing credit card debt, etc.
Exactly. No, and that is all true. And quite frankly, it is also perverse to be rooting for a weak economy. I mean, we should be rooting for a strong economy, quite frankly, because I think a strong economy filters down throughout the entire population and floats a lot of economic ships. But, you know, this is the world we live in, and for some reason Wall Street is convinced that they want to see lower interest rates, and the market sort of reacts to that. The big question, Nicole, will be what if, in fact, we get these lower interest rates? One, possibly two. What's the market going to do then? And my guess is that's a selling opportunity, not a buying opportunity. But we're not there yet, so
right.
we
So
just
you're
have
a
to see.
little bit cautious, and you have some of the names that have served you well. I mean, names like Chubb and Exxon, Meta.
Right, Meta,
Let's
right.
Any of those three that you could highlight for us right now?
Well, listen. First of all, we still like the short-term Treasury trade. In period, even though the markets have been climbing this proverbial wall of worry, there are still plenty of folks out there that have reason to be concerned, and I think that's legitimate reason. And so the treasuries, the short-term treasuries, 5.2, 5.3% is
AMC's moving.
high when you don't know what to do. Beyond that, we continue to favor the insurance sector. Now, there's plenty of good names there. We happen to like Chubb, but there certainly are others. We like Energy, Exxon, and Oxy, and we still are a big fan of Meta, and I think the Meta story still has plenty of good years ahead of it to play out. But, as you know, we've been on that name for 10 years. I mean, sooner or later, we're probably going to run out of runway, but for the moment, we still like the stock. So our stock selections really haven't changed.
Right.
It's tech, it's insurance, and energy. And we're pretty selective.
I saw you have Oxy in there,
Yeah.
right?
Listen, when the market's at the current levels, which are at or near all-time highs, it's a little difficult to find something that screams at you, buy me.
Right.
It's kind of tough here to find what we consider value. So pretty much we own what we own, and with idle cash, we're basically buying the treasuries.
You don't talk that much about dividend payers. That's never really been part of your conversation. I guess you talk about short-term treasuries, you talk about names you like Chubb, like Exxon, like Oxy, Meta. You have this electrical ABB. I don't even know too much about that name.
Yeah,
You can
that's
share
a new name,
with us. I want to hear about that. But you don't really say, I like a dividend-paying stock.
No, we actually love dividends. Listen, at my age, I love the dividends. if I were your age, really young or even younger, you can have a different approach to the markets. But yes, we try to own stocks that pay decent dividends, not all of them, and because the timing is always an issue. You're not always right, so we sort of want to get paid while we wait. We like what we buy. We wouldn't buy it if we didn't like it.
Right.
But it's the point of entry sometimes, that it doesn't quite, it's not quite the right time. So we kind of get paid while we wait. And by the way, going back to the treasuries, 5.3% on your money for doing nothing.
That's great, right?
I think it's a pretty good return.
I don't know ABB. Tell me a little bit about that.
Well, ABB is a Swiss
so it doesn't
company.
trade here.
The ADRs trade here, and they're quite liquid. But what ABB is, and ABB is not a cheap stock. It damn near makes new highs almost every day. But we decided, and this is nothing original, but we're kind of focused on the electrical grid, because with all these things going on, with the cloud and AI, and electric vehicles, quite frankly, the electrical grid is ancient and needs to be upgraded. And ABB is big into robotics, and it is big into the electrical grid. It's a huge company, and it's a good company, and it does pay a decent dividend, by the way.
All right.
So it's if you want to pay attention to the electrical grid, which I think perhaps folks should, it's a good stock. There are others, but it's a good one to own.
Yeah, when you think about these AI chips and how much electric that takes, forget. Ted Weisberg, glad you are here today. Thank you very much. Ted Weisberg of Seaport Securities.
Break the 50, please.
Plenty more to come here on Trading 360. Up next, it's the Big Three.
Dadgummit.
Charts, 3 trades. Ben Lichtenstein goes to the technicals. Jessica and
I could
goes to the trades.
have bumped him at a 105.
NVIDIA. We will be right back.
That'd be up even. Above even. Go, go, go. I want to get lucky. 52.32. We got a pivot point right here. Doo-doo. Well, I've had lunch without any potato salad. Break it. Break it. If we get one little bitty candle above the 50 here on the SPY.
Ladies, live in New York City. Time for the big three. 3 stocks, 3 charts, 3 trades. Ben Lichtenstein's back. He'll take us through the charts, and here to take us through the trades, Jessica Inskip, Director of Product.
You got a butterfly on your neck.
Good to see you both. Jessica, how are you feeling about the market today?
Yeah, great to see you, Nicole. So happy to be here. Interesting week in the market. I feel like we've always had this slew of data, but there's also a lot of AI events kicking off. So not only are we going to get some inflation data, we're going to have some AI and developer conferences. So get an insight into that AI story. So a lot of catalysts that could potentially move the market. And I think it's interesting that we're going to get PPI before CPI because the producer perspective tends to lead the consumer perspective, and the producer perspective is doing the best thus far as inflationary measures are concerned. So a lot of potential good catalyst, but a little bit of cautious optimism because of that euphoric state. Some bad could come in, could really send us down.
Right. All right. Well, we got some news from Apple recently on some of the new products, right? And we'll hear more on the Worldwide Developers Conference in June. Some of your thoughts on Apple today?
Yeah, absolutely. So Apple, we've got some thoughts in the works. They've been talking to Google. Perhaps we'll see something else. That event, there is a ChatGPT event today. So it's like they're front running Apple as far as some type of new product that could perhaps compete. Again, speculation there. But I've said this so many times talking to you, Nicole, and we've had these conversations, how Apple did not overhire during COVID. Apple has shown us good management, and we cannot forget that. And on top of the good management, they also have very large cash balances. They have that cash neutral strategy. And now that we see earnings like Meta, where they are now very intensive within their CapEx cycle, that would perhaps lead to revenue within the future, Apple is already well positioned for those type of investments because of the management that's there, in addition to their large cash balances. Multiple wise, they're at the higher end, or about actually the median of their range, around 27.77 is their forward PE ratio. So looking for the next 12 months, their 5-year historical average is about 16 to 34 times. So the median is about 27, so a little higher, but got some higher price targets from the analyst concerns. I think there's some opportunity. I think there's increasing diversity within the services, lots of upgrade cycles, but really it's the AI that I'm waiting on, but it's also management that's more important or equally as important as innovative products.
Right. It sounds like, based on what you said, that they didn't hire too much, things like that, that they're on top of things. Ben, take a look at the chart, please. Welcome back, Ben.
Thanks, Nicole. Yeah, Jessica painted quite the bullish narrative there. That's right. And in many ways, the chart's a pretty good reflection of exactly what she was talking about.
Mr. Lichtenstein.
And exactly what I look for, which is migration of value. It's been to the upside, and we're in a pretty well-defined trend higher across multiple time frames. Let's look at a few of those and just establish first and foremost that if you're looking at the more granular time frame, you're going to see
that can't pull back here.
2, possibly 3 areas of value that have formed off the lows that we saw on Friday afternoon around 182, all the way to begin the week up to 186.43. First and foremost, direct your attention here. You can see a bit of a range that formed. Here's the second, and kind of going out on a limb here, but possibly a third that we're starting to see here. And I went ahead and identified these areas with values in terms of, again, a 1-minute candle chart establishing 182.75, 185 now, possibly a new area of value forming at a higher level. So let's take a step back here, right? Because we don't want to put too much into a 1-minute candle chart. But just looking at this most recent move up here, you can see it's part of the bigger picture move where we're seeing a similar situation play out. Migration of value to the upside. This is a daily candle chart here. We're going all the way back to when, well, stock was trading around 125, 126. You can see I pulled out the fine-tooth comb here, the microscope and magnifying glass, and identified a few areas, that staircase-type pattern playing out, though, pretty well, as you can see, into the fall of last year, topping out around 200 and balancing now, currently forming a bit of a range around this 184 level. I would say making way through the middle of the balance area after a failed attempt at the lower extreme, which held at a key area, 165-ish we'll call, well, ultimately opened up a door for a retest of that upper extreme. So we're talking about the bulls have their sights set on 199, 200. Let's add a little more time on and just want to show you a similar depiction. Bottom left, top right, we can identify areas of consolidation that form. So this is a daily candle chart again, but we've now added quite a bit of time on. We're going back to when it was trading around 50. So here's the move we just looked at. Here you can see migration of value to the upside, as I mentioned here, Nicole, across multiple time timeframes. This is a very bullish depiction following a bullish fundamental narrative that Jessica laid out.
Right, understood. Okay, thank you for that. Appreciate it. And to your point, I just was looking at Dan Ives' note from Wedbush talking about ChatGPT today and all these AI events, and that this pretty much could be almost a done deal between Apple and bringing ChatGPT to the iPhone, which he says would be the golden goose for Tim Cook and Apple. So we'll see and we'll learn more throughout this day. Jessica, thanks for bringing us that top story, without a doubt. Should we move on to Con Ed? Or add anything you like, but Con Ed is up next.
Yeah, absolutely. You know, I've listened when Dan Ives talks, so it's a really, really great commentary there. I do have a trade on Apple I'm happy to share with you, just because there is uncertainty, and this is kind of the theme that I have. Uncertainty and volatility go hand in hand, and the way that options are priced, that increases the options premium. So again, I'm focusing on selling options. If you don't already own Apple, right now is an opportunity to add it to your longer term portfolio via a cash secured put, selling the June 28th 185 puts. That was at the money at the time that I gave this trade, but Apple's a little higher, so you may want to adjust your strike up. But that yielded about $440, and the intent of that is now I've reduced my break-even price to about 180. So I'm giving myself a cushion. It allows me to purchase the stock at a discount if it were to move adversely, because you believe in that overall thesis, like Dan pointed out, and like we've been discussing. Absolutely.
All right, next up, and it's been on a good run up lately. 1 year down, but the last month or so looking good on Con Edison.
Yeah, this one actually surfaced on one of my technical scans this morning, which just prompts further investigation with the way that I run my methodology and investment thesis. And diving into more of the fundamentals in the data, they have a new steam rate plan, which is supporting their earnings growth. And this is, Apple was a growth play. This is an income play. They have a really high dividend of about 3.34%. So this is something, again, where I want to sell a relatively close at the money option in order to add this to my longer term portfolio. And again, you know, there's grid pressure. We could point everything back to AI, Nicole, which is amazing that this is the way it's transformed, but we think about the World Wide Web, eventually that occurred as well. So I like to use those parallels when thinking about the investment opportunities.
Yeah, okay. And that run up.
So she's still in bed with AI.
Evident. I can see it behind your head there. Ben Lichtenstein, tell us more about the charts, please.
Yeah, Nicole, your last guest was just talking about the grid, right? And one of his stocks, PICU, is leaning towards some infrastructure spending that was to come there. And this is a good example of what we were just talking about, the two phases of development, focusing on the horizontal phase, migration of value to the upside. This kind of highlights that other phase, the vertical phase. So let's take a look, because we're in a vertical phase here right now, and shares of ED, as we've recently on an hourly candle chart, moved from this kind of overlapping, very random and low conviction phase where you have a well-defined upper and a lower extreme, and you never really break out of it until, well, eventually you do, and you get this breakout. Take a look here. Let's just begin with a 60-minute candle chart here, and you can see how we have gone from a very, again, sideways low conviction phase to a high conviction phase where we broke out through that $92, $93 level and have recently topped out and kind of holding up around $98.50. So no rejection of this upper level as of yet. Bullish pattern playing out here. Now this stacked up with what we were talking about earlier, the staircase type pattern, migration of value to the upside, and well-defined trend. Well, again, this speaks to a bullish play here also. I did look at this chart here as Jessica was talking a minute ago, and I did notice that, well, you can look at this as one large area of balance, which I identified around the $80 level.
I added more.
Also just kind of focus on this being another area of consolidation that's formed.
I'll stop out if it doesn't hold here.
They're very easily identifiable with a break of vertical separation between the two areas of value, but sometimes they're a little bit more overlapping, and you don't really get that really well-defined vertical phase that we're seeing on that more granular 1 hour candle chart that we just looked at. But here again on the daily, a couple different ways of looking at it. This is somewhat interpretive, obviously. This is an art, not a science. But I want to take one more step back, show you where we are relative to the 50-day moving average. This also speaks to some of the strength we've seen as of recent, that big move up. We were just talking about the high conviction move up and through $95. And look at this, right up to a couple key areas to watch here into this $100 level. You can see on the left side of the screen the highs that we saw around this time last year. So above the 50, above the 200. Also RSI here, very supportive of this run up. Again, reflection of another bullish narrative that Jessica's laid out.
Yeah, understood. The RSI supporting that thesis. Jessica?
Lily?
Yeah, I completely agree. I love seeing it where it's overbought, hangs on that higher end of the deviation, therefore validates the thesis.
time frame's
And
that on?
again, this is something where it's a neutral to bullish strategy, selling the June 21st
5
97
minute.
and a half puts. That's relatively close to the money, which means the stock price and the strike price are about the same, and it gives me about $180, which reduces my overall cost, and it's a way to add securities to your longer term portfolio, especially if this is a longer term hold dividend play, if you will.
All right, next up, a family favorite, right? For all the families that
That it
did well with this one, 215% higher over 1 year. Of course, it's off the highs, but still back above 900, and that is NVIDIA, which dropped below 800 not that long ago, has been running back up. Some of your thoughts on NVIDIA? People want to hear more about this one for sure.
Absolutely. Now this one is I would say more about the volatility structure that has arisen from the options market rather than the underlying security.
don't
But
look
the
good
underlying
to me.
security certainly plays into it. So I'm calling this not an earnings play. It's circumvented around earnings play, but it's a volatility play. So volatility increases options premiums because there is uncertainty. And uncertainty means either direction. We have a high conviction that it's going to move a lot, and that happens during earnings. So I expect something called a volatility crush to occur. And when this happens, I look for a favorable risk versus reward trade. And NVIDIA had a very much higher than normal one. And that's because it is a family favorite, like you said, Nicole. So the way that I'm structuring this one is I want to capture the volatility, and post earnings, I expect the premiums just to deflate purely because the uncertainty is removed from the market. Just that's all it is. So it is a leaning towards the bullish side because we hear from Meta's earnings that they're spending, if people are spending within this CapEx cycle, and there's a huge AI CapEx cycle, NVIDIA is going to be a primary beneficiary of that, regardless of who's using what software and cloud. That all comes back to a main source, which is, of course, NVIDIA. So I still have absolutely a bullish bias, but the way I'm structuring this one is a bull put spread. This is because it's capital intensive to trade this security for our everyday trader. So selling the June 28th 905 puts, buying the 850, that reduces my risk exposure as if it were to move adversely down to 850 rather than if it goes down, God knows so much. And my total premium that I'm receiving is about $2,500, but my risk is about $5,500. So that's what I mean for the risk versus reward. I'm capturing about 50%, whereas normally we look for 30%. So this is favorable in the terms of option structure. I know I was a little long-winded with the explanation, but there are some options explanations that were needed there, Nicole, so forgive me.
No, I mean, look, everybody wants to hear more about it. They appreciate that you're making the effort and making these explanations really understandable. Ben, final thoughts here on NVIDIA?
Yeah, simply put, Nicole, trending up across multiple time frames. Again, a bullish pattern playing out here, and a winner for a while, one that's rewarded these bulls over the long haul for quite some time now. Let's just begin first and foremost. I've got a 1 hour candle chart. We're looking at the last few weeks of price activity. You can see it's very well defined to the upside. Stock was trading down around 756, rallying all the way back to 922, and currently hovering around this $900 level. So very limited in terms of any indication of a rejection of this most recent rally back up and through 900. We're sustaining this upper level. You can see that by just this consolidation that's playing out here. Stepping away from the 1 hour candle chart, adding a little time on, shows a similar pattern, right? Bottom left, top right, balance, which is, well, forming around the $900 level. Not much has changed since last time we talked about
Still
this
waiting
stock.
for 2653 on GME.
April. So I think if you were to do the math right now, the balance, I think you have to actually bring this down a little bit more into like the 875 range. I think it's what, $200 worth of range here. So 230. So you figure 100 and some odd. Yeah, about we'll call it 830, 840, right in the middle of that range. But just wanted to point out migration of value to the upside, consolidation happening at this upper level. No rejection as of yet. Well-defined lower and a very well-defined upper extreme here. We'll call it 975 to 740, and that's where we're balancing right now. Let's take a step back further and just sort of point to the fact that, again, we're in a well-defined trend up off those lows we saw from last summer around 392 and well off the lower extreme, and the balance that we formed down around this 900 level. And that lower extreme here, I think, is key, because what did it do? It held right at that big area around 785, where you didn't want to see price spend a lot of time
below.
So we're at the right shoulder now.
Last area balance to form prior to the one that we're currently forming. So yeah, I'd have to say again across multiple time frames, another bottom left, top right bullish pattern playing out here, balancing around. Well, we'll call it 900. What's 20, 30, 40, 50 bucks amongst friends and amongst a rally that we've seen here in NVIDIA like this.
Yeah, great to see you, Ben. Thank you so much for all these great charts. Ben Lichtenstein on the charts, Jessica Inskip at Options Play. Thank you both very much for the big three today. Appreciate it. Coming up, we're going to spotlight long-term retirement income as our next guest says you should emphasize equities more than traditional fixed income. We'll get an explanation on that. All this and more.
Clutch.
We'll be right back.
Knife.
Ameritrade is now part of Schwab, bringing you an elevated experience.
That's my biggest loss of the year now.
Go deeper with
my first loss of the year.
Award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with
AMD hit the 200.
Crafted just for traders. Also, you can trade brilliantly.
AMC knife, and also
young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of
interesting, but you still have the same problem. You got to rewrite the algorithm from scratch, and you also have to keep the 7 million businesses that are there.
It's very seldom I get to argue with Schwab. Magnificent. Very seldom. I did a couple times last week, but they were short-lived. And this Kevin O'Leary, I don't want to listen to him. So I just... They kind of kicked him off CNBC because he wasn't politically correct. He didn't follow their narrative.
Talk with Mike Dixon.
Man, your hair looks
head of
nice
research
today,
at
honey.
Horizon Investments. Thank you. you so much for being with us.
You're welcome.
So you're looking at this a little bit differently than maybe our parents and parents' parents did this. Tell us what used to be and maybe some of your ideas today.
Yeah, when we're thinking about retirement income, it's commonplace for folks to typically get overly conservative and want to make sure they protect their retirement assets. And what we found in a lot of our goals-based research is you actually need more stocks, not less, to help fund what you hope is, of course, a very long and happy retirement, but also one that keeps up with inflation over time. And I think today, where you have the risk-free rate that's quite elevated, this is something that we need to remind folks of even more to make sure that we don't leave some gains on the table that can really do an excellent job at offsetting some future spending that you might have during retirement.
Right, and look, folks want to keep their principal. They do get pretty conservative, even younger folks. I mean, someone who's 20 or 30 or 40 may say, I just want to lean more into bonds because I'm afraid. They don't know how much money they can get. This may be the only money they make. I mean, you understand where they're coming from, but at the same time, you emphasize equities and explain to them that this is a good way to go, right? What do you say to them to sort of make them feel better that equities really could be the way to go?
Well, look, certainly equities are going to be the cornerstone of that plan, but the very low risk investments still play a big role in the best portfolio for retirement income in our view. Specifically, a question we get a lot is like, well, how much safe, kind of asset allocation should we be considering? And the way we like to think about that is, in terms of, your annual budget, for example. When you retire, let's say you had $1 million in retirement, you do not need that $1 million in the very first year of retirement. You need, just a fraction of that. And so we generally advocate for keeping about 3 years of your kind of expected spending needs in some very safe, conservative investments to kind of really serve as a spending reserve and a buffer to volatility. But then with the rest of the portfolio, that's where you really need to lean into the growth potential that you can get on the equity market side of things. Because even when stocks have pullbacks, which they inevitably do, as long as we have enough set aside in reserve, in that couple years, 3 years of safe assets, we should be able to weather the storm. Markets will recover. And that's just an excellent way to kind of, barbell that retirement plan with equities on one side, but very safe conservative investments on the other.
Google came back and hit the 621.
Right. I mean, we used to talk about the 60-40 plan, right? And people just would put some money away in bonds because they were so nervous. Cash also plays a role. I mean, you talk about 37% in fixed income and cash, but the 63% in stocks. But it's good to have a little cash on hand too, right? Why?
Yeah, you do, because there certainly is going to be periods of time where markets pull back and markets are volatile. And one of the things that we want to avoid doing, certainly in retirement, is you want to avoid selling in a down market just to meet some distribution need, because that's going to lock in losses, and then you're not going to get any more recovery from those funds. So it's very important to kind of keep that in mind and balance the idea of an equity-centric portfolio with a spending reserve and a certain amount of allocation that's allocated to, as you mentioned, cash and like risk-free like investments, because that stuff isn't going to move when equities are going up and down, and that's what it's for.
Yeah, I like how you say large caps, small caps, mid caps, micro caps, foreign stocks. You really have the gamut in here, right? Is that right?
It is, and I think where we are, over the last decade, really, is it's all about the S&P 500. It's all about the mega caps, and that can really make investors kind of biased to just want to buy. I heard you talking a minute ago about NVIDIA, and you just want to go all U.S. large cap growth because it has done so well. But if we look at and zoom out over what's happened in markets, over a much longer period of time, that's where some balance can come into play into what an optimal portfolio might look like, and where we advocate for, as you mentioned, using other exposures such as international stocks and smaller mid-cap stocks quite frankly, stuff that hasn't necessarily performed very well in the last several years, but the long term, we believe still serves a really strong purpose in creating that balance and diversity that you need in that equity-centric portfolio, depending on what the future in the markets are going to look like. We just don't know, and that's a great way to go about it, is diversifying some of those exposures.
All right, thank you, and for all the findings of Horizon Investment, we appreciate it. Mike Dixon of Horizon Investments, thank you. Coming up next, George Sellis is standing by, and he's going to take a look at Texas Instruments. Citi boosting the price target on Texas Instruments, so we'll take a look at that. He'll also have an example trade for us right here at Trading 360. The Dow has turned negative. We'll be right back.
I'm gonna hold on to these babies. I'll be right back.
Cut the cord on the way you get market news. It's Market on Close. Join me, Oliver Rennick, for the biggest earnings coverage, insights from the smartest minds on Wall Street. Monday through Friday, 3 p.m. Eastern, available anytime, anywhere, on any device for free. Only on the Schwab Network.
Welcome back to Trading 360. I'm Nicole Petalides, live at the New York Stock Exchange. Glad you're with us on this Monday. Look at developing stories this morning, and let's bring in Caroline Woods, senior market correspondent here on Schwab Network, talking about Apple, ChatGPT, all the news that's coming. Some big news. We've got to watch Apple today into June, right? Tell us more.
Yes, of course, the Worldwide Developers Conference isn't until June, but Apple shares up about 1.7% today. Still negative year to date, but chipping away at those losses, now up almost 10% in May. But we've been waiting for news on how Apple is going to integrate AI into its iPhone. And according to Bloomberg, it's nearing a deal with OpenAI to use ChatGPT, its technology features, in its next iPhone operating system, which is Apple's iOS.
Very volatile week.
Last June, Apple CEO Tim Cook said he personally uses ChatGPT, said it showed great promise, but did talk about some of the issues that could come up with it, talking about things like bias and misinformation and maybe worse.
AMD pulled back. Amazon pulled back.
It was saying that they're nearing this deal. Dan Ives was out with a note this morning saying
Double top on AMC.
around a number of these advanced AI, OpenAI features on the iPhone that Apple will build around a broader AI strategy on iPhone 16 and iOS 18. Says this is a partnership that would open a myriad of paths and revenue opportunities on the services front, which we know is increasingly important to Apple. Now, if you take a look, Alphabet shares are lower on the news, and that's because there's been these reports that Apple had been talking with Google about using their Gemini chatbot. So we're actually seeing Alphabet shares lower on the news. Now, Bloomberg did say while those talks haven't led to an agreement, they're still ongoing. So let's see how this all plays out. As I mentioned, Apple will hold its Worldwide Developers Conference starting on June 10th. So the expectation is this is when they'll finally reveal their really long-awaited AI strategy. So we'll have to wait and see.
Apple preparing to sell Vision Pro outside USA.
Definitely
preparing to
a
sell.
bright spot on the Dow this morning, up 1.6%.
All right, thank you for all of that, and everybody can mark their calendars in June too. Thank you.
It may be bringing Open AI to the iPhone.
It's time for disruptors,
Apple.
and George Sillis is with us, senior markets correspondent here today, taking a look at Texas Instruments and Citi actually raising the price target on Texas Instruments. Tell me a little bit about this. They did keep the neutral rating, but it's at 187 today.
Yeah.
Some of your thoughts.
So I think if you look at Citi, Nicole, they're actually becoming more constructive on the prospects for Texas Instruments for both dealing with some of the end market mix issues that they've had in the past, and that had to do really with the mobile handset markets, which are relatively weak on a trailing basis. They also had some inventory issues when it came down to some of their analog chips. But I think going forward, looking at the other thing that was weak was the automotive space. It looks like there's some bottoming out happening here from an earnings and revenue standpoint for Texas Instruments, which is still one of the global leaders in analog and mixed signals.
There's that long leg
conductors,
thingamajigger again.
Digital and analog frameworks. But I think the catalyst for the company going forward may actually be the industrial end markets, automotive end markets, as well as the mobile handset and mobile markets as well. I mean, microcontrollers and touch controllers that you see in automotive, in things like iPads and such, are actually TXN's technologies. And I think we're in a recycle or a refresh cycle when it comes down to the mobile end markets. But they do maintain, Citi does, a $185 target from the 167. But as you mentioned, they maintain a neutral rating on the stock, because if you look at the earnings profile for the next
not much of a wedge,
the estimated
which I'd rather
earnings
see
growth is around
on a SPY.
$5.21, but they're paying about close to 80% of that in dividends. So the prospects for the price may not necessarily be far-fetched going from here because of the fact that right now, based on the trailing earnings and the slower growth in the forward earnings, a lot of the earnings are coming out in the form of dividends, which is pretty robust right now, paying close to 3% yield.
Yeah, it's interesting because, right, I mean, they basically raised the price target to current levels. I mean, maybe just a valuation call there, too. Tell me a little bit how you would go about an example trade, George.
Yep. So if you take a look at the chart, one of the things about TXN I forgot to mention is that they did report earnings on the 23rd of April, and they were actually really good earnings. But if you look at the price action on the chart, it's been moving higher since then. And going back to July of last year, around $180, that was an area of previous resistance. So that level might actually be a supportive area where the stock could settle in case it starts to trade sideways or slightly down. So what we can do is, going out to June, we can sell a cash secured put. So it's basically a bullish to neutral strategy. It allows us flexibility. What we're going to do is sell the 185 put, which is about $3 below the current price, but we can also earn $3 in credit by selling that put. So effectively, what this does is it basically gives us we're obligated to purchase the stock at 185 if it does hit that level between now and expiration in the third week of June.
Texas Instruments really changed, man.
Assign the shares, your cost base is $182, which is right around, like I said, that
this used to be a horrible stock.
That was again previous resistance around the 180 area.
All right, thank you for all of that. George Sillis with our Disruptor every single weekday, looking at Texas Instruments today and an example trade there. Thank you, George Sillis. Coming up next, our 360 round, we'll take a look at those cannabis names that have had obviously some good news surrounding the DEA and looking at reclassifying marijuana, and that could be good news in the big picture. Let's see what our pro panel has to say. Trading 360, we'll be right back.
Be part of the latest commodities action.
Well, so far Jimmy has a red day. YouTubers, I got to do better. Keep an eye on ARM and AMD.
Gets classified in a way that would be more beneficial to the cannabis sector, right, Dan?
Yes, this is really the biggest thing to happen to cannabis stocks in the United States, or cannabis overall, in the last 50 years. We've been waiting for this a long time during the Biden administration, but cannabis is currently classified on the DEA as a Schedule 1 drug, like heroin and other very bad narcotics that have no medical uses. And now there has been a letter from the HHS recommending, with lots of backup and medical proof, that it should be reclassified to at least a Schedule 3. And just on April 30th, 2 weeks ago, the DEA said that they are looking to accept that Schedule 3 recommendation. So this is really world changing for the U.S. operators, the companies that are usually multi-state operators in the United States, with dispensaries, with the licenses.
I didn't know they could have multi-state.
Tax benefit to them that's been very unfair. So once again, we're not sure how long the whole process is going to take, but this is the biggest news to happen to cannabis in the U.S. for the last 50 years at least.
Right. And look, you know, is it, when you look at what it is, Morgan, I mean, how should it be perceived? Should this go through? I know that they get the okay, and then they have to get all kinds of paperwork to support that. They do
AMC new high.
And tests and things like that. You can't just say, listen, we want to make this from heroin level to something a little more regular and everyday type of thing, Morgan, right? It takes time to get this done, but it's a big deal, isn't it? And you have a name like
Come on,
Green Thumb, for
SPX.
example, that you do like.
Pay me back.
Tell me some of your big picture thoughts and a little bit about Green Thumb.
Yeah, well, the industry's really had to find a way to survive while we've waited for this change. You know, it's amazing to think the DEA put cannabis on the Schedule 1, as Dan mentioned, 50 years ago. And that seemed like a pretty easy process, but undoing that and moving it to Schedule 3 is quite a lift. And it's going to be a journey to get there. We are all anxiously awaiting the Office of Management and Budget to come forward and help provide some clarity around that process. But in the meantime, these businesses have to continue forward. And we are reviewing all of the first quarter earnings from these major companies. GTI remains a standout for sure. Their ability to generate free cash flow, even with the onerous 280E taxes, and generating good growth, they are a standout in our industry. It's certainly one for others to try to emulate, from being good capital allocators, good corporate governance, and continue to drive their business forward. But there are other names that we're certainly very interested in. Ascend Wellness is a name that we've liked for a long time and talked about. It's got the industry's highest growth rate of the public companies, projected somewhere around 15% plus top line growth this year, while the cohort is largely in single digit top line growth. But the industry overall has been making good progress. Fundamentals are improving, even with the taxes remaining. Price normalization has stabilized. And we have some good new states opening up. Ohio is opening up soon. Its adult use market could be as early as June, July. But people are being pretty conservative around that. And certainly a lot of eyeballs on Florida being on a ballot initiative this fall. That will be a tremendous amount of additional growth added to the U.S. legal cannabis industry.
Right, understood. And look, on this move and this classification or reclassification to Schedule 3 from Schedule 1, basically does not make it outright legal recreational use. I mean, so people understand, like, it's still going to be, and it's not federally approved yet at this point. But it's moving in that direction. To Dan's point, saying the best in 50 years, the best move here, or something like that. You said, Dan, I don't want to put words in your mouth, but you have Truly,
Put words in your words.
as well as a pick, Dan. How much can these names go up? I mean, people have been waiting, right?
Sure. Well, those are the top 3 holdings in our MSOS ETF, which has moved up nicely so far this year, up more than 30% in anticipation of these changes. And this rescheduling, we think, has the biggest impact, but we're waiting for more of a domino effect that will follow. We think we're going to get guidance from the DOJ, from the Attorney General's office. We still think our Congress people may be able to move through the Safe Banking Act or Safer Banking Act we've been working on and waiting on a long time, and there might be other bills. But this rescheduling could, as I said, cause a domino effect. We think with some other guidance and safe harbor could lead to listing on major exchanges. And that's where we really see a separation here. These U.S. companies haven't had access to hardly any institutional capital. They can't list yet on major exchanges in the United States, like some of the Canadian operators that are very different operators. So we think these U.S. companies, these multi-state operators, are still vastly undervalued. They had serious drawdowns over the last 3 years until this year that we're in now, and we still think they have a lot of upside. Again, as Morgan mentioned, there's something called 280E taxes. That's where these companies are taxed like they are a Schedule 1 narcotic drug. They can't deduct any business expenses. So we see some really big move up potentially once we get some of these federal reforms through the pipeline.
Yeah.
And then money waiting on the sidelines can come into this space.
All right. Thank you both so much, and we'll continue to watch these names very closely. A lot of action. Dan Aarons, Morgan Paxia, thank you. Thank you, friends, for being with me here on Trading 360. I'm Nicole Pedalides. Be sure to download our free Schwab Network app. It's available in the Apple App Store. 24/7, schwabnetwork.com. Fast Market is next.
Be part of the latest commodities action on Futures with Ben Lichtenstein, weekdays, 8 a.m. Eastern on the Schwab Network. Available anytime, anywhere, on any device for free.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in one convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available in seconds. That means you can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
Every morning, every trade, always live. Expert earnings analysis, in-depth technical insights on every changing trend in markets. Available anytime, anywhere, on any device for free. Welcome to Morning Trade Live on the Schwab Network. I'm Oliver Rennick.
Lily?
My dad was a hard worker.
Oh gosh, your dad.
Used to do side job.
Okay. Your dad got me an SPX. Now I'm trying to get out of it. He said it was a good buy. So I bought it. And then I've had to cost average down. Your dad can't trade stocks. Hopefully if I can get to $1.05, I'll be rich again. I don't ever want to hear your dad call out a stock ever again. Your dad. Your dad charges $50 a day to be in his room. I charge nothing. Oh boy, I hope I did the right move here. I got 30 contracts of the SPX. Last time I sold a stock, and I sold it, the thing bounced. And that was the losing trade I had last week. And if I sell this sucker, it's going to bounce, and I'm going to be pissed off because I lost like $500. So I'm just going to wait, take whatever it is. So my average, if I put these two accounts together, is 115. Now we're at the 200. So here we are at at a resistance level. And if I get up here to number 4,
Long too far.
Bring in
to the
Mr.
inflation
Frankenstein.
concerns, setting up the stage for CPI and PPI to actually miss and be a boon for the market in the interim. And I also think for now, because that is the kind of consensus worry, is inflation dominating things. If you have a little bit more economic weakness, that's actually perhaps a positive for the market.
Still has
I don't think
room?
It's a long-term positive, but we're talking short-term here. We think in terms of option cycles, and nowadays, depending on the product, there's options every day.
Yeah, we like things not as hot as they were, but careful, right? How weak it gets, because there's a very fine line between, oh, we want it a little weaker than that, but we don't want to put the fire out in the U.S. economy. Kev, looking at the inflation data that we're going to get on Wednesday, CPI, last month, the month-over-month numbers, both up 0.4. This month, both monthly numbers looking up 0.3. 0.3 sounds a lot better. You know, what I say very quickly, because traders like to simplify things, 0.3s and 0.2s and lower are pretty good. 0.3, 0.4 and higher, pretty bad. Kev, your thoughts?
Yeah, I'm right there with you. We might see a little bit of a 0.3% on headline. Just kind of keep in mind, there's also a whisper number at 4% as well.
Yeah.
And if you're looking at the Cleveland Fed inflation forecast, they are looking at a 0.4% month over month. And they have actually been pretty much on the ball here. They actually did miss the last month, but for the most part,
Tesla short. Let me look at it before you do it.
So we may see, inflation coming in hot again. But if the market's braced for that, and we already have that expectation, then how much damage can we have? We would have to have another, two standard deviation print in order to really kind of shift this market right now. And we should actually have some tailwinds when it comes to the energy markets. Maybe not for this particular print, but maybe a lot of investors are actually counting that in for the next print for it to be a little bit deflationary as oil has moved to the downside. Heating oil has moved to the downside.
This is that other one.
Gasoline. So I think the market's really kind of just prepared
Sure,
for
buying,
it.
sell, yes,
Actually
yes.
taking the rate hike thought process pretty much off the table. It does give bulls a little bit more room when it comes to these inflationary prints in the near term. But I'm right there with you. Once you start seeing the ball go, we start seeing the ball kind of rolling when it comes to maybe a softening in the economy. That's also going to be something that we will potentially fear. And we have some jobs numbers that actually kind of indicate that might be the start of a trend. And that's not really what you want to see if you're an equity bull right now.
Alex, CPI data is going to be big. We get PPI first this week, kind of a rare thing, and then we get CPI. But we also get retail sales. And as we inch closer
I got
to
an alert system on this one here.
Home Depot that we'll see tomorrow, Walmart that we'll see on Thursday, I look at the entirety and I think, you know what we're going to get? We're going to get data. We're going to get a lot of data. You know that Walmart has big data into the U.S. consumer. Bank of America just put out their spending in April, and their little note came out and said spending went up in April. So we're going to see data this week on the U.S. consumer. Your thoughts on that?
Yeah, well, I just look at what the expectations are. We don't know what's going to be, kind of happen post that. We don't know what the actual numbers are going to be. I know there's models out there, the different big banks, they'll come out with their own thing. But if I just look at the consensus of what everybody says, right now CPI is expected at 0.4% higher. 3
I couldn't do it right now.
For 4 tenths. Let's call it 4 cents. Retail sales month over month is also supposed to grow.
Tesla is at the 50 SMA on the hour and above the 9. It's definitely pulling back. Tesla. AMC new highs. Keep going, baby. That's so hard to look at. Let's see what the week or the monthly. Oh God, $10. AMC said bullish. AMC GameStop sentiment. Where's my? Oh man. Picture my dog. Break it. Break it. We broke the 200, so I'm thinking we're going to be on our way. Just got a little bit of taste of it. If we get back above it again, we're going to be up here at this next resistance. No, you're in them too? Are you hurting like I am, Jen? I'm not hurting no more. Let's break it. What's your average? You can private message me if you want. We got this? Good. Because it wasn't looking good for me a little bit ago. Now it is. I can get out now and be happy, but not green. I hate for it to come back down and try to retouch that shoulder line, because it can. We got two of them right here. We actually got one. Well, two. I mean, but that would be bad.
End of the week, I have a strategy that risks a little relative to its max possible potential. It's buying full butterfly equal distance, so there's no skew to this, Kevin. It's highly customizable, of course, because I centered around 975, which is basically in line with the all-time high.
Butterfly.
Yeah, but you did that for a reason, right?
I did it for an
all-time high.
But this could be any price you want as long as there's strike availability. I also did $25 wide because, look, if you're going to try to pinpoint exactly where you think NVIDIA is going to be, might as well create a strategy that risks a small amount relative to max potential, because it's going to be difficult to project exactly where NVIDIA is going to be by the end of the week. So risk $100 on the $1 debit. Now, full disclosure, I sent this about half an hour after the market opened. Kevin, the stock has turned around from being down about $10 to up $7, and this spread was trading on my last check around $1.70. So that's going to change the dynamics a little bit. It would go from $100 in risk to $170 in risk, and of course, that subsequent reduction in the max possible profit. But if you're still optimistic and you see that trade could potentially still make sense. But as listed on the screen here with the $1 debit from earlier, which was on the board at that time, you're risking $100 for a potential to make upwards of $2,400.
Right.
Now, you have to perfectly pin 975 to reach that. Probably not what you're actually hoping to do. You'd be hoping to make some number relative to that 100. But just even for context now, intraday, the stock's turned around about $17, and this spread has gone from $1 to $1.70 or thereabouts. So you can see kind of how it performs.
It does move.
Even though we're nowhere near 100 or 975 yet. Now, at expiration, your break even, you have a window of about $48 wide between 951 theoretically and 999, which is, of course, $1 away from the top end and $1 inside of the low end. This is a strategy that has a long delta, bullish delta. If NVIDIA works its way up, and you still got a little bit of time to expiration, you can anticipate that this strategy would swell up a little bit, and that's ultimately what traders would be looking to do, which would be buy this for whatever they could, and then look to sell it out for some price above that if they could in the secondary market prior to expiration.
Yeah, Kevin Green.
God, just jump
Short-term trade, not a big debit on this trade. Now, what you can lose on this trade is the debit. Whatever it is you spend it on, that's the risk on this trade. Now, the characteristics of a butterfly, right? It's not high probability, but it's usually you get paid late, closer to expiration. But if this stock starts to creep up towards the old high, Kev, this could be a multiple winner, with the risk being, of course, the debit paid.
Yeah, definitely. Defined risk is always a decent benefit, and then also when you're looking at that $1,000 strike level too, that's a call wall that's there. There's a lot of activity sitting at that particular level, but it would take a significant amount of effort and buying activity in order to get it through that 1,000 level too. So yeah, when you're looking at the risk reward, I think it's accurately, price, if you will, and then there's a good distance, if you will, when it comes to the amount of movement for the stock, and then trying to do this before the earnings announcement as well also could allow the movement for positive price action too when it comes to IV really being spiked up or increased as we head into the earnings announcement. So yeah, well-balanced trade to say the least.
A low-risk, high-reward trade coming up at NVIDIA. Not a high probability trade. It's different from what we normally look at, but it is the fundamental butterfly spread where it's equidistant, it's 1 by 2 by 1, and like I said, like Alex said, you pay a very small debit, but you've got to be precise, and you usually get paid extremely late. You're going to have to hold this probably into Friday to get paid on it. All right, thanks for Alex Coffey, Senior Equities Contributor, for spending first couple segments with us. Now, let's take our second break of the show, come back with our cash tag segment. The two Kevins will take on Landon Swan, and we'll look at Home Depot coming out with earnings before the opening tomorrow morning. Take a quick break. Come back with more Fast Market. See you then.
We're at the 200 right here. Should I get it right there, man? I'm gonna be one happy camper. And it's 11:27 Springfield, Missouri
Wrap
time.
up the trading day with me, Oliver Rennick, for the biggest earnings coverage, 3 p.m. Eastern. It's Market on Close. No place better than the Schwab Network.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Welcome back to Fast Market on the Schwab Network. Kevin Hinks and Kevin Green here now for our cash tag segment. I'd like to bring in the co-founder of Likefolio.com, Mr. Landon Swan, to the show. He's going to give us data on an earnings event coming up tomorrow morning. That is Home Depot. Landon, the real question is going to be, is the consumer, is the discretionary or large ticket discretionary customer hanging in there? Your thoughts, Landon?
Yeah, you're right. That's the key. I mean, when we look at everything that we've got on Home Depot, of course, about half our
higher lows
comes from the professionals and about
to
half
the
of the
penny
biggest
here.
shoppers.
Go.
And what we're seeing, anecdotally and in the data, is that there's been a shift
not
in
give up yet.
do-it-yourselfers from very large projects to much smaller projects. And I think a lot of that has to do with
it is a
the
rising
housing market
wedge. I don't
contraction.
like.
It's just slowing down due to interest rates.
They did it.
3% mortgages and 7% doesn't look
Now
too
break
appealing. I'm
this.
thinking about moving.
Resistance.
And it's just
Rising
it's
wedge.
a difficult time for consumers, frankly. And so we're seeing a lot of people, taking those smaller projects. I think there is some appetite for continued improvement. We're seeing that actually this weekend in the data. People are starting to pick up those outdoor projects. They're going to Home Depot. They're talking
Finally.
about Mother's Day.
Oh,
doing
come on.
things
Now
for
you
their
ain't going
wives,
up.
picking up flowers, that kind of stuff. So there's a little bit of an uptick there this weekend. But, seasonally, when you correct for that, it's
kinda
pretty
sucks.
flat on a year-over-year basis when you look at the web data. If are consumers visiting HomeDepot.com or visiting Lowe's, where they're actually
This don't make
they go
sense.
pretty much in lockstep with each other. We're not seeing a big divergence
it's locked
between
up.
the two of those. And when it comes to
I bet you it's locked
happiness,
up.
they're actually very close as well. But you can see here on the web visits, I mean, those are just about as close as you get it to mirror images of each other. Just Home Depot is obviously larger, but they're trading. I'm sorry, they're moving in lockstep with each other. Mentions, however, are up a little bit on a year-over-year basis, so we like to see that. Again, some of that has to do with this weekend right now, but still, when you correct for seasonality, we're still getting a little bit of an uptick on a year-over-year basis. So people are talking about going to Home Depot more. The happiness levels are very close to each other. These are just 2 points apart.
the hell?
So not a huge difference between the.
I get a big candle like that, you expect it to go up. That pisses me off now. I'm getting mad. I should be up 30, 40 bucks on that call there. Just that one candle. Oh, it's the strangest thing I've ever seen. That's a rip-off error. I should have been out of the green.
Precedent over maybe home improvement, even though again this is the time of the year. So I think you got to have the prices come down a little bit, interest rates come down, and then maybe we'll see it. We'll see an easing for the consumer. But right now the consumer is very, very tapped. I mean, credit card debt's at all-time highs. I mean, the consumer's making less money than they were years ago. And this is a tough time right now. So to appeal to that market is, you're going to see a lot of contraction. You're going to see that, like I said, like you said, actually, you're going to see the number of projects, maybe they're staying the same, but the size of each one is much smaller. So instead of, building something large in the backyard, maybe they'll just redo the lawn or something like that. So it's a tough environment right now. Home Depot's hanging in there. I like them at the price that they're at with this sell-off that we've gotten over the last couple of months, and the data is fine. It's not great, it's just fine.
Fix up the bathroom or take a cruise, Landon.
Is that a good
I don't know.
pullback?
It seems pretty easy to me. Landon Swan, thanks for coming on as always.
I mean, it could be overvalued too, the way everything's ran up.
Like follow your data. Have a great day, Landon.
Thanks, guys. I appreciate it. Take care.
All right, Kev.
Not
you
really.
It's a trade here in Home Depot.
It's respected.
Your thoughts about this company and the.
I mean, that was a good support level right there. I wish I saw that.
Some really good points here, especially when it comes to the consumer. But Kev, just looking at these earnings announcements and having these light guides, we have seen a lot of these stocks actually selling off post earnings. And unfortunately, I think there is some headwinds when it comes to the consumer, especially when it comes to the extension of credit and their ability to purchase durable goods. Knowing that fact, looking at selling a call spread here, looking at the May 17th, expiring this Friday, selling at 360, buying the 370 call spread, doing this for a debit or a credit of $1.30. Max gain for this trade is the amount of premium received, which is $130. Max loss is $870, and then looking at a break even at $361.30. Once again, this is an example trade of having that type of buy the rumor, sell the news type of an event that we have seen all too often when it comes to stocks across multiple sectors, to say the least here. And unfortunately, we have seen Home Depot guide fairly light over the last couple of quarters here, and if that trend is going to continue, this could be a trade to be able to capitalize on that.
Probability of finishing out of the money for the 360 call, 83%. And that's going up a little bit as the stock has softened here, down about $3 as we get to the bottom of the hour here. But Kev, this trade that you mentioned, this, talks, it epitomizes everything we talk about on this show a lot. It's high probability, it's risk defined, it's collecting theta. But the trade-off is your profit on this trade is only the credit you take in, correct?
Definitely, yes. And then the max loss is also could be pretty great as well when you're looking at the risk-reward strategy here. But as you talked about, the probability of being out of the money is really the key that's driving this trade, trying to leverage the time decay as well, or the event risk as well. If we do see numbers coming in line, and even if the stock stays where it is right now, we should have theta decay actually improve this spread as well, and then an individual could go back and actually buy this back. So you are correct. High probability of it being out of the money, but knowing that there's a significant amount of risk as well if we do see the stock pop through the high strike, which is $370.
Again, that's the 17th of May. Short the 360, 370 call vertical. Kev gave a credit of about $1.30. It's trading closer to $1.20 now. But like I said, when it was up around $1.30, it was about an 80% probability of finishing out of the money. Now it's about an 83%. And that trade-off, you collect a little bit less premium. As you know, there's always trade-offs and options. We try to point them out to you on this show so you know them. All right, let's take our final break of the show and come up with our final trade.
Yep, it sure is.
George Tillis will join Kevin and I after a Ben Lichtenstein market update to talk about Alibaba ahead of their earnings tomorrow morning. And the question,
you told me,
is it time? Can we get back in to Chinese stocks? Take our final break. Come back in 2 minutes with more Fast Market. See you then.
careful. No, I still have some. I got out of some, but I still have
Binge
some.
watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on Schwab Net.
I had a lot of contracts, so I sold some of them, but I still have some at $1.05. But not as many as I had. It's not been an easy one, that's for sure. Should have waited. And the SPY I got out, but $150. AMC, I'm still holding on to some of this. I sold my GME. Thought I was making that up for a second. Tup's getting pumped. Tupperware. Now I should have that thing should have jumped. It stood there at 90 cents and it big old fat candle of 50 cents and it didn't move. I don't think I've seen that. A couple times maybe. It's got to hold this double bottom or we'll go down a lot more. Always clean. May I help you? Hello?
Very cash-rich company.
So George, just real quick here, we know that this is an e-commerce focused company, obviously, but do you believe that the market may be overvaluing the e-commerce side and undervaluing the Gen AI side, because they are a major player within the Chinese space when it comes to the artificial intelligence initiatives? What are your thoughts on that?
Yep. So I think it's a good point to bring up. I think there's a lot of activity happening with the AI-centric large caps like Baidu, NetEase, Alibaba. Still, e-commerce represents, more than 2/3 of their total sales. Cloud also is about 10%. Logistics and warehousing, about 10% of their business. But if they do demonstrate some, technological advances in artificial intelligence, their intent to deploy AI in terms of enhancing operational leverage with their warehousing and logistics, that also might be a catalyst. So, look, I think, the whole backdrop for the Chinese stocks is really looking at the valuation. There's been a significant multiple compression in this entire group. Outside of a few names like PDD or Pinduoduo, that has a different story altogether on why that's higher. But I think if you consider the macro and monetary policy backdrop, cutting U.S. rates is going to be significantly supportive of emerging markets and Chinese equities. So maybe that's what the market is telling us with this pickup in the Chinese equities, especially in the last couple of months. If you look at the chart on the FXI, for instance, or even Alibaba, they're both performing quite well.
George Tillis, great job as always covering Alibaba. We'll look forward to their earnings tomorrow morning, we'll take a hard look. Kevin and I, thanks for coming on, George.
Baba earnings
Kevin,
tomorrow.
I have a question for you. Your point about AI and Alibaba. The question is, that brings up the obvious question to me.
It has to go.
Is China and Alibaba in particular going to get access to those high-end chips that they need for AI, or are we going to restrict that? Does that hurt them?
As soon as China gets their hands on some of those high-performance chips,
it's close.
Reverse engineer, and that's what they have been known for in the past here, and I think that's probably why we had that.
You can drop one more time, but I'd like to see it go up and break this. If it goes down, it's going to be bearish.
Now that might be the case that they might have some.
If it goes up from here, at least hits the 200, we have a better chance.
Short interest on Baba, to say the least. It's only at 2.
If it comes down from here,
the selling has been long selling
because we have lower lows, I don't like that.
Either. So there's some long optimism going into the stock, going into the earnings announcement.
Well, if you put up a 3-year chart on the Thinkorswim platform,
and we're getting close to the time where the fat cats will be back.
Alibaba than a 1-year chart does, and you can see how far this stock has come down. Now, if you think there's a recovery underway, maybe you want to look at something. The expected move in Alibaba is about $4.80. We'll round that to $5. And what the paper money trade that I looked at here was something relatively simple. You look at the dispersion between the front month of implied volatility of right around,
because he can come back down to this trend line
expiration around 60,
easily.
And you look
You
at
know what I
the
mean?
90 call calendar, the 1 week call calendar.
He can. I mean, he hasn't respected the trend line yet, so we could see it come back down here and then move on up for the rest of the day.
Stock is having a good day, but this is.
I might get SPY down there if he goes down there. Right now,
a pretty inexpensive
the
way.
20, the 9's above the 21, so that's a little
in
bullish.
line with the one standard deviation move in Alibaba, Kev, and inexpensive doesn't mean there's no risk. Whatever you pay for this trade, that's the risk on this trade, and this doesn't outperform if it makes a huge move in either direction. You're pinpointing that 95 strike, Kev. Your thoughts on this trade?
Yeah, definitely. And not only just putting up the structure in itself here, that calendar also allows you some maneuverability if we do see a spike or if we do see a little bit of lull in activity, allowing you to move that short strike and maybe move it out into a call vertical, if you will. So there's a lot of variability when it comes to this name, but you do have that upside exposure. You have limited risk. And so I'm right there with you, Kev. You're utilizing the short-term IV to be able to pay down the long-term debit here for that longer-term call strike. So once again, it's a decent trade to be able to get exposure with also limited risk.
Yeah, the risk on this trade is what you pay for it. You're collecting theta. Like I said, you're pinpointing that $95 strike, but anywhere close to that, and this trade does well. However, as you know, it is a bullish trade. So if you think that Alibaba, that's rallied 19% in the last month, could back off, maybe you want to look at an 85 put calendar or something other, or the double calendar, as they're trading relatively inexpensive prices. But remember, the risk on this trade and the short options as you go into expiration, there is some exercise and assignment risk on that trade. You have to always be ready for that. But this is a trade that we look at a lot on this show because it's got great utility to it. You can move the strikes around if you think it may make a bigger move or a smaller move. If you think it could be on the downside, it might be the put calendar as well. There's many different ways to play the calendar spread, but in this case, because the front expiration is so much more than the second, it makes it relatively inexpensive. But remember, that doesn't mean there's no risk. There's absolutely risk. Everything you pay is the risk on that trade. I want to thank Kevin Green for spending the last hour with us, as always. Dueling Kevins. He won, I think, this round for sure. For all of us here at the Schwab Network, have a great day. Don't forget to download the Schwab Network app, available in the Apple App Store, and tune in 24/7 on schwabnetwork.com. Stick around here. Alex Coffey, Jenny Horn coming up next with Next Gen Investing. Have a great day, everybody.
Schwab Bank Investor Checking, the checking account built for investors. Named highest in client satisfaction by J.D. Power for 5 years in a row. With Investor Checking, you get the award-winning features of our checking account, plus cash management solutions, all designed for investors like you, with no monthly service fees or account minimums. Unlimited ATM fee rebates for cash withdrawals worldwide, no overdraft fees, and enhanced security features to keep your money safe. Also, because your investor checking account is linked to your Schwab One brokerage account, you can manage your checking and investing in a convenient location. Moving funds between your accounts is easy. Cash moved to your brokerage account is available.
Well, we got Baba earnings tomorrow.
You can stop waiting and start investing in stocks, bonds, money market funds, and more. Get more with Schwab Bank Investor Checking, the checking account built for investors.
No politics, no
no noise, from bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
Ameritrade is now part of Schwab, bringing you an elevated experience tailor-made for trader minds. Go deeper with Thinkorswim, our award-winning trading platforms. Unlock support from the Schwab Trade Desk, our team of passionate traders who live and breathe trading. And sharpen your skills with immersive online education crafted just for traders. Also, you can trade brilliantly.
Young lady who was mid-30s, a couple of kids, recently went through a divorce. She had a lot of questions when she came in. I watched my mother go through being a single mom. At the end of the day, my mom raised 3 children, including myself. And so once the client knew that she was hurt, we were able to help her move forward. Your client won't care how much you know until they know how much you care.
Missed out on today's market headlines? Get caught up and catch the wrap at schwabnetwork.com. Available anytime, anywhere, on any device for free. Welcome to Next Gen Investing. I'm Jenny Horn alongside Alex Coffey. And Alex, we're in a bit of a mixed session today. Actually started off strong, but now the Dow falling ever so slightly, down about 0.1%. So a slow start to this week, another week that's quiet on the earnings front, but busy as far as economic data.
Super busy on the economic data front, kind of coalescing around Wednesday with CPI, retail sales. I think jobless claims will be sneaky, well watched this week after last week's huge jump. PPI tomorrow morning is sort of the appetizer as far as inflation data goes. But you mentioned a light earnings week. I do think Walmart has some market moving potential, as there's a little bit more focus on the economic trajectory after the last few weeks of macro disappointment. Concerns around the strength of the consumer and the economic trajectory. Well, we know Walmart not only is a oiled machine in terms of its size and scale, but it's a really nice barometer in sort of to the lower end consumer. And we also know a little bit more on the kind of middle class to upper class as that trade down effect has happened. So if Walmart's got weakness, it might be more than just Walmart weak.
I totally agree. I think it's a great read on the overall consumer, especially considering it is, technically speaking, the U.S.'s largest grocer. So will be a good read on how consumer prices are faring at the grocery store and all various other aspects of their business, as they have like a reach into everything now. But as always in this show, we'll focus on these individual names. We've got a meme stock Monday to kick off this show. We'll chart and trade our upvoted names. And FOMO today, we're talking Tesla, checking on things to kick off the week with a nice 2% lift here on this Monday. We'll also dive into a Jefferies note where they basically updated their coverage on all of these chip stocks, and spoiler, naturally they still like Nvidia the most, it seems. We'll end the show here with what we're seeing is some revived interest in the IPO market. Thank goodness, after Zeekr went public last week, and it seems like EV stocks still have a place in this market, as it was met with a really warm reception. Shares jumped 35% on Friday.
Yeah, exactly, and we're starting to see a little bit of excitement around Tesla. That'll, of course, be FOMO, so there's still a lot going on under the surface. Am I surprised of a quieter overall market with all the stuff on the agenda this week? Not necessarily, so I'm excited to talk some of these stocks where it is certainly not quiet. That, of course, this meme stock world, not endorsements, not recommendations, as always, of course, for upvote, downvote. But let's try to make some sense of this, Jenny. Not that it needs sense to be made of it. This is sort of what we've come to know with some of these names. But even so, you still you just get this shock, like this sticker shock when you look at how much some of these names are moving. You can see the biggest mover of the group, of course, is GameStop. That'll be our second one. Let's start with AMC, though. AMC, first on my list, Jenny, is up 43%. Almost 250 million of these shares have traded hands today.
And I will say, its short interest has actually considerably fallen. So, I mean, AMC is moving really in ties with GameStop, but we'll focus on AMC here, which I will say from like an overall fundamental perspective, which is always how I try to see these names, is we did see they narrowed their quarterly losses. We saw they reported first quarter results after the bell last Wednesday. Analysts were much more focused on their debt load, though, as there is this potential for upside. I was reading a note out of Wedbush, actually, but there are still challenges ahead. They did expand their market share, and there's a belief it can expand even past their about 22.5% market share in this next year, as they do continue to grow their network of large screen formats and constant movie distribution. They've also been really trying to drive revenue growth in their European circuit with theater upgrades, but again, they have to right-size their balance sheet. Since the beginning of 2022, AMC's paid down $1 billion worth of its debt.
I'll call you. Call me later tonight. Bye.
So that seems to be the overwhelming concern.
ACM's in the news here.
Ahead of its earnings, and we were saying how I believe it's 30%
Ahead of earnings?
less titles have been.
I thought they already had earnings.
So that just goes to show it's 30% less content, and also still foot traffic is down.
Yeah. This is not necessarily a story of the situation when it comes to the business. It's hard to say what has really changed over the weekend. What is there in common between Reddit and GameStop and AMC and Trump Media? The fact of the matter is this is just speculation and short squeezes and excitement in the trading world. There is nothing to do with these businesses that are intertwined other than you see some posts on Reddit, I suppose. But huge move today, no doubt. It catches your attention. $4 stock, so it's not like it's hard to get involved in this name. Basically, any strategy you can think of is on the board. But what catches my eye, just for this Friday, 350% implied volatility. Absolutely absurd. That basically says that this stock can move another $1.30 either direction and be well within expectations. Just absolutely massive in terms of that potential volatility. Another name with equal, if not more, volatility is GameStop, Jenny. This is sort of the epicenter.
There's the knife to the bottom of that trend. It can fall more. It can fall more.
Today, 120.5 million shares.
If it doesn't hold this double bottom wick here.
Oliver, I have a mutual friend named Chad. He texted us about GameStop on Friday. I should have listened.
You know, you should have. Who would have thought that this roaring kitty figure making their return is really what set this whole frenzy.
Us retailers, traders thought of it.
Former marketer at an insurance firm. I mean, it's just like a normal person who's been really credited with sparking this 2021 meme stock rally, made a return to the platform X after a 3-year hiatus.
This ain't good. I knew we were going to get a lot of volatility today.
As high as $38. We've since come back a bit.
But I didn't think it would be this.
So that's what started this all. And who would have thought this one person has so much power? That's almost what's amazing to me. They were considered a key figure, though, in this Reddit rally. They posted that sketch, obviously, of a man.
I'm going to be scalping these things again here.
Popular meme among gamers that indicates things are getting serious. No caption, which is even more, I'd say, epic of this person because nothing was even said.
I think I saw that same meme posted by the PGA Tour in reference to Rory McIlroy winning. So it is a common.
Got a huge expansion pattern.
You've seen that.
2 or 3 of them.
Yes, you have seen that picture before, and the return was met positively. As there's.
It could come back down to here, and that'd be it.
Like you said, there's no fundamental change in any of these companies we're talking about.
Fuck,
but
I don't know what to
as
do.
a result of this, GameStop is seeing considerable interest in volatility and volume. So I love a meme stock Monday.
Look at IWM, golly.
Week for these stock stories, and I guess again because we are seeing some strength kick off this week on the back of, I guess, thank you, Roaring Kitty. Words I never thought I'd say.
Yeah, and this is also kind of highlights an important thing, which is in quieter times, it's actually kind of the kindling for crazy volatility. If you're not as engaged, you're not as exposed.
The guy puts out a tweet, and he's mentioned on Toss and Schwab.
Things haven't gone crazy. It kind of sets the kindling for this to happen. So the same can go in the market. The market typically doesn't crash in a high VIX, and it crashes from a low VIX that goes to a high VIX. So Usually, that isn't a timing mechanism, but sometimes the greatest risk is actually in the quietest of times for that exact reason. No one's expecting it. So really wild start to the week in some of these names, but exciting. And this is sort of the epicenter for what sparked this idea for this show as well. So it's exciting to see this kind of make the return of several years back. GameStop, no doubt, the leader of this bunch, but the new names in the space.
It's a little slow today after that transfer.
The epicenter for the excitement that sparked these giant rallies back in the day was Reddit, now a publicly traded company, RDDT.
It is, so it's fun we get to talk about Reddit now because it obviously had a huge role in a lot of the major upside we saw in these names back in 2021. So yeah, Reddit went public back in March. Shares have been a little bit all over the place. I mean, naturally, I think it's not abnormal to see a name that's as volatile as this has been post-IPO, but they did have earnings and that were all right. I mean, we saw revenue was able to rise 48%, while ad revenue alone was up 40%, and that's really what encouraged a lot of the analysts that cover this name, is that was seen as a really strong area of their growth, as well as the path to profitability. A lot of analysts think they can achieve that given its free cash flow for the past quarter, and that most of its expenses that did weigh on it, the fact that we did see a net loss, that was IPO related. So this actually has the smallest short interest and the most love among analysts. About 13% of shares are sold short. And yeah, Reddit has been around for quite some time, so it doesn't surprise me that this name has a bit more of stability in its nature, just again because it's a platform that's been around for 20 plus years.
The market agrees, 81% implied volatility. We just said AMC, 240%. If you look at all the chain, not just this week, which was 350. GameStop, 235, right in the heels of AMC, in second place in terms of size of implied volatility, and third on the list.
It's a perfect storm for these meme stocks
DJT
right now. If this market starts to, there's been people talking about a crash, and I've been saying we're way overbought, and the liquidity is going to stop. They've printed so much damn money that they're running, the spending is about over with for all their little pet peeve projects and stuff. So I'm thinking, I've been saying it before, way before all these other people are starting to say it in articles and stuff. I'm hearing crash. I haven't heard crash. I didn't say crash, I said correction. So I don't know, I'm just got to be very cautious right now. This week's a very important week with a lot of numbers and a lot of things coming out. And we had the week last week where all we had was just hardly anything going on. So it's like, and still yet we pulled back some. So yeah, we're going to see a lot more megaphone patterns. Right now I'm looking at the IWM on a 30-minute. And we got bounce off the 200, and then we got this 1, 2, 3, 4 down here. I'm going to look at banks, Goldman Sachs. Goldman Sachs is way overbought. Way overbought. 3 big old soldiers right there. Last time we had 3 soldiers, 1, 2, 3, we had a huge pullback to a double bottom. Now we got 3 big soldiers here. So I'm wondering if we're going to pull back to at least this previous resistance. But again, you know, we have number 4 breakout. Then we had 3 white soldiers here, and all it did was just pull back to an all-time double bottom down there on the 3-year time frame. But that was different. This has been a whole move from 280 to 460 in what? 1, 2, 3, 4, 5, 6, 7, 8 months. 7 months, 7, 8 months. And the kind of move we had right here was straight down. This one was straight up. And more. And more. F minus for not listening to my warning. Oh, I was too late. I was already in the trade. That's like saying, Jim, after I go in there and take a shit, Jim, why didn't you wipe your butt with the toilet paper that I supplied you? Instead, you use that one-ply stuff. Oh, God, I hate to lose. And I called this. I called a weak market, so I'm the one to blame. And just for that, I think I will go meditate. Joey. You just have a feeling the market could rip? Well, you got a pretty good feeling.
Than the 50-day simple moving average of volume. Today we're at roughly
rewards points on travel with the Amex Platinum card. You can
feelings.
Yoko's got a feeling.
Trying to forget my feelings of love.
Of the stock market breaking out. Yoko. He has a feeling.
Trying to forget my feelings of
love. Break it.
Feelings for my life, I'll feel it. I wish I've never met you, girl. You'll never come again.
Jimmy. It's at the 63. Yoko had a feeling with a hammer.
Again in my arms.
Break it. Break the VWAP.
Feelings like I've never lost you. And feelings like I've never have you.
Break it.
wish I'd never met you, girl. You'll never come again. Feelings like I've never lost you, and feelings like I'll never have you again in my life. Again in my arms, feeling, feeling,
That was Morris Albert, Feelings, 1975. Ambrosia, anybody ever heard of them?
Allow me to introduce
That suitcase can fit in that suitcase.
Travel Pro Surround Trip, which comes as a set of 2 in 7 different colors.
Gunmetal gray.
How much I feel. This is disco music, baby.
I don't know how this whole business started. Of you thinking
Fat cats are coming back in 5 minutes.
that you're not true. But if you think that we'd be better parted,
I can't tell you how many times I've slow danced that song. I won a skateboard and a t-shirt in a dancing contest in 1976. And I was rated #1 dancer in Springfield, Missouri. In the disco clubs. Them were the days. Now I can't hardly move. Okay. AI. Here's one that I thought was really going to pop one time. This whole movement. Three-year time frame. I got it up to $60 and it came back down and started popping. I really thought this was going to go somewhere. I need 60 cents for my SPX. I'm still down about $100. Tesla. GE. Oh, Amazon. And GE. And did Boeing have some more problems? Oh, God. What's going on with... Something don't make sense here. Oh, age. Showed my age, huh? GE. Unbelievable run this sucker's had. 500% in a year and a half. 500%. Ford. I got 1139 support for Ford and Boeing. I thought Boeing had some more problems. Feeling. All I got is feeling. Feeling. That was funny. I was typing in feeling. No. Damn it. Boeing. I thought Boeing had some more trouble. Nothing there. Virgin Galactic jumps 13%. Space. GME at the 63 on the 5-minute. Call the big guy? Okay. It's now 25 after. Look at the GME here at 63 on the 5-minute. GME at the 63 on the 5-minute. Whoops. I don't like to lose. So we got BABA earnings tomorrow. God, this thing's so cheap. It really is. I mean, it's had splits, so this is misleading information here. I can't believe I nailed that 238. It's almost up 100%. Save. Where's my mess? Oh, there it is. AMC. It's broke out of the channel, and I got an alert that says it's going up. And I don't know what to think. Called this one out at 292. Now we're at 433. Penny stocks are back. Here's the up 2% breakout stocks. We got AA on here, Alcoa. Alcoa had a nice breakout. Cash dividend. Alcoa Corporate declares quarterly cash dividend on the 9th. Yeah. Not too much. Well. Does anybody besides Magnificent want to give me a reprimand today for not being on my toes? Always clean. This is Jim. May I help you? Yeah, I didn't. Well, we did. No, we didn't break out. We pulled back. We're pulling back to the 200 on AMC. If we don't hold this support, and this can't fall. 1, 2, 3, fall. 1, 2, 3, fall. That means it has to hold and then move back up to do a 1, 2, 3 breakout. This is the sweet spot. Getting a little bit of, could be a foul play. Nobody is as brave as me in here, Jimmy. Yep. It takes a man with guts to reprimand me. Took the 130s earlier on mRNA. Wow, Google. What's that mean? When I hear wow, Google, that means it jumped. Correct. Jimmy alerted it this morning with Amazon. Amazon didn't bounce though. It dipped. Double bottom on C, triple bottom. Fat cats ain't getting nothing done. Apps has no, man, all these stocks are jumping with no news.
we saw, even it was last week, where initially we thought that ChatGPT 5 was going to be announced, there was going to have some search engine capabilities and things of that nature. It did drop Google's stock price, and then Sam Altman refuted that. And we saw that move back to the upside. So there's a lot of volatility across this whole sector within this whole industry here. And it's a great time to be alive, to say the least. Technology unfolding right before our eyes right now.
Especially if you're like a tech nerd, like I think I am, and I think you are as well. It's like there's always something to talk about, and I agree. It's like the market right now, I just think wants the next best story or the next best improvement or vast technological advancement. So it's fun to watch, but it's sort of hard to make sense of some of these moves, especially when you see fallout from what
7777
shares, like in some of these instances. But we will leave it there. Great insight, Kevin Green, senior markets correspondent for the network. Now, coming up next, time to talk actually some of those names that have some degree of actually impact with all things AI and the open AI advancements. So those are the semiconductor names, which NVIDIA continues to be the most impressive, although shares just up modestly on the session. Renita Young will have more on this analyst note for us coming up next.
Trading the trending names every day. I'm Tom White, host of Fast Market, ready for you, ready to go at 12 p.m. Eastern on the Schwab Network.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a week.
Used to install Windows. Get ready to break any second. GME. Wow, 47. The $30 strike has 46,000 contracts.
Do with some of this commentary coming from Jefferies. Now, Jefferies on a whole
I'll be right back.
Long term on these chip stocks, believing that they're in for another big rally after a little bit of a pause with some of them. Some of them even receded a little bit from their highs. But in short, this analyst feels like investors should buy on the dip, essentially, and that it could be a pretty good buying opportunity, and that chips are still pretty early on in their cycle to see a huge rally and to see all of that success. And that these three that I'll talk about are particularly important because they'll be stronger with AI. So the analyst over at Jefferies did change price targets on many more, but I'm talking about NVIDIA, Applied Materials and Texas Instruments. Now, NVIDIA, of course, is the favorite. It's everybody's favorite. And this analyst actually said that it's the favorite of the company. Jefferies assumed coverage with a buy rating and boosted the price target to $1,200 for $780. And this one has been trading in a little bit of a tight range over the past few months. And NVIDIA, it's still expected, however, to maintain its dominance over the other chip stocks, but we can look out for more because it reports earnings on May 22nd, and it is expected to see earnings jump more than 400% for earnings per share year over year. So let's go on over to AMAT. Or no, you seem like you have something to say.
No, I was just shaking my head. It's like one of those situations where you get a video game, it's a sports game, you create your own player, you break every single record ever, you win all the awards. This is video game numbers for.
I just have a few calls left, Jen. That's 60 cents. Got a Head and Shoulders. Lowest support I had was 52.1787, and then we double bottomed on that with this head. So I'm just not having much hope today. I have two contracts at 115 average, but now they are 22. I would wait, if you're going to add, unless you just want to get out of them, I'd wait until we broke the 63. And then maybe the 200 means they're so close to add, but and then what's right now, it could be another hour before they start to move. I'm glad you didn't do what I did. I went a little too deep. And I had to put a lot in and had cheap to get out close. Your entry was far much better than mine. 115 average is what I had there for a while. Who has 30 contracts? Yeah. That's $3,000. And I didn't want that many. I only had 5 to begin with. So, I don't know what... You're one thing... You're probably too far out of the money to be adding anything to this. I just wait and see if they want to rebound, or if you can spare $40 loss. Because you might get a little bit more back out of it. But I'm not very... I mean, this thing can fall back down to this trend line. It could fall down to here. I want to listen to CNBC and see what them nuts are saying. And I promise I won't cuss nobody out. Promise. Stagflation. Just see if it holds this shoulder line, this Head and Shoulders, inverse Head and Shoulders, and runs back up and hits the 200. Because that's where your resistance is for right now. The 200 SMA. I got 60 cents. I don't have 30 now, I just have 10. TSM's down. Let me see what's on my percentage losers today. Canada sector's up. Hillary.
Welcome back to the exchange. Home buyers are still under pressure with mortgage rates holding steadily above 7%. A report from property data provider Adam says 1 in 37 homeowners now have mortgages that are seriously underwater. That number's up from the prior quarter, although still well below the pre-pandemic average of 1 in 15. So we're taking a look at the opportunities in the housing trade and one name to avoid in that sector. Joining me now for 3 Buys into Bail Home Edition is Ari Wald. He's the head of technical analysis at OpCo. It's good to see you again. Welcome.
You as well.
Let's start with Home Depot. They're reporting tomorrow morning, so that's kind of putting us in the mood here. Those shares have largely been moving sideways, about 10% off their 52-week high from back in March. And JP Morgan is warning that this late, wet spring and some headwinds in the pro segment could hurt earnings. But are you a buyer here?
I am. I think there's enough here, and granted, it hasn't really been relatively strong either. But with that said, it is set up tactically attractive with a very minimal downside risk there. I think it came out of an important base last year. It's coming back, testing the breakout level, and so I can measure risk at 335. That was very often former resistance becomes support. That's the 200-day average. There was a gap in the price there from a couple weeks ago. I think that's a key level. I think as long as the stock is above that level, it's a buy, and I think it moves higher.
Interesting. Okay, so we'll keep our eyes on Home Depot, and maybe, I mean, I do see so many people still working on their homes and that kind of thing as they're kind of stuck where they are. Well, let's move on to Carrier Global. That was the mystery chart. Those shares of the HVAC company were at an all-time high on Friday. They reported Q1 results at the end of April. Management said those repair and replace trends remain strong. You think this one is a breakout candidate?
I do, and I think the common theme here is that we are constructive on market conditions, and I think you want to be in these areas of the market that typically outperform in a rising market. So that's going to include housing-related ideas, and Carrier is what we would call, it hits the trifecta at the firm. It's outperform rated. Thematically, we like the industry, and it is a fresh breakout in the stock's price. It ran right up into that $60 level last summer, which it's been held back from since 2021. It's been consolidating there, finally got through in recent weeks. That's a sign of new demand coming into the stock. Typically, you'll see price accelerate at that point. I think you want to stick with the one, buy more on pullbacks because we see little identifiable resistance on the upside.
It's so interesting, and I love little windows like this sometimes into the economy because you think everyone's warning about a consumer slowdown and stagflation and the market momentum, and yet you have such positivity on a name like this. Can those two things both exist at the same time?
I suppose so. I mean, I guess it depends on what's framing your rhetoric on market conditions. I think it's more constructive than that. I see more of a not too hot, not too cold backdrop, and I think that intermarket stability is going to be good for equity prices.
Okay, let's move on then to your final buy, which is Tri Pointe Homes, the home builder.
Kelly,
shares have nearly doubled since
she's
2021.
Back.
Wedbush says
She had a
higher
baby.
prices and lower incentives are potential catalysts for the stock. Catalysts, higher prices. Why do you like this one?
It's another more of a mid-cap home builder. We covered.
She gives a fresh scent to what we had to deal with.
Generally speaking, we've looked back. Once the cycle's leadership is established, they continue through the balance of the cycle. And we think this is the second year of a bull market that has room to run. here's a stock that's already out to new cycle highs. The market tape hasn't been able to do that. I see that as an indication of relative strength.
Okay, you're not talking about what we want to hear.
In particular, you're seeing some notable move. The large cap versus the FXI ETF is moving quite a bit.
Save is up today.
Alibaba's higher, JD. So I think if you just back down this macro element or catalyst that's going on in the Chinese stocks, I think ZK is participating as part of it. And so again, that's why I think it's moving pretty substantially today. The news today isn't really meaningful. You have to consider that even though they're growing their sales, their losses are still quite large, around $1.2 billion. But if you look at the sales last year, the losses were about $1.1 billion. So they're growing their sales a lot faster than their losses, and that's what you want to see. But nonetheless, they're still losing money, because if you look at the $200 million in shares that were issued with a $1.2 billion loss, it's almost $6 a share in losses.
And that's a good point as well, George. And I think also important looking at these like post-IPO names, like it's a long path to profitability in most cases. So it's a longer term story definitely to watch. But appreciate the breakdown as always. And I just like to see a name that is seeing some positivity for post-IPO. But George Schultz, as always, appreciate.
Higher level. No, I don't ask for much, but today I'm asking for something. I took all them bugs out of them lampshades yesterday, and I had to put in overtime for nothing. I got paid for free. So would you take the SPX and the SPY all the way up to Liberty and hit the 200 SMA? I want to see 60 cents, and then I want to see $1.20. Breakout. I don't know if we're going to get it, because we got all these mixed numbers coming out this week. Break it. Hannibal Lecter, trading stocks. I got Dow. I've gone through a lot of stocks today. Nothing excites me but AMC and GME. Save. And Baba. Is Baba already priced in now? We got a flag here. I mean, we're looking bullish on the tech. Baba's about ready to break the 200. I'm seeing something. I think the music helped. Baby. Where's my other watch list? I got 220 in gyms. Hammers, 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 hammers. I don't recognize them. They're CRL. Percentage loser. Mullen. Kava. That's another one. New IPO. Y10. It had a breakout a couple days ago. Man, I was in the IRS building this morning. Boy, them people were griping. Come on. I'm glad I don't work there. They got this. I like this girl, but she's kind of strange. I like strange people. I mean, unique. I like unique people. And this girl's real tall, and she yaks, and she believes in Martians and things like this, and aliens. And she's the secretary. So you know the IRS is hiring a bunch of people. Anybody can work for the IRS. If you're homeless, you put an application in, you can probably get a job. So the ones that work there behind the desk, the people come in and they do their, look up their tax stuff. They don't like the idea of this girl coming in and working next to them, because they figure they're going to have to sit there and babysit her all day long. And she's got a secretary. She's got a juicy job already, where she just mind her own business and be herself. But now she's throwing herself in front of. Boy, they were raising up a storm this morning. I don't want to work with her. Then when she comes in, they're all quiet. I've just got to keep it to myself. I usually yak with them, but this time I didn't want to say much. It's been a long time since I worked by anybody, probably since 1984. I've been on my own ever since. Just imagine what it'd be like to have to work with people these days. There's stocks above 10%. She was American. McDonald's going down. The $5 meal, man. Okay, now listen to this. So Wall Street gets after Elon for lowering his prices of his cars so he could sell more cars. They don't want to trade it because of margin. So McDonald's runs up on a $5 hamburger meal deal. That's cutting the Big Mac $15, man. $18 for a Big Mac meal. I'm scratching my head. Why did the stock run up? Why did everybody like that idea? Oh, mini Happy Meal. I can't wait to see what it looks like. I want to grab one. Say, I eat here once a year. May I have the mini Whopper? That's about the size of my hamburgers anymore. I used to come in here and gripe because a head of lettuce was $5 a head. Now it's $2.50 right before the election. That went on for 2 years. $5 frickin' bucks a head. I don't eat there either, Florence. Once a year, that's it. I've done that for, man, I can't remember how long. 20 years? Ever since I've had this business. I refuse to eat with the commoners. Okay. I'm trying my best to get this thing to go up. Groupon is another one that I traded at one time. Wow, it was down to $9. So they're right. The market's moving around. Got out of tech and went in other directions. Spy. Okay, I think we have some hope. Breakout bull flag.
Safety. People are not ready to get out of this market, so they're rotating into defensive names like Staples Utilities.
I just said that.
If you and I had this conversation in December,
that's crazy. I just said that. People don't want to get out of this market. They got out of the top and they put in rotating. Who is this guy?
Back in stocks that have been beaten down. Watch XLRE, the real estate index. That's the one that's the only index that's down. Will we see a rotation into that? Are people going to try to find bargains there? That would be surprising, but so is utilities. Then if you look at utilities, there are three that really stand out. American Water is led, by the way, AWK, but on the utility side, the electric side, Southern, SO, Dominion Resources, or Dominion Energy, and then there's Terra. These three names are looking great, not just fundamentally, but technically. And then there's this AI story.
Man, look at that.
You kind of roll your eyes when you hear AI, but these AI, these data centers need to be powered. And there is proof that they're just going to grow exponentially, and the power grid's going to be tested, and who's going to benefit from that? Are these utilities? They're looking good.
We've also been watching, obviously, Bitcoin, which is sort of sitting around its levels. Cannabis, everybody's waiting for that new regulation that'll get downgraded, and it's how severe it's treated, right? It won't be a heroin type drug. It'll be a it'll be a 3 instead of a 1, basically. So some of those stocks have been doing a little better. I'm just trying to think out of the box, whether it's commodity.
You know, I've heard that cigarette smoking is just as addictive as heroin. Cannabis ain't addicting. It's a mental addiction. But I heard cigarettes were just as addicting as heroin. Cannabis, I can quit that over just. I get the right church girl. I'll go like that. Piers Morgan interviewed Stormy Daniels. I sent him a message. Are you getting that desperate, man? I just couldn't believe it when I got up on that. We were at the top and that thing jumped 50 cents and the stock didn't move. I'm going, what the heck? I could have got out real green on that trade on the SPX, and it didn't move. It dipped. I didn't understand that. It has to do something with some kind of ratio or something. I'm sitting there watching it, and I had to switch platforms, see if it was froze. Make sure you're drinking your water. Sorry, YouTube, I just ain't been doing good today. One of them days. I mean, I've done okay because I had AMC and GME, but SMY, but I mean SPY, but SPX, I got burnt. I thought we were going to have a good Monday. Monday. It's a deer and cat. And Lily. And Lily's off the 200 on the 1 hour. Had a nice pullback to the 200. John Fieldy, CEO of Celsius.
Empower your portfolio with the Schwab Network.
AMC, baby. Oh, damn it.
Ever had in Berkshire Hathaway.
Right. So at this point now, and this is exciting now to get ChatGPT onto the iPhones with OpenAI, this new deal, which obviously is a big deal as we start to get more details on it. Dan Ives calling it the golden goose for Tim Cook. XLE and Apple, you would probably, you'd buy the ETF, you would buy Apple, And you think both of these can move higher to the tune of what, 10%, 15%? Over what period of time do you hold on to these?
Well, I think that the energy sector, because there's no other option, I think that that's going to trend in the right direction here for at least the next 5 years. You know, we're having a real challenge right now in the United States with these EVs. And by the way, for full disclosure, I own two. But the point here is that we've got to power AI. We've got to power all these cars, and of course, there's heat waves and everything else that are going to be coming in the middle of the summer here. And so again, oil is definitely not going anywhere. What kind of an upside could we see? I think that we break $100 by the end of the year in oil per barrel, and so that's trending in a direction that is not favorable for the U.S. consumer. As far as Apple goes, that's up in the air. I could for sure see another 15-20% year end if they can get this integration and they can get people excited about what they're doing and what's going on. The challenge they're going to have, though, is that if the consumer is slowing down right now because of record deficits in credit cards, highest interest in credit cards, layoffs that are absolutely happening right now in the unemployment, I think that Apple could see a little bit of a staggering environment from that standpoint, but I believe that they are positioned very well, and those mass adopters like myself will take advantage of it.
At the end of last week, we started to get some breaking news about the Biden administration looking closely at clean energy and raising levies possibly to the tune of 25 to 100% on the likes of EV and solar and batteries, things being produced out in China. And I guess theoretically that could be a good thing for a name like Tesla, maybe, I don't know. But since you do own EVs and you like to drive them, it sounds like, and Tesla's been beaten down, right? It's down 30% this year and sitting at 171. Do you think there's opportunity in a name like that, or you're too afraid to touch it?
Yeah, great questions. So I bought 2 used Teslas, by the way, but they were just 2 years used, and got great value out of them because the price went down. So that was the reason why I own them. They're a lot of fun. But when we're looking at the price of Tesla right now, I would say this. When we started 2023, Elon Musk had to purchase Twitter the year prior. So what was happening is a bunch of owners' shares were being divested and put into the market. That was the first time that they were being picked up. So that was new supply that met the demand that was there. And then ultimately, when we had the Inflation Reduction Act, that added another $7,500 per unit that was being sold. So that stimulus saw an amazing run this last year. I don't know if it's as sustainable going forward, but I'll say this much of Tesla. Of all the EV automakers out there, I believe that they're probably the only one that's actually going to remain profitable and be able to stay in this business. I couldn't imagine purchasing an EV and then that company goes out of business and I can no longer actually get my car serviced. That would be a horrible situation. But just even look at Ford right now. They were losing so much on that Lightning, they stopped making them. And so, I ordered the Hummer a couple of years ago. It's never come out. I don't expect that they're going to be calling me in anytime soon based on GM's issues last year with employment and all the strikes that took place. But, hey, yes, there could be some tariffs that could help U.S., manufacture, but that ultimately comes back to the Biden administration again. Will they allow permitting? Will we allow the lithium mines that are here in the United States to actually get mined? Or will we just outsource that and allow other nations to do it, believing that this is the cleanest way to do things, yet it's too dirty for us in the United States to actually be doing?
All right, David Straszewski, thank you. Sound Planning Group. Thank you, David.
Great. Appreciate
Up next,
you, Nicole.
we will take a closer look at some of the top performing ETFs that you want to maybe keep an eye on. These are the best performers in 2024. And some of these names do give exposure to gold and the cargo and ship industries. We'll talk more about it in a moment.
My dad was a hard worker. He used to do side jobs installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before them.
Your dad instilled in you everything that I ever wanted to be. And look at you. You're a president of a multi-corporation, and I clean toilets for a living. I wish I had a dad like you. Well, this thing ain't moving, and it's now at 2220, and it's going to go to 2222. Too far out of the money. Doo-doo. This squeeze been waiting for this for a long time, these kids have. On AMC. Roaring Kitty doubles down on his post. Kitty, 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 kitty. So I never heard of this Roaring Kitty. Now I know who Roaring Kitty is. Ain't that the cat's meow? What happened to my YouTubers? AMC, I sold some AMC mannequin. You see my resistance channel on AMC? Pull up the 4 hour. I think there it is. AMC, I sold some AMC mannequin. Whoa. Support channel, resistance channel of 492 to 511 today. See right here? You had that high right there. So that was the first resistance, and then the top of that channel is the second. So that's a resistance channel at 492. This squeeze, people have been waiting for this for a long time. If you can count to 3, you can trade with me. If you can count to 4, you just might make a little bit more. Don't know if I want to count that one, but I will. 1, 2, 3, 4. 3 white soldiers on the 4 hour time frame. Wow. Ding, 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 492. I'm going to say it. 3 white soldiers. Jen, are you mad at me? Am I going to be able to have dinner tonight? Nope, no dinner for you. You'll eat dog food with the dogs. I saw something where some girl tried to bleach her husband in her coffee every morning. Yeah, Jim, you miscalled a trade today, so I must consider poisoning. God darn it. Can't you spell time right? How embarrassing. Can't you can't spell hour? I'm making up new words. H-O-U-T. There's probably a word. Oh! I think Jimmy hit 492. Man, that's perfect. $5. We did it. God, this is incredible, man. I didn't think. Whew. Take a deep breath. A little help from that, whatever. Man, anybody? Netflix is up today. They're still buying. There's 1,000 shares there. 2,000. Someone sold 4. Another 2 sold. Watching the tape. This is a learning experience. You can see what kind is going through the tape. They want 521 out of it. People are asking 514, 510. Yeah, they got rid of it. They got rid of it at 514. And I got 511 on here, so I'm going to see. SPX above the 200, but that didn't help too far out of the money. Unless you get a big pop in the close. Sneaky Snake meets Roaring Kitty. That's right. Apple hot today. Yep, Apple's got some kind of news out. And we'll go get some more water. I'll be back. Hike.
halfway through resets. So the biggest opportunity for us is in convenience. That's where 70% of energy drinks are sold. We're backdooring the energy category here. Started also as a fitness, health, and wellness brand, and now we're positioned for more broad mass appeal. That's going to be the biggest area. So more cold placements, better shelf placement. And
Apple double top.
A quarter at 11.5 share. Just
Off
the
a
other week, we
setup.
finished at 11.8 share in the category. So the brand's really resonating with a much broader consumer than ever before. We went into Jersey Mike's and Dunkin' Donuts this year, so food service could be a big opportunity for us as well.
Yeah, I mean, that's the whole thing too, because some of it is like if you buy it
Lemonade's
on
up.
Amazon versus the convenience stores, but you certainly have great placement. What do you say to the naysayers who, you know, you've had incredible growth, maybe it's going to be slower growth? I mean, you beat on earnings per share, you had a miss on the sales because there were some high expectations, or some would say. I mean,
Rivian up $1.
But you're still showing incredible returns. I mean, 1 year, the stock's up 100%.
Had a 1, 2, 3 breakout.
We missed some estimates in Q1, but you really got to look at the sell-through data. The sell-through data is super strong. It's never been stronger. The miss is really the balancing of inventory with our major partner, which is Pepsi in North America. So, growth story, we're in the fastest growing category in food and beverage, and that's energy category. It continues to grow. Mintel says it's going to grow about 8.8%.
That's a 90. That's a 90% gain from my call at 292. These are options. The GME's up also. We got 11,000 down here at the $12 mark. June 22nd. Not that many people playing the options. 100, not darn, $8, 3 cents, 100K. Well, it's 107K there. 3 cents to 65. That'd been a tough trade, tough one to pick. $5.40 something. Yeah, 967 is the 200 SMA. We believe that banking institutions are more dangerous to the liberties of, Thomas Jefferson. Let's go spy, let's go. Let's go spy, let's go. I'm still in the... You should be bearish. Yep, today's not the day. It's
growth in EPS and our margin improvements. We saw optimization of our balance sheet, saved about $47 million within our inventory levels. So really, it's gaining further efficiencies as we grow and scale, and making sure we keep everyone motivated. The brand is doing extremely well. We're here. We have Jake Paul, Mike Tyson today. They're kicking off their press tour, so we have a big presence with Jake Paul. That'll be really exciting. Getting ready for the Palm Tree Festival out in New York here. We got tons of events going on across the country, and we just finished F1 in Miami, and we're partnered with Ferrari. So, we're team's doing really great.
Yeah, I mean, just quickly, yes or no, because we've heard from McDonald's, we've heard some of these other big, they're a little worried about the consumer pinching the purse. Are you worried about that, yes or no?
I would say no, not in the category of really that we see. We have a loyal consumer. We're mid $2. I think you're going to cut something else out of your, off your list before you cut a Celsius.
All right, John Fielding, CEO of Celsius. Here's another great quarter. Look, the shareholders are happy, up 100% in 1 year, basically. Thank you, Celsius. Up next, we'll take a look at big box retailers. Earnings are due out. We'll look at names like Walmart, Home Depot, more. The watch list. We'll be right back.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
Privileged? And you're black? That's just un-American. We're all privileged. I know that for a fact. You can be whatever you want to be. I'd say that was a pretty good call. I called that this morning. 492 to 511 and hit 548. These pumps, man, this could go to 9. This could hit the 200 on the daily. I want to see if we can catch it off the 439, off the 200 on the way back down. There are a lot of people trading this. A lot of people that were sitting on it. I know some that made some good money probably. And I know some that made some good money on. I've been talking about these two stocks for 2 weeks now. GME and AMC. I did a video on them. I did a lot of videos on AMC. I talked about AMC and GME being the old meme stocks when they were at the bottom. And I talked about Reddick and the Trump, the Donald, being the new meme stocks. I mean, I watched this thing drop all the way from $18 to $2.38, and I patiently waited. My last entry is $2.92. I think these penny stocks, for the first time in years, are starting to look better. And I think it all has to do with that rotation. Because we had such the huge run, the over irrational exuberance run on AI. Now they're pulling back. You don't hear them pumping the video like they were every every single day. And the video's going to 1,200 today. See another snake right off my trend line. Snake, breakout, pull back, boom, double top. Every day, make a trade on AM NVIDIA. I just feel so bad about SPX. I think I'm going to retire tonight, unless someone talk me out of it. This was uncalled for. No retirement, please. I was waiting for that. So, tomorrow's watch list is going to be above 2%. And then I got another one in here for the top 10%. There it is. So I'm going to do a video on these two here tonight. Invax was up $4.36. Then you got TME. Wasn't that one? TME, wasn't that one of them meme stocks? TME? Oh, 10 cent. Yeah, that's... Oh my gosh. Hey man, 10 cent. Did you ever hang out at Diddy's place? I know you did. I met 10 Cent one time. I was in Virginia Beach, Chicks Beach, and I was playing a concert there. I was the 11th member of the Shiners, and I walked downtown with my washboard, just hitting on it, and this bulky guy about my size comes up a little bit bigger. Hey, nice washboard. He had a crowd of women around him. I didn't know who he was. I said, who is that? Well, it's 10 Cent. I said, who in the hell's that? Yeah, here's one we missed too. Well, they say it's best to retire when you're at the top. One failure, I'm destroyed. 10 Cent, nice run. Okay. Are you cooking up pizza? Well, the kid's going to get happy today if he was able to add on. And I can retire after GME goes to 10.
High beta, and momentum is a factor and is a style of investing. High beta is the stuff that generally swings around more. Momentum is the stuff that has been winning. Sometimes momentum trade is also the high beta trade, but it doesn't have to be like that. Right now, the two are a good bit different.
Jeez.
The momentum trade has a lot of chips and semiconductors, and today that group is mixed.
Crazy.
Nvidia's still stuck around $900. The higher beta
All the day, all of a sudden, it
is
just
a little
wakes
more
up and
in line
boing.
with some of the meme type of action that we're getting with a few of the wild swings overnight and a couple isolated specific trades. One of them was Bitcoin. Bitcoin oftentimes overlapping with that higher beta category, and indeed it's a
So
strong
Bitcoin's
beta
gone down?
see, but it is still very much in the realm of catch-up. Here's the chart: lower lows, lower highs, still in a downtrend off the highs. Going to need more than a bounce in Bitcoin. You're going to need a real reversal and a push above at least 66, 67 to start contending with the previous high.
Bounced right off that 511.
It's definitely got its work cut out for it this week. In the whole category of risk assets, Bitcoin's been one of the softest here, while stocks have rallied back over the last couple weeks. So that's one thing I'll be watching very carefully this week. Now, today you've got some news coming from a few of the AI software developers, so we'll talk about that in a moment here. Alphabet had been soft throughout the day, but is catching a bid. Early it looked like Google was down because of the reports that Apple's iOS may use OpenAI instead of Alphabet's AI. My point was that, would you really expect Apple to use Alphabet's tech? I'd be kind of surprised. However, look at the bounce back that you're getting in
We're in
ARM.
power hour.
That's pretty
This thing
good,
just
you know.
keeps going.
There is definitely some strength in some of the AI-related names, though Meta and Microsoft both marginally down on the day, and as we'll see here in a second, NVIDIA also basically up. So this category is a little sluggish to start the week. You need it to keep going if you're going to get the momentum trade to work. So ARM is encouraging there for the chip bulls that maybe we can get something started this week still. And then finally, I'm watching gold today, which is slipping again, but I'm even more closely watching a different metal. It remains copper. The move in copper extends today to start the week, and you can see the rally in China too.
This is our third bear flag, but it bounced up all three times.
Side of the China comeback. It's been a great trading opportunity, and it looks like it's extending next to copper. I got Jenny Horn and Kevin Hinks here with me in studio. All right, Jenny, tell us about the OpenAI stuff first, because that was kind of one of the main things on our calendar this week and this afternoon was hearing about GPT-4.
That was cool.
Oh, I believe that's how you say it, but that's the latest.
So the one, the $5 strike.
This was available to unpaid customers, meaning anyone that has access to it. This is based on, based on the company's demonstration we saw earlier today. It will
$4 strike.
ChatGPT into this digital personal assistant, which can engage in real-time spoken conversations. It also will be able to use text and vision, meaning it can view screenshots. I think this is actually the coolest thing. View screenshots, photos, and documents and charts uploaded by users and have a full conversation about them. So it's that intelligent. It also can learn from previous conversations with its users and can do so in real-time translation. But they did say during this live demo,
it said no, it rejected
really
it.
making a huge step forward when it comes to the ease of use.
See what this last candle says.
Much more natural.
We got
far
two
from
inverted
consumer.
hammers
I think
in
trying
a
to have
row.
that mass appeal, I think there's still like a massive hurdle when it comes to getting like the average person to be interested in AI, because it just seems a little bit too high tech. So they're trying to make it easier to use, but it does also come, I did realize the OpenAI event is that day ahead of Google's annual I/O Developer Conference, which is tomorrow. So we actually have a few catalysts specifically in the tech world this week that I just, even though they're not earnings, they are still market making, type events.
Yeah, and then we talked this morning about how Alphabet was under pressure. They've come back throughout the day. That kind of makes sense to me, especially with their event right around the corner, because they've got
He has it rolling big time.
tech and products that they're using to compete. But there is really a deep competitive nature to this part of the AI story, which is programming.
I just started following him yesterday.
It's basically been like the OpenAI stuff online that people can use, and then Microsoft Copilot. So it seems like we're going to start to be getting real tangible product news this week.
No partnerships were disclosed though on this during this event, which I thought was interesting,
Okay.
given the Apple news that they could be adopting ChatGPT into their iOS 18. So no mention of that, which I think was maybe a disappointment, but I'm sure we'll get more updates on that come June though.
Okay, and here's what's exciting is to your left, it looks like we have Kevin Hanks, but it's actually our GPT model we have replaced and updated. It's Kevin 4.0. What do you say, sir?
Twice as fast at half the cost. Whoa,
yeah, okay, all right.
Whoa. No, that was the ChatGPT quote today. It's going to be twice as fast at half the cost. You know what?
And your tagline from now on.
The gold rush continued. Yeah, except I flip it.
Yeah.
Half the speed at twice the cost. Can I get that flipped?
Inverse productivity.
Exactly. I think this is the good news that we're seeing with AI now is that it's like a gold rush. Everyone's coming out with new products, and they're going to start. They said 20 companies worked on this for under a year and came out with this. And so this is a quickly moving target, AI right now. But when you hear things like this, Oliver, what's it going to give you? Winners and losers.
That's kind of where I'm wondering.
That's coming more into focus now.
That's kind of the point I was driving at, because the performance has just gotten a little mixed since we lost the explosive hardware trade. Hardware trade has not gone down. Nvidia's sitting at $900, but until those earnings come out, the focus being on the software, the products, the services, it's just a little less obvious how the impact on the market of that is going to be, since there's so much competition among these big names.
Alex Coffey and I were trying to figure out why Meta is so weak today. Is it because they're on the outside looking in at this, or not as involved in this, with the news of the day? I wonder.
Yeah.
So that's a big move in Meta.
Meta's been a little heavy here today for sure. The other stuff going on is the return of like the meme stocks. This is mostly just the GameStop story, because Keith Gill tweeted again, so everybody's really excited about that. We're at 31.50 right now. But what are the thoughts, Kevin, on how to trade this stuff when it comes back? I mean, we're back.
Now, full disclosure, there's been stocks that have been swept up in news before, but in my career, none of the percentage movers that you're seeing in these meme stocks, and I don't go near them, Oliver. It's just not my momentum. It's not my expertise. Trading momentum.
You don't want to trade on a meme?
I don't.
You want to trade on a GIF?
What is that?
It's a guy getting serious. All right.
Is that what that is?
That's the meme.
That's
the visual representation
no text,
of
no caption yet.
Held the bid pretty well today. Not much of a fade, to be honest. It's actually been grinding back the last couple hours.
It's come back. It was down like $4 earlier when I talked about it. Now it traded as high as 38.20, and then now coming back a bit. Hey, 81%.
Yeah.
Now it's positive on the year. It's positive over the last 12 months, just on a one-day's move.
Yeah. All right.
There was a movie made.
Exactly.
It wasn't named Smart Money. It wasn't named Smart Money.
Right. Well, that's the catch, is that ultimately a lot of,
I like to bring back the meme trade on this Monday. This is a fun way to start the week.
For volumes.
Hey, we're out of the single digits now for GameStop, okay, over the last week. Appreciate Jane. Thanks, Kevin Hanks. Let's bring in David Miller, CIO and co-founder of Catalyst Funds. Let's broaden our conversation into structuring a portfolio. He's joining us from the New York Stock Exchange. David, thanks for being here this afternoon. Tell me about your guys' fund, ATRFX, because what I understand is it's kind of a one-stop shop solution to a portfolio construction. Is that right?
Yeah, absolutely. So this Catalyst Systematic Alpha Fund, it's won a Lipper Award for best-in-class performance over the past 5 years. The whole idea behind this fund is we think people have forgotten about modern portfolio theory. You know, what won Harry Markowitz the Nobel Prize in Economics for basically proving, you know, what he called the one free lunch in finance that could both substantially increase your total returns while helping with your downside protection, which is diversification. But we think most people have it all wrong. They think about diversification as like owning 500 stocks. But you know, if you own 500 stocks, that's like a football coach going to their team and saying, just play offense. Defense is a total waste of time. As long as you play a great offense, you'll score far more points. And you know, no football coach in their right mind would ever say anything like that because they'd know exactly what would happen if you don't bother to play defense. And yet, if you think about it, you should be able to do dramatically better if you have an offensive strategy that makes good money in bull markets, and you pair it with an overlay of a defensive strategy that should do its best in bear markets, but also makes good money. And
in other words, there is always a bull market, just like Jim Cramer says. Always a bull market, and I've always had that attitude when I trade stocks. I come in here, and I know if I catch a knife, today was not my best day for the SPX, for sure. But I made it big, you know, it still wasn't my day. It turned out a lot better than it could have been. We got a lot of numbers coming out this week. We could get a lot more volatility. The SPY. We pull up the weekly time frame. We'll clear this all out. So we're still above support. We're still above support right now. I mean, this is it. It can't go much lower than this. If it goes lower than this, then we're going to probably pull back to the 9. Let me draw that line in there. It's close. $5.2085. Yeah, I'll take it. There's $5.2085. So if we close above it, that's going to be a good thing. I mean, it's so clean. It's so fresh. If I just waited, we had the double top. I thought I could take it off to 200 or somewhere around here. I forgot where I got in at. But, I mean, you got your triple bottom and you got your double top. And you got your pivot point. I mean, it's so clean. You got your 1, 2, 3. You got your expansion pattern. You got your breakout up to 521.33 by close, maybe.
Poorly. And if you look at something like trend following strategies, something like the SocGen trend following index over the past 25 years, it's had strong returns, but what I think is coolest about it is it had its best years in those periods where equities did their worst. So 2022 was one of its best years, 2008 was one of its best years as well, because if you think about it, if you're doing trend following, you're positioning yourself in the direction of the trend of each major asset class. So if you think about a year like 2022, if you're positioned in the direction of the trend, that means you'd have to be short equities and bonds that year, and that would have done really nicely. If you think about a year like 2008, after Lehman went under, equities were doing terribly, commodities were doing terribly, so you'd have to be short equities and commodities. we'd have to be long Treasury bonds because they were really thriving with that big risk-off move. So the key is, how do you pair a good offensive strategy like equities with a good defensive strategy like trend following, so you can add the returns of the two strategies together, but really protect yourself on the downside, because bear markets are when defensive strategies should be doing their best.
I think about the 22 bear market where stocks are down, bonds are down. We had stocks, bonds highly correlated. Seems like the risk today still is that that returns in the inflation environment. Correct me if I'm wrong, it looks like you've got about 7% of the fund in treasury obligations right now or so. I'm just pulling that from the Bloomberg data. Is there any risk that if the bond stock correlation sell-off comes back, that the bond part of this acts as risk in a way that you don't want, that it won't work if bonds and stocks are selling off like they did in 22?
Well, if you look at how we're positioned right now, there's different elements of the portfolio. So there's like the securities we own, like you mentioned, which are T-bills, which are right on the front end of the curve, or short duration investment grade corporate bonds like Microsoft bonds, Apple bonds, things like that. But we're actually short bond futures further out on the curve. So if interest rates go up from here, that would actually be a net positive for us.
I see, okay, so you're simultaneously shorting the long end of the curve while you have some exposure to the short end. Am I understanding that right?
Yeah, you got it.
Okay. So basically, if you get a steepener of any form in the market, then it seems like the fund would work pretty well, as long as the credit side doesn't blow up.
That's right. Although we think we're in a bit different environment than we were back in 2022, because we are seeing that inflation. You know, a 2% target seems pretty unrealistic given the, $1.5 trillion deficits that the government's running. And I don't see either party, trying to shoot for something where they would shrink those deficits and go for austerity. So I think either way you're going to have those deficits. Either way you're probably going to see higher for longer. But that's not necessarily such a bad thing for stocks. Historically, stocks can do well in inflationary environments, at least those stocks that have really high margins. If you think about like a Visa or a MasterCard, the more inflation goes up, the better it is for a company like a Visa or MasterCard, because that goes straight to their bottom line.
Okay, fair enough. Really interesting, David. Thanks for the explanation, and I think helpful for those kind of looking for a one-stop shop to get it all in one fund. Thanks for the walkthrough.
I appreciate having me on. Thank you.
Absolutely. David Miller, CIO and co-founder of Catalyst Funds. Okay, really interesting approach that also has a little bond short built into it. Coming up, let's talk some tech and cloud when we come back with Five9 Chairman and CEO. Been a rough year for Five9, but on the 52-week, it's about flat. So we'll talk about what comes next and
there's
the
the
most
knife
recent earnings, which did also lead to some selling. Be right back.
or 60. The puts are AMC $4 put. I didn't take it, but it was at 23 cents.
Anytime.
Now it's at 26. I'm just watching it, paper trading. The AMC put $4 at 23 cents. Wednesday I go get to the doctor. I gotta see my eye, get my eyes checked. Back to 23.
Real-time example trades.
April 4th, we went back and celebrated the 10-year anniversary of our IPO and rang the bell at the NASDAQ. We had over 100 5-9ers that,
Son, you got stuck.
For those that have been along for the ride, I think many happy stock. Those that got in during COVID, of course, have been getting hit. Walk me through kind of where you guys are at. You had this boom during the pandemic and going into it. The market since then has treated you with a shorter leash. What's going on?
Yeah, the COVID was a huge tailwind for our business. Our growth rates went from, in the 20s to in the 40s during COVID. We provide cloud software for contact centers. These are the center point, the interaction point for, consumers to interact with very large brands. We count some of the largest brands in the world as core customers of Five9. And during COVID, their businesses were getting deluged with more online purchases and more digital commerce, and that led to a huge influx of traffic, both digital and voice, and other omni-channel traffic into these contact centers that, quite frankly, are running their businesses on Five9. They needed more software to do what they do, and our growth rates accelerated dramatically. Since then, we've come off the backside of the pandemic, and we've also gone into a tougher macro backdrop that has led to slower growth, but we've also put out there guidance for the latter half of this year as well as the long term that our growth will accelerate. We're very confident in that. We've got very, very significant backlog. In fact, we just announced our largest deal ever with a Fortune 50 financial institution, 50 million ARR, subscription revenue ARR, that is, once they fully ramp on our platform. So these are wonderful times, quite frankly, in our business, and we expect growth to accelerate here in the near future.
You've been posting growth in double digits, to your point.
Is that 5?
COVID, but consistent in
5, 9?
that growth. Does the growth from here, though, through acquisition get a bit more costly, or how do you find the balance of maintaining growth without spending behind it?
5 below,
Yeah, well,
not 5, 9.
all of our growth to date has been organic, not through acquisition, and it continues that way. And there's a huge organic growth opportunity. In fact, we've reported 20% growth in subscription revenue, which is the key metric for us. That is about 80% of our total revenue, and we expect that to accelerate organically, not through acquisition. We'll do technology tuck-ins as we've always done, but we have a tremendous runway. Our market opportunity in contact center and AI in particular, and then the broader CX is a massive market opportunity that is still only 25% cloud and still 75% on-premise. We make a livelihood of replacing those on-premise legacy solutions in the contact center, like Avaya and Cisco, to name a couple.
Okay, so you still see enough market share take and a big enough pie to grow. I asked about M&A, as there was a pretty big rumor a couple years ago that you guys were looking at Zoom. It seems like you've moved on from that. It seems like generally you've moved on from the idea of acquisition as a whole, fair to say.
Yeah, we have so much of an opportunity, Oliver, to create value for shareholders through growth in our business, right? As I said, it's early days. We think of this as we're probably in the second or third inning of a 9-inning ball game, if you will. Again, a massive TAM, massive opportunity for us to create value for shareholders. And again, I've been here 16 years. We celebrated that 10-year IPO anniversary. What I told our employees was, I can't wait for the next 10. It's going to be an exciting 10 years for us.
And Mike, right now, can you give us an idea for kind of the layman or the outsider? What does that marginal customer look like? Are you going, because there's a lot of competitors in the world of software and customer relationship management. Do you go to existing competitors, clients, and say, hey, look, we've got a better version of what you're getting elsewhere? You mentioned to some degree selling products to existing customers that you're building out. Where does that kind of next customer, what do they look like? What do they need?
Yeah, so as I think I mentioned, but I'll mention it again, 75% of the contact centers in the world are still running on these legacy on-premise contact center solutions that are long in the tooth. They're being end-of-lifed. And we're all consumers, right? And we want a great, personalized, effortless customer experience with that contact center of a brand that we're doing business with. And frankly, these legacy solutions cannot deliver that. In addition, they're not leveraging AI. We not only were a pioneer in cloud contact center software years ago, but now we're leading the charge in AI and automation.
Well, stock's down.
We made an acquisition about almost 4 years ago now. We bought the best in class IVA, intelligent virtual agent solution, and it was the cornerstone of our AI offerings. We've now added to that. We've got a portfolio of 8 AI and automation solutions. So we're upselling AI to our customers. We're winning new logos because they're coming off of these large legacy on-premise solutions that are delivering a horrible customer experience. We've all experienced that contact center. So you can understand the pain point. And these large brands, they are so focused on delivering a better customer experience, and they can finally do it with cloud and AI and data. And we're delivering all of those promises today.
Mike, do you have to develop in-house using new LLM technologies? Can you outsource that, or can you do you have the brain power and the people in-house to update these models on the stuff that's coming out every day? Like literally, we just saw OpenAI's latest ChatGPT today.
Got an inverted hammer.
And this makes those call centers even better. Can
You
you tell
see
me
the
how you
options
guys
on this.
develop that new tech?
Absolutely, Oliver. We took a strategy very early on, 4+ years ago, when it comes to AI strategy, and our strategy is very simple. We are engine agnostic. In other words, we're leveraging whatever latest and greatest LLM, OpenAI or Google or others come out with.
No options. Nobody buying options on it.
Into our platform. Think of us as the entire aircraft powered by an engine that might be the best, latest and greatest LLM.
Yeah, there's
We're not trying
nobody
to
buying
build
options.
LLMs. We're leaving that up to the hyperscalers, and quite frankly, they're in a massive race to be the leaders in that, and we'll leverage their innovation on the engine. But what we are doing is coming out with products like our what we just announced, Gen AI Studio, which is essentially a part of our platform that allows you to combine the best-in-class engine, whether that's, again, whatever LLM or even a small language model or a custom model, with contextual data. That's contextual data about the enterprise, the brand that we're selling our software to, and all of its products and solutions. But it's also contextual data about the end consumer in real time. And when we're able to combine the best engine with the right contextual data, real time, that delivers a personalized customer experience. And that's, in the end of the day, what all of these large brands are trying to deliver to you and I as consumers every day. Is it personalized, effortless, seamless interaction? And that's just hard to deliver on these legacy platforms, and we're out ahead of the pack in terms of being able to help these large brands do it. And that's why they're so 5.9.
All right, we'll continue to follow along because as consumers and customers, there is still a lot of low-hanging fruit, it seems, out there to modernize and improve those call centers, and to hear about leveraging with new technology is certainly exciting. Mike, thanks for your time, and let's be in touch.
Thank you, Oliver.
Appreciate that. Mike Berkland, Chairman and CEO at Five9. All right, little update there on how companies are going to be using new tech to fill their own customers' needs. It's been a busy day for the artificial intelligence trade. When we come back, we'll look at some options. Apple also making headlines on its own developments in leveraging of other tech. GameStop, of course, going nuts for its own typical reasons. Alex Coffey's got the options trades for us next.
No politics, no noise. From bell to bell and beyond. Available anytime, anywhere, on any device for free. Schwab Network.
My dad was a hard worker. He used to do side jobs, installing windows, charging something like $100 a window when other guys were charging $400 or $500. He just didn't want to do that. He was proud of the price he was charging. My dad instilled in me, always put the people before the money. Be proud of offering a good product at a fair price. I think he'd be extremely proud of me. Yeah.
Binge watch the market with Schwab Network. Tune in 24 hours a day, 7 days a week on schwabnetwork.com and on all of your favorite streaming services. Schwab Network available anytime, anywhere, on any device for free. Schwab Network.
Meme stock traders are sending GameStop on another wild rally today. And it's so wild, it was halted on volatility multiple times before noon. Thanks to Roaring Kitty, also known as Keith Gill, who sparked the massive 2021 GameStop rally. He returned for the first time in 3 years on Sunday, posting on Twitter a sketch of a video gamer leaning forward in his chair. It's a meme gamers use when things are getting serious. Then he followed the post with a YouTube video of himself talking about the bull case for meme stock from years ago. And there's no word on what's next, but meme traders will be waiting at the edge of their seats. For all things GameStop and other meme stocks, make sure to download
Yeah, I wish I had that kind of poll.
And tune in live at schwabnetwork.com.
All right, let's trade it. Let's look at GameStop, see what's happening in the options world. Alex Coffey, host Next Gen. Jones be here in studio. Madness returns, but so does the fun, Alex. And now we've got 0-day options and stuff, so people are having a great time with GameStop today.
Yeah, no 0 days in GameStop, but there's certainly short-dated weeklies. I saw a trader did something in size here, Oliver, using some of this spike in implied volatility perhaps to their benefit, but taking a pretty extraordinary risk in this shorter-term trade. So this trader goes out to next Friday. So I guess in meme stock world, this is actually a long-dated trade.
Yeah, next week, 1 week away.
But they sold 2,000 across several fills of the May 24th 21 strike put for a $2.36 credit. So $2.36 credit. Basically, they collected just under $500,000 in premium in exchange for the risk of potentially being a large shareholder of GameStop with a break-even at 1864. So they're not asking for necessarily any more upside, although more upside would benefit this trade perhaps. They want a collapse of implied volatility and this stock share to basically stay above 21. Perhaps if it were to start to decay a little bit from this 30 or so level, you actually may see implied volatility collapse, and so the stock could actually move lower. If enough volatility comes out of these, this still could be a profitable trade even though it's neutral to bullish, but there is a line in the sand, of course, at 21 where it becomes in the money, and then that break even factoring in the credit at 1864. Again, all of this expiring next week. Risk on the trade just over $3.7 million, but that essentially, we talk about this every time we look at cash secured puts on this particular segment. Their risk is really that they're going to be a large shareholder of 200,000 shares of GameStop if they're assigned, and so that's the notional for an 1864 purchase price of 200,000 shares of GameStop.
All right, and 200,000 shares of GameStop would be about, what, 3 times more expensive than they were 2 weeks ago? Because of the way the price moved up. I'm just kind of behind them.
Yeah, I would look at this in the case of a break even at 18 and some change. Right now the stock's at 30. Stock can almost lose half its value, but it's going to still be double the low of just a month ago. So, it goes to show that there's tremendous volatility in the next week expiration, 283% implied volatility.
That's what I'm about to say. Isn't it like Vol 300 right now or something?
458 in this week's expiration, but yeah, it's a few more days. It neutralizes down to 283. I mean, look, you go out to January 2026 in GameStop, and it's 100%. So the stakes are high. And right now, look, when someone starts telling you about the fundamentals of GameStop, if you're looking at a week, 2 weeks, that isn't factoring into the equation enough. Now, years down the line, different story. But for now, we've seen what can happen with these stocks, and that's what leads to this tremendous implied volatility.
So this is where you know, you kind of have to pick your poison in a way, which is, all right, do you really want to sell? Do you really want to sell options in this environment and then have to get stuck holding the bag if it moves your to your price, or do you want to just own an absurd amount of premium and risk the decay? So
yeah, and that's a tough thing, especially now that it's made the move. I will say that it's notable that this trader, at least from what we can see, did not sell the calls, and I think that makes sense. One, on the put side, you know the risk to zero. You know you have a defined outcome. But two, in a hard-to-borrow stock like GameStop, the assignment risk on short calls is immense. And so you get assigned that stock, and there's no shares to be able to borrow. You have to buy it back almost immediately. Or if somehow you were able to find shares, there's immense interest associated with those. So at some points, it's just too much risk for traders. So if you wanted to do the implied volatility, I understand why they went to the short put. And I understand why they didn't do the short put vertical, because that huge implied volatility works against those spreads. It makes those spreads really inexpensive as the differences between strikes are negligible. This allows for the trader to get that chunky premium, but it's not without risk, no doubt.
Yeah, okay. All right, really interesting. So there's definitely some skew in here too, right? That means it's riskier. Yeah, it's riskier to bet against the upside.
Basically. Yeah, just because, I mean, there is truly no definition to how high it can go. We've seen that.
Yeah, and if you think that there is, there's not. All right, $30 right now. Of course, a wide range of potential outcomes I'm sure the GameStop bulls are thinking of here, given that, where we've traded in the past. But this is still a massive move based on where we've been for the last 2 years. It's been 1, 2, 3. Can you believe it's been almost 4 years basically since the original thing? That's nuts. All right, that's a little discomforting to think about. Okay, let's talk some Apple. What's going on? Apple's been making some headlines on who it's going to work with for its iOS AI.
Yeah, I thought that the timing of that headline was interesting as it came out after everything was closed on Friday. That's pretty uncommon, but it set up for a good start to the week for the stock, and it held even despite the fact that OpenAI's own announcement wasn't enough to really keep Microsoft above water. You've seen sort of the jostling for position between Alphabet and Microsoft all day long, as the initial thought was that this would be bad for Alphabet, who was initially inked to be with Apple, or thought to be, and then it was going to be Microsoft and OpenAI. Nonetheless, it's been upside for Apple as they continue to throw things at the street and hope to get some excitement.
Right.
This trader is hoping for the same, bought 1,000 of the June 7th 190 calls for 212 debit. That would bring the break even to 192.12 on 212,000 in premium. But the key thing whenever you're buying calls, unlimited upside. So this is a trader who sees more days like today in the future for Apple.
All right. So bullish Apple, buying the 190 strike. Your last trade is bearish Meta, which is pretty soft today.
Yeah, and it seemed to got up to a pretty key technical level before turning around beginning today. With this pretty sizable down move, about $8 for Meta. This trader is going out to the June 28th quarterly expiration, and they bought 1,100 of the June 430, the June quarterly, the June 28th 435 put strike for a 510 debit. So this is a chunky out of the money put that they're buying. Perhaps a hedge against a large position. This is a stock that went really, really far against those who were long it post earnings. We know it's made a probably, let's call it 50% recovery, even including today's move a little bit lower. And this maybe was a trader who's seen enough and says, I'm going to lock in some of this, bounce back while I can. Or perhaps it's just a big speculative down bearish strategy. Nonetheless, it looks the same to the tape. It doesn't really matter what their thought process is.
Sure.
Just trying to get in their mind. But whenever I see big size, I think institutional. $561,000 in premium. Max profit was over $47 million, but again, this is if the stock were to go to zero. I think of it as, hey, this is someone who's locking in a sale price of $429.90, perhaps a hedge against the stock position.
Okay, all right. So Meta, the underperformer today in the world of mega cap, it did get dinged, the last week too. So Meta looking quite soft. And someone betting that there's maybe some more coming. Thanks, Alex, for the trades. And look at the GameStop action coming up. Going to do a little bit of work in the commodity world. Look at some of the other movers today. Gold down, Bitcoin up. That's an interesting trade-off to start this week. And then Tesla's hiring back the supercharger people, which is, like we said last week, it made no sense. They fired him and then got us all excited about the superchargers. So that's kind of bizarre. All right, coming up, more on the Schwab Network.
spotlight the biggest market trends on Trading 360. 11 a.m. Eastern, only on Schwab Network.
Ethan, how's my favorite client?
Great. I started using Schwab investing themes, so now I can easily invest in trends, like wearable tech.
Trends? All that research sounds exhausting.
Nope, Schwab's technology does the work. So if I spot an opportunity in robotics or pets, I can buy those stocks in a few clicks.
Can't be that easy.
It is with Schwab.
Schwab investing themes. 40 customizable themes, up to 25 stocks in just a few clicks.
Binge watch the market with the Schwab Network. Tune in 24 hours a day, 7 days a week at schwabnetwork.com and on all your favorite streaming services. Schwab Network, available anytime, anywhere, on any device, for free. Schwab Network.
Welcome back to Market on Close. We got Bitcoin up and gold down to start the week. Chris Robinson joins us, Managing Director of TJM Institutional Services. Gold was okay last week, kind of softening up here. Bitcoin's been weak. It's like really inverted the last kind of 10 days of trading here to start off this week, Chris. In the middle of a meme stock mania, do you think it's telling us anything?
I think it's more people trying to figure out what's going to happen with the U.S. dollar in the 10-year. The big level for Bitcoin is 66. I call it Route 66. Go back and look. We've been above 66,000 on a weekly basis. Only about 4 or 5 weeks out of the entire time we've been trading futures in Bitcoin. So that's a big level, a big fighting level. It's a nice level for everybody that has an opinion out there to line up and fight over. And as I'm just glancing over here right now, we're trading 63, 64 and change. So 66 is a big level. I still think that the gold long bet is kind of a little bit long in the tooth. Every day that market does not go through, 2,300, 2,400, does not start making new highs. Everybody out there that's long, that got recently long, is worried. What are they worried about? They're worried about us going back down and testing the level that we couldn't get through for 3.5 years, 4 years, that 2,100 level. So
Do you think gold needs that momentum follow through? Do you think it needs a punch to keep the trade going?
Yeah, I mean, a bull needs to be fed every day or every week. And so we'll see. I mean, there's a lot of people that are long gold right now. And, we'll see if they stay with that, if we reprice. And I think we're waiting for, really it's going to come down to what happens. It's very, very sensitive to what happens in the 10-year. I know that sounds odd, but it is. It's if we start having really a repricing in the 10-year based on what the Fed may or may not do, that's going to flip, the safety valve are going to be gold and probably Bitcoin, because so many people use it as a hedge, or at least a perceived hedge against inflation.
The trade here since inflation came back and created problems here last week has been basically to fade Bitcoin. Gold has been hanging in there.
Not lame.
The short bond trade got hit.
It's a beginning.
In the last couple weeks, but that also kind of seems like it's still lingering. We've seen treasuries fade throughout the day here after a strong start. Should we read into inflation this week? Tomorrow we're going to hear from Powell too.
I think people are going to wait and see what happens. You got to remember, a week ago, the last time he talked, it was hawkish, right? And then the next thing you know, we had that employment report, which got everybody thinking the other way. So it doesn't take much. We're probably going to bounce from report to report. And again, it depends on what your time frame is. There are going to be opportunities out there. The key is you just don't want to get married to a position and get run over, because I think that the level to watch in the 10-year remains. Are we going to trade between this 4, 6, and 5? If we ever start flirting with 5% again, that's going to be, the real issue. And so we'll see. And you can watch that. A simple way to look at it, pull up the 10-year futures. There you go. It must be psychic. And, that's the key metric to watch, So as yields go up, price goes down. And there is your hedge. There's your opportunity. But I really think that watching everything, that has been probably the biggest driver is, and what we've seen kind of move the market really since Christmas, right? We went from expecting 6 rate cuts to 2 rate cuts to possibly people talking about hikes now. So, and it all depends with every report number we get. So let's see what CPI is. And then also, it is the middle of the month. We're only a couple weeks away, the first Friday in every month. We will get another employment report, and then the market will reprice then. But lots of opportunity. You want movement. I remember a couple years ago, for a long, long time there, we weren't getting much movement. People were frustrated about that. Now you've got movement, so be careful. Be careful what you wish for.
All right, double-edged sword. Okay, thanks, Chris, for the rundown here. Connection between gold, Bitcoin, and rates coming up. We got a developing story with Renita Young. Taking a look at Tesla and that supercharging team. Renita, okay, I was wondering kind of last week when they talked about building out the charging, what about all the people they fired?
Well, there's been a little fire and hire over at Tesla. I feel like they're playing Russian roulette with their employees now, just like they did with prices. But we heard today news, Bloomberg sources are saying that the company is now bringing back some of the 500 people that they laid off during this recent round of layoffs, and it included the director of charging for North America and the senior director. Now, it's not really clear how many workers have been rehired, but just as you say, now Elon Musk is pledging, or he pledged last week, to spend well over $500 million on this, growing out the network of superchargers. And this came, of course, after he said that he would add chargers at a slower pace. Well, that was not met with a lot of positivity, and obviously people were kind of up in the air about it. But what people are wondering today, myself included, was this another erratic knee-jerk decision by Elon Musk, or was it some sort of super genius planned out decision to trick people into doing things, We won't know that right now. But what we do know is that the superchargers have been a stellar part of the company's business, and they've even convinced major car companies to have adapters and to plug into its network. Right now, Tesla has about more than 6,200 stations, supercharger stations, and somewhere around 57,000 connectors globally. Arguably the largest in some categories. But has Elon Musk done this before? Absolutely. Late 2022, shortly after he laid off about half of the staff, he asked dozens to return. And back in 2019, he said Tesla was going to close most of its stores and shift sales online, but the company couldn't get out of its leases. For many of the companies, landlords refused to let Tesla out of its leases. And shortly after that, they raised prices. So after this, are we going to see more prices raised for Tesla cars?
Yeah, maybe some implications, some reading between the lines. Kind of based on when they've done this before. All right, strange management.
Strange. You can never guess with
the style for sure. But okay, I guess clear them out and then figure out who you need. Bring him back. Fascinating. And thanks for the update. All right, Tesla bringing back some of the supercharger employees. When we come back, let's get a big picture look at the week ahead. Kira Michelle Gibley and Kathy Jones join me for our Schwab panel. We got about 8 minutes left until the bell. S&P slipped back red.
Trading at Schwab is now powered by Ameritrade, unlocking the power of Thinkorswim, the award-winning trading platforms. Bring your trades into focus on Thinkorswim Desktop with robust charting and analysis tools, including over 400 technical studies. Tailor the platforms to your unique needs with nearly endless customization, and track market trends with up-to-the-minute news and insights. Trade brilliantly with Schwab.
I remember when I first started flying and we would experience turbulence, I would watch the flight attendants. If they're not nervous, then I'm not going to be nervous. Financially, I'm the flight attendant in that situation. The relief that comes over people once they know they've got a guide to help them through, I definitely feel privileged to be in that position.
The only person that matters in this deal right now that has any relevance to it is the Supreme Leader of China. Only he can decide what he's going to do in the TikTok situation. The management of TikTok are irrelevant. They don't have any say in what's going to happen. If all you're getting is 170 million name mailing list and a brand called TikTok, that's not worth much. And so I wouldn't pay a lot for that. But if I can get all the content that's been generated, some of the algorithm, I don't know how much or if any, and then it starts to get interesting. But you still have the same problem. You've got to rewrite the algorithm from scratch, and you also have to keep the 7 million businesses that are there. They're basically spending the 9, 10, 11 billion a year. You got to keep them on board and engaged, and that's something I can do from a unique perspective.
All right, the shark trying to get his hands on a really controversial product. Fun chat, Kevin O'Leary. Don't miss it all this week on Market Overtime, 4:30 p.m. and 8 p.m. Eastern Time here on the Schwab Network. Sitting down with our own Nicole Petalides. Right now we got some time until the bell. We've got Kathy Jones and Michelle Gibley joining me this afternoon to get us ready for this week. I think probably we'll start with bonds, given that it's Jerome Powell and it's inflation this week. Kathy, tell me what you're looking for. What's your expectation for this week?
Yeah, it's a big week, and you can tell it was pretty quiet today and last Friday, just waiting for the numbers to come out. So we've got PPI, CPI, retail sales. Powell's speech, I don't think will probably tell us anything we haven't already heard from Powell, so that's probably less important than CPI, which is number one, and then retail sales, which is number two. And the hope is that the CPI will edge down. The rate of increase will edge down a little bit. We'll get a favorable number.
Well, that's a good question. I don't know if they're going to split or not.
The market's a little vulnerable to a correction here. And similarly with retail sales, we were surprised by a big number last month. It's expected to be a little bit lower this time around, but we'll have to wait and see.
Okay. As we look for Jerome Powell around these data, his counterparts at the other central banks, we've already had pretty fresh data and commentary from Michelle, but what's on the calendar when we look abroad this week?
Yeah, I would say in terms of Europe, we have a few data points, but probably the bigger event on the international front is going to be the Chinese economic data. We had some data over the weekend, and we'll get more later this week. And despite China's economy, muddling through, Chinese stocks are outperforming the rest of the world year to date. And so the better data that we've had is export data, and also over the weekend, inflation was the third straight month of inflation versus deflation. But we also saw a slowdown in new credit growth over the weekend. And then, the economy is basically favoring manufacturing over consumer spending. And we'll likely see that reinforced with the data later this week. But in general, the data is coming in a little less bad, and expectations are low. For stocks, better or worse.
That volume on AMC is a lot.
And the valuation of the MSCI China index is still below its 20-year average. It's trading right around 10 times next 12 months expected earnings.
Okay. And that case for the more appealing valuations has been kind of the backbone of our discussion on the international side. Seems like the market's kind of woken up. China on another bounce today, up 2%. The complications here, it seems, Kathy, are basically about if the Fed has maneuverability to cut, any time in the near future. How much of a determining role will the inflation prints this week play in that? Do you think these are key in terms of their timing from what we've seen the last quarter versus what we've heard from Jerome and team?
Yeah, I think the inflation numbers are very important. Likely the Fed will need 3, maybe even 4 months worth of good inflation numbers to convince them that we're on the way to that 2% target. Or alternatively, a much weaker labor market than we've seen. Again, we've seen some softening, but not a real decline. I mean, unemployment rate is still below 4%. But those are the two dynamics that have to be watched, because those are the key indicators. You need a big decline in the labor market and or just a steady signal from the inflation data that things are slowing down. But that pushes the timing of a Fed rate hike, likely into the third or fourth quarter.
Okay.
I was saying rate cut. Excuse me,
cuts.
Rate cut.
Well, hey, you never know. It's going to push something into the third or fourth quarter. When we look at the data this week, to Kathy's point, we saw some softening in our own data.
One more minute left.
The world seems like they're already kind of pricing in some of these cuts. So, Michelle, one of the things we talked about last week I thought was interesting was how maybe a little spurt and improvement for data in Europe is kind of already factoring in some of these changes. I mean, when you're one step ahead, you should get to boost your economy earlier, right?
Yeah, we've seen some green shoots in Europe. The recessions in both the Eurozone and the UK ended. Both economies posted.
All right, mark it over. I'm going to go for a walk. And we'll catch y'all later. Kind of just sat around today and watched and traded the two runners that were running, AMC and GME and SPY, and then got stuck in the SPX and had to take a loss on it. So I'll catch y'all later. We'll see what tomorrow brings.